Back. Oh, nice. Thank you, John. We're live. Paul, it's Wednesday. Big Fed day. Holy smokes. July meeting. Month end is tomorrow. Also have GDP numbers today. Also have non-farm on Friday. Are you ready?
Sure. Let's do it.
Can you tell that I've drank half a cup of coffee already, and I usually don't do that?
I can tell you came in really hot today. It was unexpected. But yeah, we're excited.
I got to sleep I was in bed pre-7 p.m. print. Girlfriend thought that was weird.
It's early.
It was pretty early. Tired. Needed to get ready for today, for this 3-day stretch.
Yeah.
It's going to be, hopefully, a wild adventure. I was talking to Glenn yesterday, and we were looking at the calendar of events. And actually, if the boys out there wouldn't mind bringing up, and ladies, sorry, they're ladies as well, bringing up the calendar just so we have it in the backdrop to show what the heck's going on. ADP employment change, not normally, not your father's most important economic calendar item, but right now, very important given how important employment has been in the U.S. the last handful of months. GDP number right afterwards here this morning. This will be in 45 minutes and then in an hour. So that's 8:30 Eastern, 7:30 Central. We're in Chicago. It's showing the Chicago. Bank of Canada right afterwards. That should also be pretty interesting, as we'll get into the Canadian dollar in just a second, but Canadian dollar starting to get hit a little bit after a pretty strong run out of CAD. FOMC, obviously, this afternoon. That's going to be 1 o'clock Central, 2 Eastern, and you can adjust for wherever the heck you are existing here in the world. Bank of Japan tonight, Paul. Yeah. Holy smokes. We haven't even gotten out of Wednesday. And then you look at the fact that tomorrow, I don't think we have too much U.S. data. We got personal income. Oh, my gosh, we do have the inflation. I forgot about inflation tomorrow. And, of course, the initial jobless claims. That'll be the same time as inflation. That's 7:30 Central, 8:30 Eastern tomorrow morning. And then finally, non-farm payrolls on Friday. That's like 6-7 major events. And I, ever the hipster, said to Glenn yesterday that it seems like if anything is going to be the least relevant, it might be the Fed meeting this afternoon. What do you think?
Potentially.
Okay.
Also potentially not. We don't know what Jay Powell's going to say.
Of course not.
Yeah, we have no idea.
But what's your hot take?
The hot take is that he somehow sprinkles out a resignation. That would be the hot take.
Well, that would quickly become the biggest of the major events we
Correct.
have.
Yeah.
If he sprinkled in a little bit of, and also I'm resigning.
Yeah, that would be interesting. You would probably see it right away on the initial news because they usually announce this kind of written speech right away. So if it's in that, you would know pretty quickly. I have no idea what it would do to markets. It would be very interesting thing to kind of digest.
I think it would be very bearish dollar. I think it would send equities and everything else into a lot of back and forth, a lot of indecisiveness. Yeah, I have no clue, but yeah, I would imagine a Powell resignation that's probably trading right now at like 20-1 odds, or maybe more. What do you think would be the market on a Powell resignation today?
We'd probably look it up, but 20 to 1 seems low. I mean, I'm baking some juice. Yeah, 21 probably was right. Yeah.
Like trading, yeah, like on a prediction market for like, do you think it would be for more or less than essentially 5 pennies? I think that would be the equivalent of 20 to 1, right? Mm-hmm. Probably right around there.
Yeah, right around there.
Anyways, I don't know if that will happen, but I do know that these data points have just been very, very interesting the last month or two. We've just gotten so much back and forth on them. Even last month, we had the employment data leading up to non-farm was negative, and then the employment data that came from non-farm. And of course, if you don't know the first Friday of the month, the U.S. reports its employment data, and that is let me pull up that data point. That is tomorrow, Thursday, July 31st, and then of course this is August 1st, the first Friday of August, and so you'll get the U.S. Unemployment rate, and you'll get the change in jobs. That's the non-farm payrolls number. But leading up to that number, Paul, we get like 3 or 4 kind of like lower tier. I don't. It's like the opening acts for the non-farm payrolls, and they've been zigging and zagging. Usually, it's supposed to be like, oh, like if the ADP employment data and the JOLTS data, if all this data is like positive, then the non-farm will probably be positive. But last month we saw like negative, and then a really positive non-farm number. And so you saw some really whippy moves on a week like this. With the employment data expected to be a little bit higher of an unemployment rate and a little bit lower, but still positive change in unemployment, we were staring at exactly this last month, Paul. And when we were staring at this, there was a greater chance of a potential rate cut for today's meeting. Now there's pretty much no chance of a rate cut for today's meeting. And we're looking at the same setup where there's a good chance of a rate cut in September, the next meeting. This is all to say, if this employment data comes in weak, then maybe there's a case for a rate cut, ease a little bit of the economic tension in the U.S. But of course, as you and I are very aware of, the first 6, now 7 months of the year haven't got any rate cuts because there's not as much tension in the U.S. economy as we've thought. Yeah. What say you around all this data and, the opportunity for a rate cut in September? Because that's really what this week is about. It's not about what the heck is going to be the rate decision today. It's likely going to be no change at all. It's like 97% chance. I'll bring it up while you talk. But we're all looking at September, right?
Yeah, we're all looking at September. But I'll point to the job number yesterday, which was JOLTS, which is job openings, in kind of layman terms. JOLTS have been steadily declining, so job openings have been steadily declining for the better part of the last year. You can actually go and click into this, and you'll see these job openings were almost at 1 million job openings a year ago, and now it has started to shrink. So that typically is not necessarily a great sign for the job market, but it just means there's less jobs open out there. Could also mean that people have filled, but we haven't really seen the unemployment number actually tick down enough where that it would suggest that. So that's kind of an interesting kind of the underneath the surface of the jobs numbers. It's really hard to say. The job market really hasn't made a whole lot of sense. We've kind of been expecting it to turn over at some point, and it hasn't really turned over. I think we've been talking about the jobs market waiting for a turnover for the last couple of years. So it will be interesting to see how this data comes out. Interesting to see what Jay Powell says about kind of the job market, but inflation's still sticky too. So it's interesting.
You highlight the key kind of crux of this cut, don't cut debate, which is everyone has been kind of looking at the U.S. economy and expecting it, and it has retracted in certain ways. I mean, we're going to get a GDP number today. The last print was negative. And so you've seen definitely a contraction from how hot we came out of the pandemic gates in 2021 and 2022, and even into 23 and parts of 24, because we've been talking about this impending slowdown now for years, literally. Because we did get some cuts last year because we've started to see some of these signs. And you highlight, the JOLTS part of it, showing a little bit of this, like, okay, well, they're not as many job openings. And you even talk to whoever, friends, family, whoever, it does feel like there's less opportunity in the job market. But then you do look at the fact that non-farm hasn't really slipped below 100K, and they keep expecting to get some really bad prints like this week. And yeah, if we get a sub 110K print this week, I think that'll be a pretty big red flag for all of those doves out there, all of the interest rate bears or the bond bulls, so to speak. That like, yeah, okay, we finally need to get our first cut of 2025 because we're now really starting to, it's not just the JOLTS number, it's JOLTS and it's GDP and it's non-farm and it's all these things. But yeah, the the elephant in the room, or like the weird cousin or whatever you want to say, is this inflation data, which I believe is tomorrow. I totally forgot about it.
Yeah.
Where are we? PCE. Which just hasn't dropped. And you look at it from, I mean, you can look at it a couple of different ways. I'll look at the year over year. This is a number that the Fed has wanted to get down to 2%. And you might say, well, Frank and Paul, you know, like we got 2.3%, they're expecting 2.5%. Is it really got to be 2%? And the answer is no, but there is some fear from the Fed that it's just like it's sticky above 2%. It's not like, oh, we got a 1.8 print and then we got a 2.1. It's like we got down close to 2, and then we've seen some 2.5, and they're expecting another 2.5% print. And so it's just hard to make this case for lower rates from the Fed right now, even though the president really wants them. Because you have these certain economic factors that aren't necessarily pointing to like severe economic contraction in the U.S. And then you have the, like I say, the weird cousin in the room, which is this inflation that hasn't gotten down to 2%.
Yeah. And historically, we think of rate cuts as typically ahead of a recession, some sort of real actual economic slowdown. And data doesn't necessarily say that yet. We've had a little bit less uncertainty now. We've had some trade deals come through. Not smart enough to know if they're good trade deals or bad trade deals.
No clue.
No idea, but the dollar's been loving it. We have seen some dollar strength over the last week.
Look at that, Paul, with the segue, because that's all your stuff. Today, of course, you've got GDP, you've got some employment data that's actually going to come out and very soon, and then you have GDP, and then you have the Fed. You also, if you all the Forex heads out there, if you care about it, you've got Bank of Canada sometime in between there and Bank of Japan. And we'll cover the other stuff the rest of the week. But yeah, let's segue into some of the markets because I also want to get your eyes on a study real quick. A little bit of calm before the storm, but holy smokes, you're just continuing to see this dollar upside. I want to start with Aussie, but just a highlight here. You've got Euro continuing lower, getting scarily close. I mean, we're a 1 hour candle away from 115 if this continues. Dollar, Swiss franc continuing to see some upside, not huge. Love to see dollar CAD getting close to 138. That has been a tough trade for a number of people. But I want to start with this Aussie, because, man, they are pounding it going into today's U.S. session, Paul. What the heck is going on, you know?
It's a tough one. I mean, it's been pretty much dollar rallying across the board. Did have a tsunami come through last night. I don't know if that's going to have any impact. It's definitely going to have some sort of impact come through. There's an earthquake just off the far east side of Russia, which was the biggest earthquake since 2011.
Holy smokes!
Yeah, this all happened overnight.
This is the craziest week of all time.
Yeah, I haven't seen any of the damage reports yet, but I have seen there were some pretty big waves, obviously.
Yeah, I hope everybody's okay.
Yeah, so that does, obviously, the human aspect is very important to highlight, but there's also big economic impacts of that, and what that causes. Is it a short-term supply shock? I won't use the word transitory because I think that doesn't make any sense, but I'll digress. But yeah, it's been an interesting one. We haven't really had an RBA rate decision this week. It's kind of just been dollar buying. Not
a lot of fundamentals that I can find. And even yesterday, I was like, oh, man, like after we get off the show, I'll check on Chinese equities or anything surrounding it. And it's like, Not really much there. Maybe there's an opportunity. Anybody out there who likes to, go across asset class for pairs trading, maybe there's something to look at that divergence. But pretty wild move in here. Obviously, Euro getting a lot of the headlines, but for this Aussie market to get up above 66, looks like it might finally take. I mean, we've seen this so many times the last couple of months. Looks like it might finally take the lead in some of this currency bull action we've seen since April, and now it's of course turned hard, and it's actually one of the weakest. Now well below 65 cents, and we'll see how close it gets to these recent lows of 64 cents the last couple of months of action. Really quick, just a couple other things to highlight. Like I said, the euro continuing to see some downside. We are right back here at those lows that we saw yesterday morning. Everybody's staring at 115. Which will be really interesting if we get down there. Obviously, that is the low going back to this mess here, end of June. And the last time we were below 115 was really on the way up in euros. So definitely you look at this price action, Paul, and every step of the way that it looks like they might try to bounce this thing, 116.50 here, no bounce. 116 even, there's some junk in here. Oh, maybe we'll pick up here. No, sir. Right down to 115.50, trying to bounce a couple of times yesterday, and we are right back down there. So feeling quite weak for this euro currency. Anything, say you, before we get into some slides?
Yeah, you do have to remember, and I think we talked about it a couple weeks ago, there was probably the net short kind of institutional players were net short the dollar at one of the highest levels going into this kind of past week. It does look like they were on the wrong side of it, and we're basically given the good old tap on the shoulder to get out of that trade, which is where you see some of this kind of extended moves, and it doesn't look like it bounced. So that's kind of the underlying market dynamics. It has moved 250 points in 2 days, which is quite significant. So we'll see. It's definitely, almost, you could argue it's at extremes, but relatively it's not.
Last thing, I did forget to mention this yesterday, but I do want to mention it just for anybody out there. Take a look at the non-dollar popular pairs in here, just because we brought this up last week, and I think even a notification went out to the tastylive peeps that this euro sterling trade got up to highs. This is the hourly chart. Let me take a look at the daily. We got up to new highs for the last year plus. And man, they took this market down with a vengeance this week. This is Sunday night, and then it has been a bloodbath in this euro sterling pair. So obviously, we've seen, Paul just said, euro's down 250 points against the dollar. So there's plenty of action in there. But man, take a look at some of these non-dollar crosses, because they've been seeing some wonky extremes and some pretty big reversals as well. But let's get into the slides. It's going to be a lightning round of a fun study to show Paul. If my friends out in Les Productions can get us to the other screen, I can bring up the slides. Anybody out there?
So we do it live, right?
There we go. There's my friends. All right. Let's manage some profit expectations, Paul. We have been on a tear of Forex research, looking at what times you should maybe play a contrarian play a trend play. Of course, we're looking at historical data, and that is not indicative of the future. But it is a wealth of information that can, like I was talking to Glenn yesterday, it's never like, oh, we did all this research, and so now, like, here's the exact numbers that you need to look for entering a trade, for exiting a trade. And it's like, oh, this, in our research, like, it showed that this market has had the most mean reversion historically. So, like, that's the market that everyone should pile into. Of course not. That's not why we do these things. We do these things because you out there have your own trade ideas. And these are kind of guidelines of, like, yeah, if you have a good trade going, maybe try to take 40 points out of it. And if you're sitting there being like, I want 100 points, it's like, we're going to let you know how realistic that is. It's some guidelines, right?
Yeah.
So let's get into it. Why are we looking at long dollar positions, Paul? Because the dollar has been pretty beat up. We've seen decade-long lows in the dollar against Swiss franc. We've seen multi-month, in some cases multi-year lows in the dollar against a handful of markets, euro. Not so much those commodity currencies, but a lot of that euro, Swiss franc, pound. It's been pretty rough. And so a lot of people may be thinking, especially the last 48, 72 hours, whatever you want to say, hey, this dollar's seen a little bit of a comeback here. Maybe it's a blip on the way to more dollar lows. What should I be doing? Where should I be managing my trades here? It might be more important than your entry at the end of the day.
Yeah. Yeah. And it's always comes down to your targets is how I've always liked to say it. You'll hear people talk about actually using a hard stop loss, and there's people that use mental stop losses, people use that mental kind of take profit or limits. It's all kind of up to you. But I'm interested to see what Glenn has done for us. I kind of keep in mind, I pay attention to price action, and if I start to see the price action flip, that's my strategy. But again, it's all dependent on your person, all dependent on your risk tolerance too.
Sure. Yeah. And yeah, today's study, looking at 2022 to present, a handful of popular USD pairs. In there, you got your euro, pound, yen, Aussie, CAD, Swiss franc, and Kiwi. Simulated the trade performance of long US dollar positions. So that'd be short euro dollar, short pound, long dollar yen, short Aussie, long dollar CAD, and so on. And entered at the daily close price. So no kind of crazy stuff on where we're entering. You can look at past studies for stuff on like, should we enter after this many down days or this big of a down day in the dollar or whatever. And looked at a 10-day maximum time period and essentially just looked at, okay, well, what are the success rates in taking symmetric take profit and stop loss? And of course, you could do this in the platform is set, like I want, 10 points or 20 points or 30 points of take profit. You can also do the same thing on the loss side. A lot of people will do it symmetrically because then, of course, you're looking for just a win rate that's north of 50% to theoretically engineer a net profitable trade. If every time I'm taking 10 points of profit or loss and I'm winning 55% of the time, theoretically, you would have a profitable strategy. Again, not indicative of future results, and a lot of this stuff is theory meant to guide you on your journey. Here we are, Paul. Here's all the pairs in your rows, and on the columns, you have the profit and loss targets at 20 points, 30 points, 40 points, 50 points, all the way to 100, which, of course, 100 for like a euro dollar market or a pound dollar market or an Australian dollar USD market is equivalent to a penny. Is that right? Yeah. Yeah, I got that right. Mm-hmm. In terms of the exchange rate. That doesn't really matter, but just a fun little thing to toss at you to maybe clicks with you. Are you surprised by how much green is on the board? Are you surprised by how much white is on the board and where it's all distributed?
I'm not surprised by dollar yen at all. Because we started, we did the study from 2022, so you just look at that daily chart and you'll be like, okay, yes, that makes sense why long dollar positions have generally worked for dollar yen. Obviously, the yen's weakened against the dollar over the last 3-4 years. It is interesting how high some of the win percentages are as far as the 20-point range. That is interesting because for me, you're putting a very tight kind of collar on your trade, mm-hmm. Where if it goes 20 points against you, you're out. 20 points in your favor, you're out. It is surprising how high those win rates are. That would be kind of my area.
Cool. And yeah, my thing with these results is, again, this isn't meant to say like, oh man, I just got to get long dollar yen and just take 20 or 30 points out of it every time. And it's like, it's always going to win. Absolutely not what we're saying. But yeah, it is interesting to see that in this area of taking, 20, 30, 40 points, you're seeing a lot of over 50% percentages. For me, the real takeaway is outside of 50 points, you're not seeing a lot of 50 plus win rates. Now, of course, if you're taking big winners and small losers, then a 40% success rate can maybe work for you. But if you're trying to do a high probability strategy where you're winning, 55, 60, 65, of course, I hope everybody wins all the time. Not the way it usually goes. Then you're looking for more 20, 30, 40, 50 points. And of course, the days in the trade say essentially the same thing, Paul. Here, we're looking at how many days it would take to get to these profits. And again, I don't think it's any coincidence that you're seeing a lot of one-handle prints in the 20 to 50 range. And then when you get outside of 50, you're getting pretty quickly to 3s and 4s and even 5s, telling me that, like, if I'm looking for high probability plays, I'm looking to manage my exposure. I don't want to have, big volatility in my P&L, then I'm looking for 20, 30, 40, 50 point profit loss metrics. And I'm looking for, if my trade is on for outside of 2.5 days, it looks like, it starts to get pretty volatile.
Yeah, it does speak to that. If these markets are against you more than 50 points, it could at that point be a little late to get out, but you maybe should have managed that position. Maybe you should be thinking about managing that position right around the 50 level at the worst, right? But it all depends really on your setup. This is a good study by Glenn. It gives you we've talked about mechanics a bunch, but this kind of gives you the idea of where to start thinking on how to set your profit target, how to set your stop loss, and kind of what levels to be thinking about.
100%. And with that, here are your takeaways. Dollars exhibited persistent positive drift across all major pairs over the last 3 years. So again, you can't take this as being like, oh, the dollar's just always going to win. There are different markets all the time, and we like to be kind of agnostic to the side. When the dollar starts getting, punished, we'll take the other side of the trades, of course, whatever works for you. 20, 30 pip targets have been the most consistent with 60% win rates. Dollar yen demonstrates exceptional trend persistence, maintaining above 50% win rates, even to the 100 pip targets. Of course, we're in a little bit of a crazy dollar yen trade the last few years. But really, again, the takeaway for me is 20, 30, 40, 50 pips seems like a decent place where my strategy can still be successful. And also, the time in the trade tells you that, like, once you're getting outside of 2 days, your win rates seem to drop off. And when this trade is going to be able to be managed for a loss or a profit, quickly becomes 4 or 5 days. So a couple of interesting foundational pieces for you. With that, we will toss it over to Tom, Tony, and Vanetta coming up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. It doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost
Good morning. Welcome to Trade Live with IG with myself, the weatherman, and Chris Beecham.
You brought the weather back with you. Clearly, it's been awful the last 2 days.
Oh God! I watched you and Aaron on Monday morning, and I'm like, guys, come on! It's not a weather forecast.
They said he was shouting in my ear. Talk about the weather.
To be fair, yes, there it is. That is the end of July in London. Beautiful. It's not grey skies. It's just pollution, people. Don't worry. All you guys up in Sheffield and Wales, you lucky beggars, you.
Came back full of diplomacy then as well, clearly.
Oh, yes. Right. What have we got coming up on today's show, Wednesday the 30th of July? Well, it's the busiest 3 days in financial history. So, Chris Beecham's going to run that through everything we've got coming up in the next 72 hours until 8:15 this morning. Then a good friend of mine, Tom Price, is coming in, ex-head of commodities research at Macquarie. And if you're head of commodity research at the biggest Australian bank, then you are head of commodity world.
Yeah.
So yeah, Tom Price is going to be joining me for 20 minutes, giving some of his fantastic opinions. Made me a lot of money in Macquarie, so very good to have him in. Charting crypto. Now, who's doing charting crypto today?
Let me think, who's doing that? Oh, wait, it's me again. Hopefully more success than last week because we think we've solved the Wi-Fi problems. So.
Oh, yes, of course there was, wasn't there? Then at 9 a.m, I'll be back on your screens telling you about all the stocks that should be going down that are too high. And then at 10 past 9...
They don't go down, do they? Very funny.
10 past 9, we've got the second episode of our latest and greatest podcast, The Art of Investing. So, we are at the beginning of the end. I mean, sorry, of the new world.
Of everything. It's one of those weeks where everything happens, and then you've got probably 4 weeks in August where nothing will happen.
But doesn't it excite you?
Yeah, it is. It's great fun but you're trying to keep track of this, and you just think there should be a limit on the number of companies that report every day certainly in the FTSE, because it's one of those days where everyone decides to have a trading update or earnings report, and it's just.
We've got Rio Tinto, GlaxoSmithKline, Glencore, HSBC,
BAE, Taylor Wimpey, International Personal Finance. There's a bid for that as well. I saw.
Right.
So it is all kicking off all week.
Of the next 72 hours, what, as a bull, what scares you the most?
What scares me? Oh.
Yeah. What's the most dangerous figure?
I think it's going to be the earnings. So I think with the Fed, you'll get probably a bit of they'll get a couple of dissenters angling for the top job, basically, that will call for a cut. So that should be all right, I think. I think it's just the possibility that people just sort of aren't happy enough with the Apple earnings and the Amazon earnings and all that together. Just people, I think that's where maybe payrolls a little bit as well. So
I think Apple's already kind of touted to be weak.
Yeah.
So they've maybe got the lowest bar.
Yeah, and most of earnings season has gone, again, people have stepped over the surprisingly low bar that has been set. So, that's just how it works. So that may be payrolls if there's a bit of a jitter. Because the market seems particularly sensitive at the moment to worries about job growth.
As the biggest bull in town, what's your trump card there? What do you think is going to send this market higher?
Well, never short a quiet market, and this is still, volatility is so low that you've got, the risk is, well, actually, the one thing that does bother me is if you look at August in second terms of Republican presidents, there's never been a positive one. It's not a big data set, so I wouldn't hang your hat on it, but it's just interesting to note. And there's that kind of, is there just a bit of exhaustion creeping in?
It certainly felt like it the last 2 days. We've
You're just pushing on a string, aren't you?
Yeah.
You're picking above 45,000, and it's just, but what else is new?
Or in new money, 6,400.
Yeah, exactly. Yes, if you insist on following the S&P, but Dow's much more fun, more exciting.
Funky Gibbon, exactly. That is the question of the day. Is the market looking a bit shaky? And maybe not shaky. It's just found it really hard to go higher the last 48 hours. But we are coming into the busiest 3 days in history. So,
but be careful, because every time you and I go on here and tout, this is very important, nothing ever happens, and it's always something else that happens. So usually when the market's looking for something, it doesn't transpire. Markets don't play ball in that way, really, do they? I mean, you might get a shocker over the next 48 hours from somebody.
And as traders, because this show is made by traders for traders, watch for the things that everybody else isn't watching the next 72 hours, because that's your opportunity.
Yeah.
Is the little profit warning that gets sneaked out, or the good UBS numbers because they did the biggest corporate.
Where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knucklehead. Happy Wednesday to just you, Sosnoff. I know, are you done crying? We were a little delayed today because you were crying because Vanetta's not on the show. And you were like, what are we going to do? What are we going to do for the, what, you all right now? You better?
Yeah, I'm better.
You dried your tears. You came back from the washroom. Everything's fine.
I'm all good.
Good, good, good. No Vanetta today. She's out. Well, she admitted, yeah, she's getting a colonoscopy, Sosnoff. Have you ever had one?
Multiple ones.
Multiple. Oh, you liked it so much you did it twice. I like it. I like it. Very nice. Very nice. Good job out of you, my friend. Very nice. Very nice indeed. I have also. You should get one. Everybody out there should get one. Get checked out. Right?
Yeah, so no Vanetta today. She'll be back tomorrow. And sorry for the delay. We had a couple of technical issues. Our production team was out too late last night. You know.
It's bad enough I threw Vanetta under the bus. So you got to do the
Oh, yeah,
team.
they had to be thrown on the bus. 10-minute delay. Yeah, you got thrown on the bus. Too much, whatever.
10-minute major. So we got a 10-minute
major. Watching the Cubs game too late, whatever it was,
Got put in the penalty box. That is correct.
Little disappointing losing 2 in a row to Milwaukee. That's painful as a Cubs fan, but I had to turn the game off last night. I had to turn the game off.
Nah,
Andrew Vaughn hits a
They really could have used you out there, Sadnov. They really could have used your arm out there. They really could have.
They could have. Andrew Vaughn hits $1.25 when he's on the Sox for like 3 years. The kid can't hit the ball. Kid can't hit the ball out of guaranteed rate field. In Milwaukee, he's an all-star. I mean, he can't keep the ball in the park. Unbelievable. He literally couldn't play. He was in $1.25 on the South Side. Take him 90 miles north, and the kid's like, he's a superstar.
He's a superstar, right?
Yeah.
Yeah.
I mean, that was unbelievable. Anyway,
everything was like 9-3 or something each game, 9-3, 8-3, some crap like that.
Whatever.
I
turned it off. I couldn't watch. After the Grand Slam, I was done.
Yeah.
I'm not wasting my life watching 3.5-hour baseball games when the Cubs are losing. But
evidently you are.
Evidently I was, yes. I won't be tonight, and I won't be tomorrow, and I won't be Friday.
You got big plans? Do tell.
Big plans. Big plans. No, I have the plans, though. And
did you ever get your flowers in, by the way? I'm saying no.
No, because I didn't have time, but I just got I'm
too busy to plant 8 flowers. It'll take about a total of about 10 minutes, tops.
Well, I put 150 pounds of dirt in already, and I still need to put more.
In planters.
You
must have planters. Got it.
So I'll stop by.
Did you just out of curiosity?
Yeah.
Like maybe you don't know this, but most men do. So like you put objects in the bottom of the planter. Not only does it help with drainage and weight and everything else like that, it actually saves on soil because you really only need a couple of inches of soil. So did you think about putting anything light in the bottom, the milk cartons and stuff like that? Maybe some cardboard, help with the weeds, anything like that?
No.
Probably not, right?
No.
That was probably too intelligent for you, right? You'd rather carry 300 pounds of dirt and put it in there.
Because I'm a man.
Good.
Not going to put a milk carton in there. No.
There's a difference between you and I. See, I'm street smart. I'm worldly. I'm wise. You're rich.
Yeah, I did it myself. Okay, nobody else. I don't need any help. Got it myself.
I know. This is like so you can walk by and go, oh, I stuck 400 pounds of dirt in those planters. I'm like, really? Did you think about sticking anything on the bottom that would kind of take up space and save on weight, help with drainage?
No, I want them to be heavy so nobody will steal them.
Oh man.
Anyway, I got this under control.
You sure do, my friend. You sure do.
Yeah,
you sure do. You're good at this.
Keep your gardening tips to your little suburban, suburban vegetable garden, okay? And I'll take care of the stuff here in the city.
You'll just be the regular vegetable. That's all.
I'll take care of the stuff here in the city. Where real people plant planters.
Yeah. Real smart SMRT people do it. Yep. Mm-hmm.
Yeah. So I'll be done by Saturday morning. I'll be wrapping up my planter business.
So it's been a week job, a whole WEEK job, because it's not weak because you put 150 pounds of soil in there. I hope you use potting soil too, but whatever.
Yeah, I got a little more to do. I'll do it either Friday night or Saturday morning.
Friday night or Saturday morning. Man, you really are a busy guy on the weekend.
I know
you
how
must
to
have
party.
something that can
I know how to
you must have
party.
something that can clean
Yeah.
your garage for you already.
Yeah. So, so I'm feeling pretty good about that. That's a good piece of manual labor.
Really? After I just faced you, you feel pretty good about what you're doing?
And it looks good.
Sometime today, you're going to go, that bat, he's pretty smart.
No, I'm really not. If I say that today, I'll probably take a limb off. I might chop a finger off if I say that.
That bat, man, he looks like a lot, and he is a lot underneath the layers. I mean, it's pretty good with a lot of things.
Well, I've known you for over 40 years, and I've never said that once, so I'm not going to start now. So it's unlikely that I'm going to say that today. I don't see myself going down that route, but, you never know.
You probably say to yourself, that bat, he probably worked really hard when he was younger to learn all these things that he knows today, dropping all this knowledge, right?
You weren't nearly the slacker that some other friends were, like Jules and the other team, you worked hard.
That group was not you don't measure yourself up against them. They are about as low as they come when it comes to putting in the effort. Your group of friends. I was bell to bell, Sadnov. You know that. Come on, give me some credit.
I mean, some of my friends are slackers. I can name them, but Scott's kind of like a slacker too. Scott's a little bit of a slacker. He doesn't like to work too hard.
Scott is not a slacker.
Scott's a little bit of a slacker, and you're not really a slacker. I give you that. You're just not. You don't work efficiently.
It's just not beneficial.
You waste a lot of time.
I waste a lot of time by being around.
And you waste a lot of other people's time, so it's hard.
I waste a lot of other people's by being around.
Right. My life is very efficient. I don't waste any time. Here, bang, 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 bang.
Very efficient. How are your light bulbs, by the way? How are your light bulbs? Do you ever get those done?
Need a little help.
Yeah.
I got an electrician on the. I'm talking to an electrician. I think we're going to be able to work something out.
He's going to have his wife come over and screw in the light bulb for you? It's
a lot more complex than you think.
Oh, sure. No, I know that.
It's a whole day.
Yeah. You need a union guy over there. Yeah.
I need a union guy. But no, I'm going to get the light bulbs taken care of. I got a lot of stuff going on, okay? You wouldn't understand with your simple suburban life. City life is tough.
I know. Well, yeah, we don't want to get into that, but I got it.
Yeah.
So what did you do last night, Sadnov? That's what Vanetta always asks you, and I'm always amazed by her asking that question because you really do nothing past 7 o'clock at night. I'm really wondering what she's expecting you to say. I mean, after you eat, you pretty much sleep. I mean, that's it. And then you wake up, and even last night you slept a little late. You didn't make a trade till 5:30 in the morning.
No, I don't have to. Well, tonight I have plans. Tomorrow night I have plans. Friday night I have plans. But last night I was.
That's great. This is a show where we talk about things. So when you say plans, that doesn't help us. I have plans too.
Last night I didn't have any plans, but I did go to one of my favorite pasta places and pick up some homemade pasta, and I cooked it up.
You boiled water. Seriously, if I could slap a set on you, you'd be amazing. You shop and you boil water? Wow. You're a cat.
I shop and I boil water. Yeah. So I made.
How do you clean up? Can you clean up good?
No, I don't clean up good.
See, that's the problem.
So I made some homemade pasta. It was great. And
you made some homemade pasta. You see that? See, like if you buy homemade pasta, is it homemade for you? I always have a problem with that because my family, we made pasta at home.
Yeah, really? You made a lot of pasta in your life, did you?
My mom and my Aunt Nancy would. My mom didn't do it as much because it was just the three of us, usually just the two of us.
It's a pain in the ass to make pasta. It's a lot of work.
Yeah, but that's homemade pasta. Like when you go buy it from a store, I get it. Fresh is what you should say. Fresh. You bought fresh pasta and you made it at home, but you didn't make a homemade pasta.
Right. I bought it from a guy that was chopping up the pasta. Yeah.
Chopping up the pasta. Seriously, you should be behind a screen and then people could have an imagination of what you look like, because seeing you and then hearing you, it's really hard. It's really hard. So you made fresh pasta that you bought.
Yeah.
What kind?
That's some weird name. I don't know what it was.
It's not this wasn't trying to stump you. This was.
I know. It was some weird name. I don't remember what it was called. Like, it's kind of a weird cut. I forgot what they called it. But it's like wide noodles, but then they cut it some certain way. It has a certain name. I don't know what it's called.
Pappardelle?
No. You wouldn't understand, but it's a little out there. It's
Wait, you bought something you can't pronounce and don't know what it's called.
I don't remember the name, but it's outside of your range, of your limited Italian range. Your limited Italian know-how. Okay, your 6 pastas, Hello, is it a pappardelle?
Well, you said a flat noodle that they cut.
It's a pappardelle. It's not pappardelle. It's pappardelle.
Pappardelle. So seriously, sometimes I can't stand you. I really despise you. I really do. I really do. And it's farfadelle anyway. The P is so it's like an F, but it doesn't matter. It's okay. It's okay. It was probably lasagna noodle, and you made a nice gravy.
It was not a lasagna noodle.
So let me get this straight. You bought fresh pasta, and then you boiled water, you opened up a jar, and you got your sauce. And did you put anything in it?
Yeah, I made sausages.
You made sausages. No. My family, we made sausages.
Oh my God, your family didn't make sausage.
We had a hand crank.
No, you didn't hand crank your sauce. Don't give me your bullshit. There's no. You went to the pork store. You went to the Brooklyn pork store.
Pork store was great.
Went to the pork store. You said, "Give me 2 of those links," and you're done.
No. So you fried up some sausages and you put them in the sauce. That was your meal? That's your big time city folk meal?
Yeah, it's pretty good actually. It's a lot of work.
It sounds good, but I mean, basically.
I have a new favorite jarred sauce.
No longer the Victoria from Costco?
No, the Victoria's good, and the Rails is good, but my new favorite is the spicy vodka sauce from Carbone. They sell it at Costco. It's great.
They sell it everywhere.
It's good. It's good. I like it.
It's all right. It's all right.
Yeah, it's all right. You're right. It's all right.
Yeah, it's all right.
But I got to try new stuff. So anyway, that was my big.
For a plebeian like yourself, I can understand you liking the Carbone vodka sauce. You think you're a big shot going to Carbones and stuff like that from your small galley kitchen that you have, and you feel like you're, a star.
Thank you.
You're welcome.
I did feel a little like a star last night. Anyway, that was my big night. It was kind of quiet. Watched the Cubs game, and but starting tonight, we got lots of stuff going on, so can't even tell you. You'll have to wait till tomorrow to hear.
It all starts with Dylan this afternoon, and the Fed rate cut or not, Sosnoff. That's right. Bonds are trading.
I don't think you're going to see a Fed rate cut, but we covered our bond position yesterday. We still long notes, but I'm kind of hoping
114.13 on the bonds. They almost traded 115. 114.25 is the high. Even
I think if they get down under 114 today, you got to buy them. I think if the notes get under 111, you got to buy them. I think both of those are buys on any dip, but like I said, we took profits yesterday.
What's rate cut territory if the bonds trade?
A stretch would be 115. Probably even money would be 117, and 116 would probably be 25 or 30% chance. I think so 117.
You're being an odds-on favorite not to do anything.
Yeah, I think here 114.11, you're an odds-on favorite not to do anything, but you could make it a stretch case. I just don't know.
Understood. Even the S&Ps traded up all night. They're up 6 handles. Nasdaq's up 36. Russell's up 9. Russell is the strongest of the group. Dow is only up 22. That's kind of the weakest of the group. Volatility in by 10 cents off of its lows, close to its highs of 1795 that it made yesterday. I'm going to expect volatility even with the E-mini S&Ps higher by, let's just call it, 5 to 15 handles today. I would expect volatility to stay bid with the pending news for the bonds. Bonds are down 5 ticks, 114.12. Bitcoin traded over 119. It's 118.7 right now. It's up to 119. For oil, basically unchanged after having a pretty big 2-day rally, up to 69.79 on the high. It's 69.18 right now. Gold up $1.20, pretty tight range of about $12 or so on gold. But silver's had a big range, 37.85 up to 38.42. It's just under 38. Let's call it mid-range. Down just about a percentage point right now on silver, 33.5, 33.1 cents. Nat gas down almost 6 cents, flirting with 308 right now, 306.6 was low. You got a couple of earnings from last night. Starbucks being the one that you played, was up around $5 earlier. Looks like it's up around $5 right now, $4.50 or so. You got Qualcomm, which I know is has your number most days. eBay, Lyrics, but everybody's going to look at Meta, Microsoft, Roblox, handful of others.
Yeah, I think there was one other big one, but Meta, Microsoft, and Roblox are probably the 3 big ones. I think there was another one. There was another big one.
Another big one?
Can't remember. I got to look at my cherry picks from last night.
I know, I do too. I don't have it at my my ready right now, but I will.
Yeah.
Mm-hmm.
Meta for sure. We'll take a look at RBLX. We have a pretty decent sized position here. Last night we only traded Starbucks and a tiny little trade in Mara, MARA. I got people saying that Mara was a meme stock. They're not very happy with you. Mara is not a meme stock. Sorry.
Up 60 cents for Mara, by the way.
Yeah, it's not a meme stock. And then I would say the other one was Visa, and I think Visa, we didn't trade it because the expected move was less than $10, which is only 3%, and I don't know what it went down.
Down about $10, maybe $9.
Yeah, I just don't think that was a good play, risk reward wise. So we went with the chalk, which was Starbucks, and then threw a little more in there for a kicker. It looks like it's going to work out nicely, and then we can move on to today's. We don't have a Meta position on. We do have an RBLX position on. We'll have to see what else is out there.
Very good. We have our usual programming today. We got a Tasty Bite segment at the top of the hour, 8 o'clock. We got What's Your Assumption at 8:40. Thank you so much for all the trades and assumptions that you put into Tasty Live. And then we've got we've got a little bit of a 9 o'clock market measure also. So then you got Johnny Trades. That's right. My friend Nick Batista will be on. Is that probably the favorite Wednesday programming for you, Johnny Trades?
I mean, he's up there.
He's probably in second place, as you told him yesterday.
I said he was in third. I said he was in third yesterday.
You gave him second first, and then you gave him third.
Then I demoted him. Yeah. So he's like,
you got MasterCard and Shaq also. I mean, there's a bunch of them, but go ahead.
MasterCard. Yeah. All right. Cool. Well, we'll see.
Skinny on options math with Jacob. Yes, at 9 o'clock. Sorry, I said a market measure. I apologize. All right, Sadnov, I'm going to take a quick 90-second break.
In Jacob's own words, today is so easy, Tom, even you and Tony will understand it.
Oh, he put me in there. I like that. I like when I get an honorable mention. We're going to take a quick 90-second break. Come back. We got more Tasty Live. Sadnov with Confirm and Send. We'll be back in 90 seconds. Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like, we drive, like...
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, it's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live with Confirm and Sense. I don't know if even the S&P is up 4.5, but you know what? You just saw the bonds trade back down under 114 for a second, or close enough to it. I didn't see if they traded under 114. The 114.06 right now, down 11. So I had a quick question for you. You said you put 150 pounds of dirt in there, and I know you can't. Pick up 50-pound bags. So I mean, at Home Depot, it's 3 big bags. It's 50 pounds, like 150 pounds of dirt. You make it sound like it's a big deal. It's 3 bags. You got 3 bags of dirt. I mean, so do they make 5-pound bags? Did you get 15 5-pound bags? Did anybody help you put in your car for you? And they said, "Man, we can help you."
The good part is the fact that you can't do math is even more fun.
Well, I didn't know where to get it. What am I supposed to do? If they were 8-pound bags, you do 20? I couldn't get to 150. What did you do?
Well, you could do 35-pound bags.
Okay, 35-pound bags. Is that what you did?
No, I did 28.8-pound bags. Because that's what they had.
Okay, well, that doesn't equal 150 pounds either. So good thing you can't do math. Hey, listen.
It's a little, I did actually 18. It's exactly 150 pounds.
Whatever you say. Okay, sure. Change it however you want to change it. Change the story to make yourself right. I thought, don't you usually do that with Dylan later on today on Truth or Skepticism? Are you doing that early?
Are you done?
Let's go to Confirm and Send, Sosnoff.
Confirm and Send. Emails that came into us overnight. It's 7:34 in the morning. We're in Chicago. This is Confirm and Send. Emails from viewers all over. It is Wednesday, July 30th. I think there's 30.
Oh, happy birthday to my sister.
Happy birthday to Tony's sister. We don't do birthday shout outs, though. Can you please briefly describe what a balanced or diversified portfolio in a small account would look like?
Wow. Yeah. Okay. So you have to throw this. I think you have to throw this out in a small account. I mean, you have to be strategy diversified 100% as best you can. That would mean using the proper amount of buying power per $1,000 that you have in your account. But this is so old school thinking. You're going to have a 60-40 split between, depending on your age on stocks versus versus bonds. You have a small account, you're looking to maximize your return on that small account, and you're probably going to be using as many strategies as you can on the option side to create some sort of margin in your account to get those numbers right. So I think it's going to be strategy diversified is what you should be concentrating on, and not anything else. We just bought bonds at 03.
Yeah, good. This is a question that we get a lot actually with small accounts, and because we talk about being diversified both on products and strategy and everything else, and you do the best you can with a small account. So if you, first of all, like Tony said, you want strategy diversification, so you use some defined risk, some undefined risk trades, a couple different strategies, and just by doing that, you're going to reduce your risk somewhat. And then you kind of want to try to do as many small trades as you can. And then try to mix up, the different underlyings that you trade. Don't do it all in the same thing. And that's about the best you can do. So, you can have a combination of a bunch of different stocks.
You could trade SPY and have multiple strategies.
Of course. You can have a bunch of different stocks on, and you can do some things like, you can do an iron condor and a short vertical spread, and you can do a naked short put. In some, if it's a cheap stock, you can do a strangle. There's a bunch of things you can do, and just make it as messy as possible, meaning as many different strategies, as many different underlyings, until you basically, don't have a capital left. That's the simplest way to do it.
Yep.
Let's go to the next slide. When you're doing a diagonal or a calendar, what days to expiration do you use, and what is your profit target? Does the profit target vary if you change the days to expiration?
Well, I usually like to do diagonals if the front month is a little bit higher than the back month. So this way, at least I'm selling higher implied volatility in the front month and I'm buying lower in the back month. I don't mind if they're the same. I don't mind if they're two vol differentials different, meaning the front month is lower by 2. The back month is higher. So that's my first thing that I look for. I'm usually doing them in stocks that have low IV rank because it's a directional trade, especially on the diagonal side of it. It has an embedded long spread in it. And I like to do them when the front month has somewhere between 25-ish to 35-ish, 45-ish days, so a little bit longer dated. And the back month obviously would be closer to 50 to 60 days. So that's what I like to do. It. My profit target in there, well, I've got one in Costco. Breaking even would be amazing profit target because I'm dollars away in there. But slower moving on a calendar, you're going to pay a lot less for it. I'll start with that one first. The calendar's got a lot less delta to it, basically 0. So I would be looking for 20 to 30% of whatever I paid for that calendar would be a home run, maybe even 10%. It's a slow moving strategy. And a diagonal spread probably a little bit more, somewhere between 40 and 20%.
So when doing a diagonal or a calendar, the days to expiration of our long is usually in the 55 to 70 range day to expiration. We might go out as far as 90, but that's really rare. It's usually in the 50s or 60s. And the short term, the short option is usually in the, it's around 30 to 35 in that range. That's a perfect world, but it doesn't, you can vary that a little bit. And the profit targets, if you're trading on a very short-term basis, like you're doing a one day, 1 week, or that kind of stuff, then your profit target's going to vary a little bit because you're taking more risks, so you're going to want to make more money. But if you're doing what Tony said, which same thing for mostly things that we do, your profits are going to be pretty moderate. These are the type of trades where you essentially, you risk 1 and your target is maybe 20% of that, but you have a very high probability of profit. 20, 25%, I'm guessing, in that range.
Very good.
Let's go to the next slide. I would like to expand my ability on picking underlyings. What are some good parameters, or what would you recommend to build a watch list?
So I like our option volume list. You certainly could make one of your own of a lot of the popular stocks. You'd be surprised sometimes because I'm all option centric. You'd be surprised sometimes, like an IBM, everybody knows the name, everybody knows the stock. It doesn't have the best option market. So I like the high option volume list. A lot of people use the NASDAQ 100 list, which is pretty good too. You can go in there. So I like to use stocks that I know about, stocks that are widely traded. And then I've got to go a little bit deeper and go into the IVR, which is I like high implied volatility because I'm selling premium. So for me, a liquid stock, liquid options, tight bid-ask differential, and then high implied volatility would be my two factors. Like that's what I think is a good underline. Somebody else might think a good underline is a stock that continues to go higher or continues to go lower or fits their parameters on whatever they think the market's going to do. So that's how I do it. Building a watch list, well, that's easy for you because I already have it, or we already have it in the Tasty Trade platform there. I like Bat's watch list. Tom obviously likes Tom's watch list. You can certainly build your own on the left-hand side of the column there or anywhere else on the platform. But I like to have the E-mini S&Ps, NASDAQ, Russell, Dow, volatility, and bonds as my top 6. And then I work from there down to Bitcoin and oil and gold and silver or whatever you might like, and maybe individual stocks that you want to see.
Yeah, so I'm gonna second what he said about stock picking. Number one, I like high option volume too. I think that's a good watch list to start with for picking stocks. High option volume, it's already one of the defaults on Tasty. Yep. And then I think to that you add high implied volatility rank and high volume. I mean, obviously liquidity is kind of king for what we do. So we want actively high option volume, liquid option volume, and lots of volume in general. So we just want lots of trading, and the kicker for all of it for us is high IVR. So high option volume, high IVR, high volume.
Yep.
Yeah, that's what we do. And like he said with the watch list, you could use mine, you could use his, you could use any of the ones that are in the platform, or build your own.
That is correct. What is that there, Sadnoff? Looks like
I bought some notes.
Ooh, you did around.
Well, I sold them out yesterday. I want to buy them back today.
Got it.
Like I said, I'm gonna lean long on bonds and notes no matter what. Let's go to the next slide, John. I think a lot of people consider a good day in the market is solely looking at P&L. Maybe that makes sense. But I would like to know what tells you when you've had a good day. Is it data? Is it premium collected, deltas, or is it P&L?
P&L is king. I mean that's how I measure a good day. Is solely by P&L. And a good stock is solely by P&L to kind of piggyback a little bit more of the last confirm and send. Any stock that has a good P&L to it, more than I had expected for the risk that I have, that's a good stock to me. So I'm going to stick solely with P&L, Sosnoff.
It's interesting because I think this is very similar to how you would look at any, how you would measure any manager or.
Was it a good baseball game last night?
No, because we didn't win. If you win,
the P&L wasn't
if
there,
you
right?
win, it's good. And if you don't win, it's not good. There's no there's no moral victories just because you know what? There have been days when we've been down money or we were really in the hole and we came back and the whole day finished as a break even and we're like, holy cow, that was a good day. We broke even or only lost a small amount of money. But for the most part, you are measured on wins and losses. You are measured on your P&L. That's all there is to it. A good day is a day that you make money. You look back.
Right. So let's do it where people like you could understand it, Sal. No, so like you had 150 pounds of dirt put into you did it yourself into your planters. Now a wheelbarrow holds about 3 cubic feet of dirt. That's about 220 pounds of dirt, weight in dirt. So you did about 2/3 of one wheelbarrow worth of work yesterday, right? And that was a good day for you.
That's really cute how one of your slow adults informed you.
No, I did all myself.
Informed you of that information.
No, I did all myself.
I think a better example of this is there's when you look at
Equally as good, Sosnoff.
Since we're talking about baseball a lot, I think a great example of this is at the end of the year, they don't remember that you hit a bloop single off the end of the bat into right field, and which sent your batting average higher versus crushing the ball, up the middle on a good hit. Like, I don't remember what the hit looks like. I just remember, the net results. So I think in this case, it really comes down to P&L. Let's go next slide. Do you think traders have a version of recency bias when directionally trading? Take bonds and interest rates. Those of us who have been around since, let's say, AstroTurf, since that doesn't upset me too much, remember interest rates being double digits. As such, a 6% mortgage rate seems low. But to those unfamiliar with AstroTurf, 6% is high. Do you think that perspective makes some of us trade with a directional bias that rates could go much higher while others can't imagine such a thing? And is that a good or bad bias?
It's a great question. Never had one worded like that either. So it's a good on you. 10 out of 10 for what's your assumption question here. Man, you know what? My view is so, because I was around for AstroTurf and double digits. I actually had AstroTurf toe. I would run so fast, but that's neither here nor there. Hofstra University field there when I was playing football. It's another story for another day.
They can say a lot of things about Batistas, but running fast is not one of them. There's not a Batista alive that runs
away from something.
There's never been a Batista born that runs fast. Okay. Fact.
My time frame is so tight that I don't think this factors in. I don't say, man, rates are 6%. This is, they've been 16, 18, maybe even over 20% in my lifetime. This is relatively cheap. I'm looking at such a short time frame. I'm trading the here and now, and I'm too sophisticated. I look at expected move and judge it from there. That's a great question.
It is, and I think it's a very fair question. And I think that, it took me a long time to get over the AstroTurf analogy that you made here, because I never thought rates would ever get under 7% ever. And now I look at 6% as being, high. Does it make us trade with a directional bias? I don't think so. The one thing about us is we are pretty objective, and we can look at this thing from both sides. I think we've been in a low rate environment for 15 plus years, 16 years. I don't think anybody has that, has that mentality.
Mm-hmm.
Somebody sent me a deal to look at for a piece of real estate last night, and they said, "What do you think?"
I thought you said a veal. I was like, wow, Sosnoff.
No, I didn't look at a veal. It was a deal. And it had a rate on there, which was, I hadn't seen in a while. Somebody said they're borrowing money at prime. Now, I hadn't looked. Don't look it up. Don't look it up. What do you think the prime rate is? I had not looked at the prime rate.
It's high. It's high. I'm going to say it's around 3 in the orders.
Okay, so I have not looked at the prime rate in like 10 years because nobody uses that term anymore, right?
Right.
So I'm like, they said we can borrow money at prime rate. So I'm thinking to myself, oh, that sounds kind of fair, but I better look it up to see what prime rate was. And I looked it up last night, 7.5.
Wow.
So I'm like, okay, that's not nearly as good a deal as I thought it was.
Right. I knew it was high, but like I said, 3 in the orders, because usually, prime plus 1, which I was basically making, short-term interest rates.
Right. Well, they said, maybe I saw it wrong, but I thought it said 7.5 last night. And I was like, oh my God, I haven't looked at the prime rate in 10 years.
Right. Obviously, you don't borrow on margin.
But
let's see.
So the answer to this question is no. I think we've overcome that.
Yes, 7.5% is the current prime rate. Wow.
Yeah, I think we're kind of, I thought like Tony did. I was thinking 3.5. Anyway, I think we're pretty objective here. So no, I don't think there's a recency bias. And by the way, that recency would be 15 years of recency. That's a long time.
Yeah.
Let's go next slide. Meta and Microsoft. I forgot about Microsoft too. Meta and Microsoft and Roblox.
Yeah.
Microsoft does, right?
Microsoft has earnings, yes.
Meta and Microsoft both have earnings tonight. However, the VIX is around 16, and neither of these stocks have particularly high IVR. Would you ever consider something like a diagonal or another type of debit spread under these circumstances?
Yeah, most definitely. And a lot of people that trade earnings in smaller accounts like to play a move this way. So if you're going to do a diagonal spread, even a calendar spread, you have to have a directional bias. So yeah, that would be something we would consider. Tom's got buku cash, so probably do something different. But yeah, it is probably an intelligent strategy.
I mean, to be honest, Microsoft is a $500 stock, and Meta is a $700 stock. That's a lot.
So it makes both these strategies viable, doesn't it? Just on that.
Yeah. So for capital efficiency reasons, of course, a diagonal or a calendar would be viable.
You've got high front month implied volatility, lower back month implied volatility. Check on both of those too.
Yeah. I mean, I don't love either of these plays unless they are. I don't love either of these plays unless you have a directional bias. I happen to be directionally. Now, I've been playing, to be fair, I've been playing every earnings play to the upside. Like last night, I sold naked puts in Starbucks, sold naked puts in Mara. I've been playing every single earnings play to the upside. These two, I'm playing to the downside.
Wow, flipping the cards over.
I am bearish. I am bearish on Meta. I'm going to get killed tonight. I'm bearish on Meta, Microsoft, and Roblox. All three of those I'm bearish on. I know I'm going to be wrong on at least one, maybe two, but I'm playing the downside of all those.
Wow.
Let's go next slide. I've been doing the SPX 0DT trades. I sell the straddle and I buy the $20 wide wings. All right.
Okay.
Usually I can collect between $13 and $14. However, the last several days it's traded for closer to $11 to $12. I haven't done the trade because this seems too cheap. But is that smart on my part? If the markets are perfectly priced, then shouldn't I do the trade regardless?
No, it probably is smart on your. Again, listen, you're going for knowledge as power here. So and again, being confident in the strategy because you had done it previous times before. You know where it should trade, just like a good market maker in the 1980s. Now, volatility is lower, and you're not getting as much credit. It's perfectly priced for the implied volatility there, but you know you're not getting as much bang for your buck on the trade. And it probably saved you a couple of dollars yesterday. I know yesterday zero trades probably didn't work out for most people. So I think you are being smart in the trade. And if you're only trading one lots, then you probably should abstain or be very, very nimble with that trade if you're going to put it on at all.
Okay, so there's two schools on this. First school is that I understand premium's been declining, and I understand it's a lot less attractive at 11 to 12 than it is at 13 to 14, just like it's a lot more attractive if it was 17 or 18. However, when you trade the 0 days, if you're going to do them every single day, like our research shows, the volatility doesn't really matter that much. I mean, I don't like it nearly as much at $11 or $12 as opposed to 13 or 14, but the reality is they're priced lower because the market's not moving. And so because it's a 0 day, it doesn't have the same impact that a 10-day, 20-day, 30-day, 40-day, or 60-day will have. I mean, it's still a 0 day. So, yeah, I think you should do the trade regardless.
Wow. I'm surprised by your answer because many times we looked at it and said, you know what, volatility is too low. I'm not doing it. Now, it may have worked out. It may not have worked out. That's neither here nor there.
A perfect example would be our live show in Denver. Tony and I did a live show in Denver on Friday, and volatility was in the crapper. Okay, market was higher. SPUs were up 15. Well, when we did it, they were up 12. The market hadn't moved in an hour. It literally looked like our screen was broken.
Yeah.
And we did the SPX and we did the ES, and just to show everybody, okay. And then, 20 minutes later,
we took our profits a little sooner. It was
20 minutes
nice
later, we took our profits just like our research says, at like 10, 15%. That's it.
Yep.
And just to show people, okay, here we go. And
Sure.
You know what? It's a winner. We put it on the board, and it gave us a good pace for the entire day.
It sure did. It sure did. Agreed.
So that's why. Let's go to the next slide. I heard someone on TV, this is dangerous. I heard someone on TV say that August, September, and October have been the hardest 3-month periods to trade. Is there any truth to that?
I couldn't tell you the 3 hardest months for me to trade because it depends on what my P&L does. I don't know. For me, this is just a soundbite.
For me, this is just a soundbite too. There's no such thing. I mean, if you want to go back in my own personal history, August, September, and October are my 3 best months over the course of my career.
I've never looked, but
I mean, I don't know that 100% for a fact, but I think that's.
Oh, so now you're just lying to people?
No, I just think as a floor trader, I know October was always my best month, and I think September has been good to us. And so I'm going to say that those are probably over 40 years, probably the best 3 months.
You're probably talking about it was your best 3 months because that's when you were playing softball back in the day, and you were like, you big Kingman type hitter.
Oh my God, no. Is there any truth to that? I don't think so. I think it's just a soundbite. So yeah, don't even think of that. Let's go next slide. And the last one. There is a lot of news coming between Wednesday and Friday of this week. Do you think it makes sense or more sense to trade individual stocks tied to the news? Or do all the stocks become correlated in this scenario and I'm better off just trading an index like QQQ?
Yes to all of it. I mean, you certainly can find stocks that are going to be news driven by the interest rate decision we have today and jobless claims tomorrow and unemployment on Friday. I think the whole market is correlated, so you can also go to the Qs or SPY or IWM if you want to. Also, gold and silver is going to have movement on it. Obviously, bonds, TLT is going to have movement on it. So I think the world is your oyster. I think it's just one big trading place. Wherever you find the best IV rank for the strategy you're using and the tightest markets, that's where you should go. You're not going to look for ABC stock that's going to have more meaning on an interest rate decision, alleged interest rate decision than anything else, are you?
There is a lot of news coming this week, but no, we will trade individual stocks that are tied to their own binary events, like, for example, Meta and Microsoft today that have earnings, but we are not trading individual stocks because of the general news that's coming out, that might impact the broad market. So we're never going to back away because, we believe that everything's already priced in. So if there's news coming out about between Wednesday and Friday on different economic factors, that's already priced into these individual stocks and it's reflected in their option prices. So you're not better off. I mean, I take that back. You might be better off just trading QQQ if that makes you more comfortable, because whatever makes you comfortable is where you're going to be best off. But no, we don't do that. We will trade individual stocks that are tied to their own binary events, and all stocks do become correlated in this scenario a little bit, but that doesn't matter to us. We're still going to go wherever there's the best opportunity.
Let's take a quick 90-second break and come back south of. You know what we got next? That's right. Tasty Bites. We'll be back in 90 seconds. Tasty Live. Good job, Eddie.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tomas, we are back, my friend. And you know what that means? Time for a little more Tasty Live with this Tasty Bites segment. So I don't know if even the S&Ps are up 3 handles, oscillating back and forth between up 3 and up 7. Bonds are 114.06. They traded down to around 2.3 just a moment ago. They've got a couple of ticks higher, and I know notes have traded a little bit lower than where they are right now. I know you scoopy some.
I scoopy some at 3.5. Could have sold the bonds at 09, but didn't want to take 6 ticks because I'm greedy and I wanted 8.
Because you're a stud muffin.
Because yes, exactly. You know, I'm really sorry that I don't like the fact that Ozzy Osbourne died, but I really do like all the Ozzy Osbourne tributes. They're great. They are great. They're so good. I mean, it's cool to see, but everybody from country singers to, old school rock band, they're just great. Everything's great.
Yeah.
So good.
Yeah. It has been great, but it is sad for the reason why they had it.
I don't like the and you know, and I don't know why, but Sandberg dying yesterday. There's certain athletes when they die, like when Walter Payton died, I couldn't figure out why I was still alive, because he's like, he was like such a physical specimen. Like it didn't make any sense. Like, how did I survive and he's dead?
Yeah.
Same thing with Rhino a little bit. He's like, he was
Sadnov, obviously we don't get to pick and choose is really what comes down to. Sadnov or Rhino would still be alive, and
obviously we do not get to pick and choose. But not a good week. But at least driving in this morning on the Kennedy, somebody had put up a giant billboard. I forget which bank it was. It just said 23. Very nice.
Yeah, very nice. Very nice.
Very nice. Anyway, so it's 8:06 in the morning. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Kind of do this every day. Although Tony just informed me that I have to fly solo on Friday.
You're not flying solo. We'll have somebody fill in for me. I have to take a quick trip down to Florida, but I'll be back on Monday. Don't worry. You only missed me for a day, Sadov. You'll be able to do it.
He pulled this move on me. He goes, listen, I'm basically, by the time I get there and by the time I fly back, it's not like 12 hours. That's what I used to tell my wife when I'd be going to Vegas with the boys. Listen, I'm leaving. Actually, she didn't really care, but I'm leaving on, we're like leaving Thursday. We don't even get there till like Friday. And then we're coming home Sunday. We practically leave Saturday night, she's like, will you shut the F up? I want to hear your story.
You're unbelievable.
But Tony gave me one of these. He gives me one of these. He goes, yeah, I booked the wrong date. I'm sorry. And I'm like, oh, I've done that before. I really thought I was going to Vegas on Friday, but I didn't know it was Wednesday.
I can't believe I'm leaving on Wednesday.
Leaving on Wednesday. I really thought we were going Friday.
Can't flight till Sunday.
I always used to just blame it on Jules. I'm like, I didn't book the tickets. Jules did.
My wife did. I thought she did on Saturday.
Oh, she doesn't care.
Yeah, she doesn't care.
She doesn't care if she takes down the whole network. What does she care?
Oh, she likes being with me.
Why? Like, why?
I don't know. I'm going to buy dinner whether I'm here or there, so it doesn't matter. I don't know. You're right.
Yeah, I don't get it. All right, let's do it. Let's see what we got, John. Non-equity ETFs. Non-equity ETFs in smaller accounts. Pretty straightforward piece. By the way, we have a what's your assumption coming up, so we'll do a lot of trades at 8:40. But non-equity ETFs in smaller accounts. Let's see where this. By the way, this is a Tasty Bites segment, so it's designed for traders with smaller accounts. And you know what? We have some potential good news on the horizon for smaller accounts, which is it looks like FINRA, the regulatory body that kind of governs this whole agency under the SEC, it looks like after 15 years, we have finally convinced them to change the pattern day trading rules. And it looks like either later in fourth quarter of this year or sometime in Q1 or Q2 of next year, the pattern day trading $25,000 limit is going to go down to $2,000. It's essentially nobody's going to object to that. And it's going to change this game for smaller accounts because you are going to be able to get in and out of trades. You're not going to have to worry about this stupid, ridiculous, archaic, outdated Assenheim rule called pattern day trading. And so it will have a very positive impact on everybody. And it will be gone hopefully later this year or early next year. Huge shout out to JJ and to Scott, who have been working on this thing for 15 years. And finally, we took the rest of the industry in with us, and we have worked to get rid of it. We have clearly been the leaders in pushing this change. And it pissed me off that the exchanges and other firms, it took them so long to get with the program. And it didn't make any sense. Anyway, let's do it. Let's see what we got here. So this is for smaller accounts. Recently, the implied volatility of non-equity assets has been coming in more in line with individual stocks. Smaller accounts are limited in what they can trade. So is there an opportunity in some of these assets? So we have on the screen in front of you, so you can see how they're all so highly correlated. Gold with NASDAQ, S&Ps, and bonds. I mean, you would think, how could these things be so highly correlated? But, weird thing is they kind of are. Let's go. So you have the NASDAQ, the S&Ps, precious metals, and bonds. Let's go to the next slide. For small accounts, we like to trade underlyings that are ideally less than $100 so that our capital is not constrained to one trade. You know what's so funny about this is that in 2008, when we melted down, just because for some of you weren't around then, but in 2008, I think 65 or 75% of stocks were under $10.
Yeah, unbelievable.
You couldn't find a $100 stock. Now,
$100 stock was expensive.
Yeah, $100 stock was ridiculous in 2008.
And they would talk about, why aren't they splitting it?
Yeah. Now you've got these stocks that, $1,000 isn't too much. So It's crazy how things. Now it's hard to find stocks under 100. Back then it was hard to find stocks that weren't under 10. So our capital is not constrained by one trade. So what are the most tradable commodity and bond products available to trade that are liquid, cheap, and highly correlated to the most commonly traded ETFs? Let's take a look at the next slide.
It's going to be very good for smaller accounts looking for some diversification. To go to that email that we got earlier today, this is a good answer for it.
There aren't many ETFs with options that are highly correlated to TLT, but the gold miners and the utilities are somewhat correlated, and they come with a lower price. So in TLT, it's funny. There back in the day there was TBT, but it's kind of like a 2 times leverage. It doesn't really trade. The markets are crappy. So there isn't really an alternative for TLT unless you want to trade /ZN. And for smaller accounts, /ZN, even though it's a futures product, I think the options there only require I think it's like $1,000. Can you check, Tony?
I'm gonna do that right now for you.
Yeah.
Mm-hmm. Go ahead. Talk amongst yourselves here.
And so I think ZN's an alternative there. GDX, XLU, which is utilities, and GDX, which is a relatively inexpensive stock, $54, and XLU is $84. Now those are hard stocks to make money on, man, because I'm telling you that stuff does not move the same. But they do have a reasonable
about $1,500 to answer your question, Sadnov.
Okay.
I mean, even then in a smaller account,
yeah, that's still a lot. I got it.
Yeah.
The bid-ask differential in all three of these stocks, GDX, TLT, and XLU, is about 2 cents, which means if mid-price is $1, you got to get filled, you got to sell it at 98 cents or buy it at 102.
Mm-hmm.
That's all that means. But you can see the BPR here. Tony just said in ZB it's about $1,500 to a one lot. Well, the buying power of a 20 delta strangle in TLT is about 1,100, almost 1,200. GDX is 600, and XLU is 1,100. So it's not that far off, Tony.
Yeah, that's right. And these are for naked options. And in a smaller account, you can certainly go out and buy those wings. Again, changes the strategy a little bit, make it more like an iron condor, but a synthetic strangle for your purposes. And you can use significantly less buying power than that.
Let's go to the next slide. So trading precious metals is actually easier than bonds and small accounts because there are multiple small priced ETFs with liquid options. So you have GLD, which is expensive, $3,000 for a one lot in there for a 20 delta strangle. But GDX, $381, GDXJ, $381, and SLV, $276. Now, before you get all excited, even though these markets are only 2 cents wide, and even though they have extremely high correlation to gold and to the precious metal futures, and even though their price is cheap, it's hard to make money, okay?
Yeah.
You're squeezing a little bit here, but it's great learning experience. Great. Let's go to the next slide. Crude oil is also at play, but the only viable alternative that requires less capital than USO is still /MCL, which is the micro crude oil options. And we can see here, we actually put it on the screen. The micro MCL is the micro crude oil futures and has a multiplier of 100. It is notionally similar to USO, but because it's a future, the buying power is less. So you can see it's $70. That's where crude oil is right now, but it's $668 for one lot versus USO, which is $951. And this is just a good, it's a 99% correlation. The bid-ask differential is the same, and it's just an opportunity to just show you something that's more capital efficient.
Yeah, and you said the price is $100 per point, which is a lot more what smaller accounts are looking for in equity stocks. So MCL is a good choice, I think, if you look at trade oil.
100%. Let's go, and I mean in the bonds,
probably better than USO in my opinion.
Oh, 100%. But also in the bonds, they didn't put it up here because they don't trade much, but there is a bond symbol called 10Y. And you can't really trade 2YY, forget that. But 10Y, you can trade the yield, and I think it's 1/10 the size of bond, so it's probably about $1,000. I'm not exactly sure, but we can check.
Mm-hmm.
Tony, see what 10Y is.
10Y.
What the capital requirement is.
Coming at you.
I'm guessing it's.
Let's see, 10Y. Obviously 10Y. I'm having a little 10YY. So that's why I thought.
Oh, it's 10YY?
I believe so.
That's just forward slash
10Y. Sorry. No, obviously no options. You're just looking at the future itself, right?
Yeah.
About $330.
Right. So that's a really inexpensive way. It's 1/10 the size of the 10-year note. And so it's a very inexpensive way. And it's the equivalent 10Y of like about 50 or 60 shares of TLT. But it's cheap.
Right, but no strategic component to it.
No strategic component, just long deltas.
Or short.
Exactly. Let's go to the next slide. Speaking of futures, with micro futures contracts becoming readily available and liquid to trade, we're able to trade them in accounts with a few $1,000s in capital. That's correct. On Tasty, the number of micro futures on Tasty is 23, and the number with buying power less than $1,000 is 9. Mm-hmm. So we at Tasty, we are not. We purposely make trading very accessible for everybody because, and regardless of the underlying, because we want to give you whatever product is most capital efficient. So 23 micro products. And in the drop-down menu in the left-hand gutter or in the center of the platform, you can see all the micro products because we have them listed as micro futures. So you can get a watch list just of micro futures if you want.
Yeah.
Let's go to the next slide, John. There are 3 micro futures with liquid options. Trading iron condors makes these trades very manageable from a capital preservation perspective. MES, MCL, which I would argue that MES and MCL are okay. MNQ is not great. I mean, you can get filled in there because it's the same market makers as the big product, but they just don't watch it that carefully. Mm-hmm. So with 10 Delta Wings, you can do, you can do buying power. You can do strangles for around $1,000, or you can do iron condors for $300. Remember, this is all for smaller accounts. Let's go to the next slide. As a bonus, there are no pattern day trading restrictions when you're trading micro futures, regardless of account size, when trading futures or futures options. Let's go to the next slide. So the takeaways. You can trade commodities and bonds in a small account by looking for products that are liquid and correlated to the ETFs, to the more expensive ETFs. These alternative ETFs can be as small as 10% of the main ETF, which allows for even small accounts to put on undefined risk trades without much capital restraints. With many micro futures products available on the platform, small accounts can use futures to also explore markets that used to be exclusive to large accounts. We have been instrumental, if you're not familiar with the history of Tasty, we have been instrumental in creating small futures products and 0 and weekly DTE options. So a lot of that has come from, all that product creation has actually come from Tasty. So we don't get a lot of credit for it in the industry, but they were pretty much all our ideas. So throw that out there, just so you know where we come from.
Even the S&P is up 5. Let's take a quick 90-second break and come back. We got more Tasty Live immediately following these messages. Back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I
well,
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh yeah, she was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never.
No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right?
Now.
Yeah, you're a camper
guy.
You're a camper.
Hold on, you're a camper.
Oh my God. Is there anything? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. And I'm going to the office.
Oh no.
Oh no.
Can you put that leg up again?
No, do not.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. It's time for a little more Tasty Live. Well, starting off with the opening bell in about 4 minutes or so. E-mini S&Ps have been hovering right here, starting off probably the middle of their range since we've been on the show, up around $5. NASDAQ up 26 or so. Russell up 9. Dow up 35. And volatility in by 25 cents to 1770. Low is 65. High is 95. Bonds down 17, starting off 114 even. Best laid plans of mice and men for you, my friend. Didn't want to take your 6 ticks. Now you will eat 3 ticks.
No, actually, I got out almost everything yesterday. I want to reload.
I know, but you bought more. You bought more.
Yeah, I know. I want to buy more lower.
I understand.
Let me reload.
Well, usually you need a little bit more downtime than this.
Yeah, usually
Bitcoin up.
Usually I need like 24 hours.
Bitcoin up $110, basically unchanged. Oil up 37 cents. By the way, sold at 24 hours. You need a little bit more. Gold down $19.70. Silver down 57. That's down just about 3 times as much as gold on a percentage basis. For earnings, Saznoff, you had Starbucks, SBUX up around $4. It's now up around $5 or so. Today we have Meta, Microsoft, Qualcomm, Shack, Roblox.
We're going to do Microsoft, Meta, Roblox.
That is correct.
That's our 3 main ones.
You also have more ABBV, Lyrics, LRCX, eBay, MasterCard, Shack.
Yeah.
Preferred burger of Tasty Live hosts.
Yeah,
and by the way, thank you for finding out and asking him. He's safe in Hawaii, our friend.
But not my favorite custard, just so you know. Shake Shack's got to do better with their custard. It's not up to the level of Culver's.
I disagree. It's pretty good.
God, you can't disagree with that. It's not even close.
It's an also ran. It's not what they do. I mean, Culver's is known for their custard. That's what they do. They have multiple things. This is not what Shake Shack does. They're not a custard store. It's an also ran. For an also ran, it's better than the ice cream at McDonald's. You don't say to McDonald's they got to do better with their ice cream. Jenny's ice cream is so much better, or blah blah blah. I mean,
I don't compare Jenny's to McDonald's, but I compare Culver's to Shake Shack.
Okay, then Wendy's is better than McDonald's. They got to do better, McDonald's.
Yeah, sure. I don't eat ice cream at McDonald's. I didn't even know.
It's all about your world, right? It's all about you.
Yeah.
Got it.
I always thought that McDonald's, the whole thing with them is that their ice cream machines are always broken.
It is fake. It is fake.
They don't want to clean them, so they don't serve ice cream.
Hey, cleaning an ice cream machine is a biatch.
We have an ice cream machine, for those people that don't know. We have an ice cream machine in our office that hasn't been used for 4 years because nobody wants to clean it.
Yeah. See that, Sazna? There's your opening bell. Ice cream machine or not. I'm not gonna stop us from having an opening bell.
It is not going to stop us. All right, we got to wait till some of these.
Oh boy,
that was not what I want.
That was weak.
Yeah, that was just
rolling.
a wheat. The order I had in from before. Starbucks.
Starbucks is up $5.07. Sosnoff.
Taking a look at Starbucks. Starbucks is a nice winner. Mara, a little bit of a winner. Let's see, Mara. Let's see.
Markets are a little bit wide. Mara was up around 50 cents. Let's take a look at it. Up $1.23 in Mara. Woo! Meme stock mania.
Woo woo. I wouldn't call that meme stock, Johnny.
Just trying to support my friends, even yes, with unchanged. Starbucks you bought back at 14 cents. That has to be a winner. Even for you, you couldn't butcher that.
I don't butcher 14. When I'm buying options back at 14 cents, I am not butchering anything. Trust me.
It's a good day.
Yeah. Anytime you buy an option back, I think I just paid 13 cents for those. Anytime you buy options back at 13 or 14 cents, you ain't butchering nothing, honey.
You're right about that.
We're going to put some more Starbucks orders in.
You're going to try.
Yep. We're going to try.
That's fair.
Mara's not the greatest trading vehicle, just so you know. I just covered
it. Down by 20 cents. Bonds down 16, 114.01. Bitcoin unchanged. Oil up 35 cents. Sadnov, let's take a look at some of these other equity stocks that might be moving this market and to the downside. It's kind of an unchanged-ish market. Palo Alto Networks down 16. Adobe down 3. Crowd CRWD down around 3.5. AMD down around 2. Netflix down around $1.50 or so. Microsoft for earnings down $1.40. Let's see what the upside brings us. Sadnoff, Lily up 9 or 11. Coin up 10. Weird moving coin. Didn't yesterday move. Now today it moves to the upside with Bitcoin basically unchanged. There's no great correlation there.
The whole coin thing is a little bit weird. You know what I'm saying? It's like it's not moving in relationship. It's not moving in relation to anything.
You're right about that. Even the S&P is unchanged, down a nickel, down a quarter.
Well, we covered Starbucks. We're out. It was a good trade, and that was the only earnings trade. So, keeping the earnings streak alive.
Well, you had Mara was also an earning.
It was, but I traded that small. So, taking a look at some of the stocks that have been beaten up recently, and they're still getting beat up.
Hey! Costco's up $1.37. Sounding off. Costco could be the biggest reverse indicator of the market. So maybe the market's gonna be a little weaker today because Costco's a little bit stronger.
Could be. Taking a quick look around, taking a quick run around the track here to see what we got. Yeah, Lily was.
How many tracks have you run around? Be honest. I'm gonna sell the under over at 1.
Tracks?
Yeah, tracks. Yeah, tracks.
Not a lot. Depends how big a track we're talking.
Yeah, sure. I got it.
Hang on, I'm just trying to adjust a Lily trade, and then I will give you all
Any
your...
truth to the rumors that you put, it wasn't a wheelbarrow that you were saying, it was a wheelchair you were saying, that you just put him on Josh's lap, the dirt, and then you just wheeled Josh to the
no truth to that.
Beds?
No truth to that at all. Hey, what happened with the dog yesterday?
Very disappointed, Sadnov. They said they didn't take out all the dog's teeth. They only had to remove 3 or 4, saving a few for the next time they can go under for another $2,500. Why take them all out now when the dog is suffering? When you could take them out, next time for another $2,500. It's still here.
Yep.
It's bleeding all over the freaking place, though.
Sounds like
it's not a very good scenario.
Sounds like paradise. Yeah, so on the opening here today, all we did, and this is a very typical kind of opening for us, first 5 minutes of the day, came in with some earnings plays. We closed them because that's what we do at Tasty when we're doing the live show. We don't even mess around. We just get out.
A lot of people say, why don't you stay in and volatility is going to contract? It's already contracted. I don't know what the stock is going to do here for price.
We don't know what it's going to do. We don't want to watch it. We made our point. We did that. We traded the binary trade. It worked. And then I adjusted a few stocks. I didn't put any opening trades on yet because we're going to do a segment next to do some opening trades. Just to give you an example, I rolled down some calls in a few commodity options. We rolled up some puts in Lilly. We rolled, what else moved this morning? Let's take a look.
You rolled some puts in Roblox.
We rolled some puts up in Roblox and Coin and Lilly, and that's about it this morning. And everything else, we're kind of like, just seeing what we got.
Well, it's an unchanged market, so if you looked at your markets, if you looked at your yesterday, you're probably okay with your positions today. Make some minor changes. Yeah. There's been no opportunity really in the equity markets. We've had a little bit in the bond market. The debt markets had some downturns.
Yeah, we bought some bonds and some notes this morning, but they're just a couple ticks lower right now. But that's where I saw the opportunity as. Made 17 trades just to throw it on the board, and we're about to do probably 10 more in the next segment. And then we'll get get the ball rolling today and see what happens. It's a pretty flat day so far, and I agree with Tony's earlier statement. I think we're going to stay this way until the Fed comes out at 1 o'clock, and we'll just probably churn around for a little bit, and we'll see what happens.
Yep. You said churn around, not turn around. Correct?
Churn.
Very good. Very good. Sadnov, I'm going to take a quick 90-second break. Does that sound okay with you?
Sure.
Let's take a quick 90-second break and come back. We got more Tasty Live with What's Your Assumption? Coming up next. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready?
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, you're back, my friend. You know what that means? Time for a little bit more Tasty Live with, what's your assumption? Saznoff, 27,000 bond options have traded already. That's a lot of bond options sitting right at 14.
I'm just looking to see Microsoft unchanged, Roblox up $1, Meta up $1. Let's just take a look. Man, I really do. I just hate trading Meta, but they're gonna sucker me in today because I'm so bearish in there.
They're gonna get you short Meta.
I'm gonna do something so stupid.
Do it early. Do it now.
Expected move on Meta. What do you think it is? Without looking, quick. It's a $700 stock. What do you think the expected move is?
I will say $55.
It's 6%. 42.
42. That's low. Ivy rank 25. Yeah. Ooh, get in early. Get in early.
Well, all I'm going to do in there is sell
upside calls. It looks like.
Yeah. I think the 800 calls are 2 times the expected move with 2 days to go. I like that kind of.
Okay.
But I'm not gonna go crazy. You know, I think
last time you bought a put spread in Meta, right, for earnings?
I don't know. I don't remember. I don't want you to be a widow tomorrow. So we'll see. I'm already short RBLX, and I have to short some Delta in Microsoft.
Yeah, I think you bought a put spread. It didn't work out for you.
I have to sell some Microsoft. The 2-day move is $20. $20.
Microsoft is
that's a 4% implied move, where Meta's a 6% implied move.
Yeah, the Ivy rank's only 19 in Microsoft. Just giving everybody a
markets are way better in Microsoft.
Tighter, you mean? Yes.
Tighter.
Not as much juice or volatility, though.
No. I just got to put a little small stuff. All right, I'm ready. All right, let's. It's 8:44. Let's do it. Let's see what we got. Boom.
There you go.
Down. What's your assumption?
That was made by one of our viewers, Saznoff.
What was that?
That was made by one of our viewers.
It was made. That guitar riff was from one of our viewers.
Produced and distributed. That's correct.
And we are going to take a look and see what we got going on here today. These are emails that with trade assumptions or trade ideas or just market assumptions that came in from viewers all over. Let's see what we got.
Let's do it, my friend.
The first one from 112 heat index in the villages. I mean, you know, you're in the villages, John. Just take off all your clothes, right?
John does, by the way. He's good at that.
John is good at that. John, you just say, you snap your fingers, the clothes come off. Boom. J-O-B-Y. What the hell is that?
You don't need no alibi. J-O-B-Y. You don't need no alibi. It's a $19 stock. So sorry, $17 stock. So
oh, is this the one with the is this the one with the Uber for helicopters or whatever it is?
I believe so. 10-cent wide markets.
Joby's rise has been a bit too jolly. I'm doing a simple defined risk put spread. What do you think?
Stock has gone one direction.
I'll roll with you, John. I don't have an axe to grind in JOBY, that's for sure. Stock's up 4 cents today. Options are really light. I mean, somebody traded some 16 puts today, but other than that, not much here. Stock's around 17 bucks. I mean, 18, 16.
Okay,
put spread. 18, 16 put spread. It looks like, I don't know, mid prices. It looks like it's going to trade around maybe 115. No, I think that may be too cheap. I don't know.
Looks like it's not going to trade at your price is what it looks like.
Looks like it's not going to trade. I can do a little price discovery here, John. 115.
Oh,
all right.
Beautiful.
18, 16, 115. Beautiful. Let's see. What do we got?
Your directional play here, just going with the contrarian roll.
The ghost of Maxwell Milky what? Anyway, let's say from Wisconsin. A little. Have you been to Kohl's lately? Decent IV headed for bankruptcy or buyout. How's about a call ratio in September? It's a cheapie, but then so am I. KSS. No,
Kohl's down 18 cents. Remember Kohl's had that big run up.
Yeah, wasn't it like $22, $20 the other day, or 18 bucks?
Yeah, about a week or so ago. Yes, that is correct.
Meme stock mania is dead. What does he want to do here? Wants to buy one. Let's say in SEP, you bought the 12.5s. Sold the 15s.
Mm-hmm.
I mean, let's have a little fun with this. Buy the 11s, sell the 14s, and then let's buy some cheapies out of the money, like the 19s, and do a broken wing. A broken wing. I'm just gonna butterfly this off. Ghost of Maxwell Milwaukee. Milwaukee. Oh, I'm sorry. I was like looking at that thing. I'm like, what the hell is this? Milwaukee, Wisconsin. We got a comedian. Milwaukee, Wisconsin. Got it. We'll try this little crazy booterfly. I'm thinking I made it into a broken wing. Oh, 43 cents right at mid price. All right, we'll take it.
Wow.
Let's keep going. Let's keep the game going. Milwaukee. Sean from Hong Kong. Thanks for keeping it real, Sean. Microsoft neutral weekly options. I'm neutral, slightly bearish in Microsoft. Prefer the weekly options to capture the inflated implied volatility. I agree with you, Sean. I just sold some crappy calls in there. Just have something on so I look later on. So I don't forget. Stock's up 13 cents. Go to the weeklies. I like the 2 days in here as well. I like the 550s. I just sold them at 60 cents. They're now 57 bid. And what does he want? Slightly bearish. I'm agreeing with you. I'm going 2 times the expected move. So $20 out of the money is $550. $20 the other way is 470. Let's say that's gonna be too cheap. Yeah, they're too cheap.
Way too cheap.
Everything's too cheap here, man.
Yeah.
The expected, these things are trading at 4 times the, I'm sorry, at 4% move. I really don't love it, Sean. I mean, 475, 550 for a buck, $1.02.
And
a $1.03. Why, you hate it?
Yeah, I mean, it's all right. It's used
I don't like it either, Sean. I just did it small, just to have something on.
Yeah.
Because I want to put something on here too. I'm hoping they pump in a little premium here this afternoon, because I don't like a 4% implied move. Let's go to the next slide. Ajit from Chicago, CDNS. What is that, Tony?
Good question. I don't know. CD.
Oh, Cadence Design.
Oh, Cadence Design. Like you've traded it before? Like you know this?
No, I'll tell you a little story. So when we first built Thinkorswim, this was an $11 stock.
And it's 370.
370 now. But when we first built Thinkorswim, we were doing a live show in Vegas. It was 2001 at the latest. And we were doing a live show in Vegas, and I was trading and doing all this stuff. And a guy walks up to me, and he taps me on the shoulder, and he says, "Hey, can I talk to you for a sec?" I'm like, "Sure." And he's like, "I got a fairly big position in this one company that I'd never heard of before. It was Cadence Design." And I said, "Oh, sure." I go, what's the question? It was $11 stock. And he's like, "Well, I'd like to sell some calls against my position, but I'm not really sure, what strike, and they don't trade that much." And I'm like, "Yeah, this is a tough one because there's not enough volume in here." But he's like, "More importantly to me, I really want to learn about options because I think it'll be good." And I go, "What do you do for Cadence?" He goes, "I'm the founder." So I go, "Oh, that's cool." It's a publicly traded stock, New York Stock Exchange. And we became friends back. This is like, yeah, I lost contact probably, 10, 15 years ago when we sold Toss, but super nice guy, really crazy smart, obviously. And I remember the stock was about $11 and he wanted to learn how to trade options. And hopefully he looks like he's done amazing. Stock at 370. Hope he still has
he's done amazing. Yeah. I think he's doing just fine.
Anyway, Ajit, let's see what you got here. September expiration, 15 delta or close to it, 340, 405. Let's take a look. SEP, 340 puts, 405 calls, and stock's up $3 today. 330. Sorry.
It's okay.
330, 405. Mid price 780. Let's take a look. Puts are $1 wide. Calls are $1 wide. I don't know how this stock trades, Ajit, so I got to play around with it for a little bit. I got to see, you could be right on your price at 750, but let's see what we can. It looks like you are right on. And what's funny is the stock, the prices were really wide and they still are. So this is not an easy fill. If you're going to trade this, you got to do it small and you got to do a little price discovery. I can't get filled there. I'm trying.
Yeah, I'm looking at the markets in September here. They're quite wide, Sosnoff.
Yeah.
$2 wide. I mean, there's some volume. I mean, there's some trade.
A little tiny bit.
They're quite wide.
We're working it, Ajit. We'll see what happens. Let's go to the next slide.
I'm working it, boss. I'm working it.
I started at 775, went down to 750. Now I'm at 747. Nothing. Carn Dog From Anaheim, California, looking at ETHA. I have a position on an ETHA. So far, no bueno, dude. No bueno. ETHA, current position is we are short the 25.33 strangle. Crypto look good.
What do you think about that?
Okay, so Corn Dog, I actually like this particular underlying. It doesn't trade great. It trades okay. If you're bullish in here, I would just sell puts. I mean, yeah, it's a $28 stock. I would just sell puts. I think ETH is way too expensive right now. It is the least. It's not interesting to me at all. In fact, I'm a small seller here. Not sure what it's doing today, but
Ethereum unchanged exactly, Sadnov, but it's sitting at 37.80, which is
we've been selling it between 37 and 3,700 and 37 and 3,800. We've been selling every single day. We've been dripping a little bit out of our longs, and so I'm not a buyer here. Sorry, but I am short some premium in there, and with a 50 IV rank, I'm happy to sell a little juice. I have the 20. What do I have on SEP? 25, 33. I could do the SEP 25, 34. Have a little fun with that. Let's see if we can get filled. I mean, it trades a penny around mid price. All right.
Good.
Take a fill, Phil.
229. You are correct.
Yeah, nothing done in cadence. It looks tough, Ajit. They moving those. They just took the bid down 30 cents.
Markets are too wide. Markets are too wide.
Let's go next slide. Got to give us liquid stuff. Max from Houston, Texas. He's bearish in Netflix. Sell the 1240, 1250 to finance the 1,000 put.
Yeah. For 38-cent credit. He wants to buy. He's bearish. So I think he wants to buy the puts. Sadnov.
I know he does, but I can't do April. I can't do August because I just rolled. So let's see what does he want to do here. He wants to do the 1240.
This would be considered a stupid, right? Not because it's a stupid trade or a bad trade, but it's because two bullish or two bearish strategies. In this case, it's two bearish strategies. Selling a call spread, bearish strategy. Buying a put, bearish strategy. It's really just balls to the wall, bearish.
Yeah. The other problem with this trade, just to be fair, is the strikes are $20 wide.
And Netflix is up $6, although it's on the lower end of its most recent range, Thomas. Right?
Yes. Okay. So if I sell the 1260, 1280 call spread and buy the 1,000 put, well, I would have to do the 1240, 1260 to do this for a credit. But then if I do the 1260, 1280, I'd pay 29 cents. I'd rather pay 29 cents. 30 cents.
31 cents.
I might have to 30 cents. All right. Nice. I almost did your trade, Max. I sold the 1260, 1280 and bought the 1,000 put. I would never make that trade on my own, so it's probably going to be a good trade. Let's go next slide. I would never do that. Aaron from Waxhaw, North Carolina. Lulu. Stock is beat up. It's time to get long. This stock has been killed. But Lulu is a criminal organization, just so you know, run by a racist Nazi. Founded by a racist Nazi.
I didn't know Sweeney, whatever her name is, founded that?
No. It's some guy.
Oh, okay.
But I don't think he owns it anymore. I think he sold it or something. Ron.
But you're still holding a grudge.
I'm still holding a grudge. Yeah. Let's take a look here. Bullish 45 days. Stock has been myrtleized. Tony, this stock was up to 400 and something. It's now 200. It's been cut in half.
Yeah. Lulu just recently, and I'm talking about back in February, was $420 or something.
Now it's 200. So I understand the play here.
Yep.
Stock's beat up. It's time to get long. Ivy rank is 40. When's earnings? September 4th. Long time away.
You are correct.
I think you go for, man, the market's in here. They're all right. I think you go out to the expected move. Expected move's a little over. I think you go to the 170 puts and you just sell them. Mid price is 250, 250-ish. Let's do a little price discovery. Let's try 250. 250 it is. 250. 251.
251 Sadnov credit and Lulu. By the way, Sadnov, this happens to be a Lulu shirt.
You should be embarrassed. Let's go to the next slide. Ashamed of yourself. Jack G. App short, put vertical. APP.
Yeah, you know me.
APP. What has this stock done recently? We do have positions on in there. It's gone sideways.
It once a mighty high flyer, now kind of mid-range at $365. Got up in February to 500, got down to around 200, 365, right? Kind of in the middle of that range. So not
bad. We have the 270, 280, 400, 460, 470 Iron Condor on. And he wants to sell a put vertical. Well, actually, this will fit into my position quite nicely. So I'm going to sell out a put vertical here, which will kind of normalize my position as well.
Man, the evening S&P had a tight range this morning.
I'm going to sell in here, Jack, the 310, 300 put vertical because it actually fits my position. I just don't know what price I could be filled at because this is not these markets in here. As Tony would say, no bueno.
Yeah.
$1.14. You could probably get $1.15. I'm sorry. I did a roll, so I bought back an old one that I was short and sold another one. So I'm not exactly sure where this one would trade. Looks like about $2.82, $2.84 right in there.
You widened the strikes to an existing position you had on.
So I sold a put vertical. I sold the 310, 300 short put vertical. Let's go to the next slide. John, next slide. Hello.
There we go.
Roberto, aka the ENPH Maestro. It's not Maestro, Mastro. South side of Chicago, Netherlands. I have no idea what I'm doing. That's for sure. Short the August 33 puts, long the October 30 puts for a debit of 69. Plan to hold the short leg to expiration and either close full position for profit or roll the put to September. Well, I'm already long.
Everybody's got a plan till they get punched in the face, Sadnov.
I'm already long ENPH. This stock is a pig, but I do like the idea of selling the SEP.
It's on a 6-day bender, Sadnov. 6 down days in EMPH, making new lows here.
You know what? You can't do it. They only have 5.1.
You gonna be bearish in this, Sadnov? 6 down days in a row and a new low. You gonna be bearish on this?
No, I'm not bearish on here.
Oh, okay. Well, talk to Roberto. Set him straight.
I'm gonna buy what he said, the October 30 puts, and I'm gonna sell the SEP 35 puts. I'm gonna go long here. I'm gonna go long.
Take that, Roberto.
No, he wants to be long. Oh, he's bearish. How is this play a bearish play?
Welcome to the show, Sadnov. I tried to tell you.
Oh, we're fading you, dude. I thought you were bullish. The stock hasn't had an uptick. The stock has been myrtleized. After earnings, last time it went from like 80 down to 40, 35. This time it went back up to 45 and then now down to 33. Now you got to trade it from the long side here for a cheap shot. Let's go to the next slide. Jared from South Australia. Okay. NVO bullish. Or just get the Ozempic, short the 50 puts. Give me that $2 premium into earnings from South Australia. How can we let the dude down? And
why? We've let everybody else down, Saz. No,
that's true. Well,
what makes it special?
It's a good day, Jared, because the stock's down 260, and we like selling puts into down moves.
Right about.
You do the 45 puts for 81 cents or the 50 puts. The 50 puts are, well, if you like the $2 premium, you're going to love the 260 premium. This one has some volume, Tony.
Yes, it does. Yes, it does. What you going to do about it?
I'm going to try to get a fill, but at least this one looks like it's tradable. 258. All right, so I got 58 cents more, Jared. I'm in the game. Let's go to. Oh, that's it.
That's it, my friend. You did everything.
We didn't do cadence design. We did.
Well, I mean, you did all the trades. You went through them, and it wasn't.
Yeah. Joby, which I think is the helicopter Uber for helicopters. I think. KSS is Coles. We did a broken wing butterfly in Coles. In Microsoft, we sold a cheapy strangle in the weeklies. In ETHA, we sold a strangle in September. In Netflix, the super bear. That means we sold a call spread and bought a naked put. In Lulu, we sold a put. John, that's a sell put. In app, we sold a put spread. In ENPH, we did a diagonal. You can change that. So that's a diagonal. Thank you. It was actually a bullish diagonal. And in Lulu, we sold naked put. And in NVO, we sold a put. So NVO is bullish, ENPH is bullish, App was bullish, Lulu is bullish, Netflix is bearish, ETHA is neutral, Microsoft is neutral, KISS is bullish, and JOBY was bearish.
Look at you, all over the board, Sadnov. Great job.
Well, we got some new trades. We got some live trades. It's cool.
Mm-hmm. Yeah, we certainly did. We certainly did. And even the S&Ps haven't moved. They're up 350. But we'll take a quick 90-second break. You want to? We can come back. We got, oh, joy. Jacob is here. The skinny on options math. You want to do that?
Bonds haven't moved. S&Ps haven't moved. What's moving?
Jacob, next. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that, and I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With this man, Jacob's in the house. Is skinny on options, Matt. What's up, Jacob?
Morning, Tony. So much, I'm in New York this week visiting my mother, so it's got its pluses and minuses.
Hi, Mom.
Yeah, you can say hi.
How's New York right now, other than being hot?
Yeah, it's incredibly hot in the city. I'm actually out on Fire Island, where it's hot here, but at least there's an ocean and a beach, and so it's pretty nice.
It's a dry heat.
No, it's wet. It is a damp heat for sure. It is humid, but it's not so bad. You can get in the water.
Nice. And get in the water.
Right after this, I'm going to the beach. So my life's not so bad.
Good.
Mm-hmm. Sweet.
But first, I wanted to talk to everybody at home about all the things you can consider when you're starting to place a trade. This actually grew out of, I got a number of emails asking about some of the statistics that we use at the end of trades on market measures, your average P&Ls, your average winners, your win rates, sort of wanting to unpack those. And as I started going into those, I realized that it was getting to be too much, and I needed to split it up into the things you look at before you start the trade and the things you look at after the trade. So today we're doing the things you look at before you start the trade.
I like it.
Which should be, pretty old hat to you too, but I just thought we'd give it out in sort of a nice compact form for viewers at home too. Maybe aren't as experienced as, you old folks.
Mm-hmm. Let's do it.
Let's get into it. Oop, maybe not focus.
No worries. Take your time. Take your time.
Options trading is, risky and complex. And Tom, you've made your whole life off of the idea that even idiots out there can do it on their own. So, towards that end, we're going to try to unpack the sort of things you look at. Now, this is skinny, so we're not going to cover, underlyings, types, size, strikes, expiration, all the things that are in that standardized, risks and characteristics of standardized options, the thing that everyone's supposed to read before they do anything. We'll assume that that's covered. What is a put? What is a call? Do you sell it? Do you buy it? Picking your strike, picking your expiration. These features are already there, but what are the actual things you do to evaluate the underlying and pick your strike? How do you actually pick your strike and your expiration? These sort of things. So we'll get more into that today. That's what we're going into. So let's look. One more foot. Yeah. So I think the sort of the most important thing that one wants to look at is, as an option trader, especially one who wants to be able to get in and out, is liquidity. Right, a lot of sort of whether or not something is tradable. You can have whatever assumption you like. If it's not liquid, you can't act on it. And conversely, if an underlying and an option is sufficiently liquid, you can do anything you want with it. You can make your assumption it's going to go up. You can make your assumption it's going to go down. You can make your assumption it's going to stay still. You can make your assumption it's going to move big, but you don't know which way. You can do anything you like if it's liquid. And there sort of are three principal ways to look at the liquidity of an underlying and they're all in the platform, of course. Volume and open interest are sort of the two most classical ones, right? If you talk to someone who's very old, they're what they'll cite as your liquidity measures, right? And those are just how many contracts have traded and how many standing offers are there currently. And those are okay, but they're a little old-fashioned. I think better for our purposes, most cases as retail traders, is to look at the bid-ask spread. Right, and the bid-ask spread in its most raw form is just the difference between the current standing offers on the buy and the sell side. And what you want to think of that as a retail trader is that's the market maker's edge, right? It's what they're insisting they get paid for every contract that they buy and sell in complete cancellation, right? And since we're not market makers, we want it to be as small as possible. And in good underlyings, they can be a penny, it can be a nickel. They can get pretty small. But as we've pointed out before on this show, the raw number of the bid-ask spread isn't really as good of a metric of liquidity as it's the percentage of the value of the option. Right, that a $1 spread on a Tesla option that's a $1,000 option is a very tight market, whereas a 5-cent spread on a way out of the money option that's that's a penny option anyway can be a full 100% of the option price in the spread. So I think a key feature and this is one of the reasons that you don't want to trade too far out of the money. You don't want to be trading really cheap options is because a super cheap option, the spread is going to be a large portion of the option price. And so you're giving up a lot of your potential profits into that market maker edge. So you want to try to stick to things where the bid-ask spread is a very small fraction of the price of the option that you're trading. That said, some underlyings will have bigger spreads, but in practice, you can get filled near the mid price all the time. I don't know how to identify. There's not really a good theoretical way to do that. You have to ask. This is where Tom and Tony have to come in for you and help you out to let you know which are your good underlyings, where even when there's a kind of what looks like a big spread, they're sufficiently active that you can get filled near mid. And then, looking at the volume and open interest can give you an idea about where those are. But otherwise, a good practice is just be stubborn. Put in your limit order and don't be willing to adjust it too much, because if the spread is big, you don't want to be caught on the wrong side of the spread. All right, you've identified a liquid underlying. It's got a nice option limit. How do you keep evaluating? Is this a trade you want to make or not? You've got your assumptions, but let's keep going. We're liquid. What's volatility at? This is sort of going to be a two-part piece. First is sort of the raw measures of volatility. Because of what options are, right? Options are the right to buy or sell the underlying at an agreed upon price later. Their value primarily comes from how likely the strike is to be crossed and how far the strike is to be likely to be crossed. And that means that volatility is the sort of the king of determining their fair value. Implied volatility is the Black-Scholes volatility that would make the current option price correct. So that means that you're assuming that between now and expiration, it has a constant amount of instability or fluctuations, right? You don't know where they're going, but it's constant. And if you invert the current price of the option, that gets you one volatility that, if constant between now and expiration, would make that option price fair. And that's your implied volatility. It's sort of the cornerstone of what is an option price. To give it a little bit more robustness, we often turn to IVX, which is presented to you in the platform, and that's just a weighted average of the at-the-money implied volatility and a few nearby strikes, which helps it be a little bit less sensitive to like a sudden shift in one of the markets and be a little bit more stable. Alternatively, there's VIX-style implied volatilities, where it's a much more elaborate a linear combination of option prices. It's worse for people thinking about it, but it's better for regulators where now it's an actual tradable instrument. The VIX does it for SPX. There's and 30-day options. The VIX 1D does SPX and 1-day options. There's a few others that get published on other popular underlyings, like the VXN is a VIX-style computation, but for the Qs. And all those are fine, but they don't give you any context, right? That just gives you a number about how much you expect the price to change. To actually turn that into sort of a useful piece of information, we're going to look at contextualizing volatility on the next slide. Thank you. Which is, how can we use this implied volatility? Well, there's sort of three numbers that I think are very useful to pull out of your implied volatilities. The first and kind of best one is the expected move, where you take the square root of the time till expiration, because volatility is annualized, so that tau is time till expiration in years, and square root because that's how Brownian motions scale with time. It's called Brownian scaling. We've talked about it before. Times the current spot price times the volatility gets you the expected move, right? What a one standard deviation log return, but that's fudgeable. What a one standard deviation move would be between now and expiration, right? And if you're in a normal bell curve world, that's the 68th percentile for the size of the underlying, but size of the move. But historically, that tends to overestimate. So it can be a nice way to give yourself a little bit of buffer room, is to place your trades based on the expected move. And this is an alternative. You know, we haven't talked about the Greeks yet. That's the next slide, but oftentimes we'll sort of have a preferred delta that we're looking for when we want to pick our directionality. But you can substitute that with an expected move, right? Maybe you want to trade one expected move out of the money, maybe you want to trade 1.5 expected moves out of the money, and you can figure out what's comfortable for you, but it gives you a context independent of the underlying, right? Your SPX is a $6,000 underlying with a 15% volatility, versus your, PBI is a $10 underlying with like a 3% volatility. But both of them will let you sort of figure out what's a similarly out of the money or in the money position by putting it in terms of the expected move. That lets you help you pick your strikes. In terms of identifying whether or not this underlying is appealing to you, I think the two best things are the implied volatility rank and the implied volatility percentile. Implied volatility rank gives you sort of a direct measure of, are these prices on these options high or low compared to how they've been over the past year, right? Which can give you both a judge about whether or not you expect them to come back down or go back up, but also just how much are you getting paid right now for selling such an option, right? The higher the IVR, the more you're taking in as credits, which is nice. And then the implied value percentile, which doesn't tell you anything directly about how rich those options are, but does give you an idea about how frequently they've been above or below the current level. And so if you have a high implied volatility percentile, that means that over the past year, it's usually been lower than that. So you maybe are more confident in selling some premium because you think to yourself, it's very rare that volatility is this high, this underlying, if it's in its 99th percentile. So maybe you can expect it to come back down, and your options will get cheaper even if you're directionally not that correct, even if everything sits in place. So those are your volatility metrics. And then we'll do our last one is to look at the Greeks that you would consider on option entry. And we're going to narrow it down to just the three most important ones: your delta, your gamma, and your theta. Delta is the sensitivity to spot price. It's, roughly speaking, how many shares is equivalent to your current option. Now, of course, this is limited by calculus. This is an instantaneous relationship, right? It's how many shares you're equivalent to on a very, very small move. As the move grows, gamma will come into play, and delta will change over time, and you'll get a square factor of gamma. Gamma times a square factor of the price change. So if there's a big move, the gammas will represent your directional assumption getting out of whack, probably. But delta gives you your initial directional assumption. Gamma gives you the stability of that directional assumption. And then theta gives you how much you expect to profit should the underlying and volatility not change. Of course, they might change, but between gamma and delta and theta, they have a direct relationship, right? Options with high gamma also have high theta, which means that they are useful as risk metrics, right? Gamma is the risk of your directionally neutral trade, right? It tells you how much you expect to become undirectionally neutral as the underlying moves. But that can be confusing to think about because it has this square factor, it's an acceleration, and it's not comparable between underlyings. However, it directly relates to theta, and since theta is measured in dollars per time, it doesn't mention the underlying at all. So you can compare all of your thetas across your whole portfolio and get an idea about sort of your total amount of risk you have on, which is a nice way to sort of judge your portfolio's exposure to the market, even when, maybe your total deltas are zero, but if they're really unstable, right? If it's you could have a ton, you sell a bunch of straddles, you might have zero deltas, but you've got a lot of risk because if things move, gamma's going to come into play and you'll pick up a bunch of deltas, and that'll be visible in your high theta. But again, these are the limits of calculus, is that these are all mathematical derivatives, which means that they're instantaneous linear approximations. So they're going to be very accurate over small time scales, right? In a short time or small price move, they're going to be almost exact. But if you wait a long time or there's a huge move, you'll see them come a little bit unpegged from your expectations. And so this is one of the reasons that you have to stay attentive and active, even if you liked your trade at the beginning. You want to see how the Greeks change over time because they're not going to be constant, and you need to be a little bit responsive and available. But if you take all these factors into play, your liquidity, your volatility, and your Greeks, you can really identify a trade that will do almost anything you want, which is, I think, the point of your What's Your Assumption segment, is that no matter what it is the person thinks, we can make an option trade that will do that, which I think is a very, perhaps the most powerful feature of it, is that you can do anything you want, provided you have the flexibility and knowledge. And that's it for today, I think. Let's do takeaways.
Good job. Even I was able to understand this, Sosno.
That's what I was about to say. Even I can understand this one.
Yeah.
You promised me I would be able to understand this, and I was able to understand this. So I appreciate you not lying to me today like Sosnov does occasionally.
Occasionally. Every word out of his mouth.
Hey, Sosnov, you know what time it is right now? That's right. It's time to bring in my friend and yours, Mr. Scott.
No. He's got to do his takeaways. Calm down, Sparky.
You're too excited there. Versatility of options trading compounds with the variety of underlyings to give you a dizzying degree of flexibility. And so we're going to need to narrow our focus down in order to be able to make informed decisions without being overwhelmed. And I think that for that purposes, liquidity and volatility will help you identify what are attractive options markets. And then you can factor that into with the Greeks, and if you have a directional assumption, you can pull that in as well. And that'll let you construct a trade that does exactly what you want. So first, look for liquidity and volatility to find what a good market is, and then put in your directional assumption and make sure that the Greeks match with that, and you'll find the trade that does exactly what it is that you set out to do. And that's the best we can hope for. And some will be winners, some will be losers, but at least you'll know what you're getting yourself into.
Somebody that's tuning in for the first time today is actually going to think you're normal.
Yeah. Give him a false impression.
Yeah. I like it. That was good.
Nice.
Very good, Jacob. Let's take a quick 90-second break and come back. Now we'll bring in my friend and yours, Mr. Scott Sherry, immediately following these messages.
Out to the beach, Jacob. Out to the beach.
I am. It's hot here. I gotta get in the water.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's gonna take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
They don't subscribe to cherry bombs. Oh no!
You better scrub your phone, honey.
Oh no!
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's.
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit?
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Every day.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with this man. Tasty Trade World Headquarters, your friend of mine, the very popular Mr. Scott Sheridan from the Scott Sheridan Studios.
I have to start by saying how touching the disappointment on your face was when you were introducing me, saying I was coming up next, but then you forgot to go to whatever the final piece was for Jacob. So
the final slide, yes.
Thank you.
See, you're the most favorite part of my day.
I appreciate that. I don't believe it, but I appreciate it.
No, it's true. It definitely.
So we were having a conversation. I don't know if you could hear, but between the Cubs and the Bears, somehow the two teams in Wisconsin own the Cubs and the Bears. It's just, it's amazing. I mean, the Cubs, they got to go up to Milwaukee. They can't win a game.
Not only can not win a game, they look horrible.
They look horrible. If they go into a slide right now and like
Milwaukee's won like 25 in a row.
I understand, but it's the Cubs. I can't handle it again. Like this, my whole life, it's been wait till next year.
Oh my God, they're 2 games out of first place. Calm down.
But that's the mentality of a Cubs fan.
They have the second best record in the National League.
I understand, but it's the mentality of a Cubs fan. You're just waiting for something to happen and go, oh yeah, we forgot how to play.
They lost 2 games in a row. Yeah, they'll be fine.
Ugh, can I just have a moment here?
They're going to win today.
They're going to win today?
I think so.
All right. Appreciate it. It's a day game.
Remember the time we went to a game in Milwaukee?
We did from the golf outing. It's great. We sat right behind home plate. It's good. Yeah, it's good. It's nice stadium.
Have you been there? Good stadium.
It's a nice stadium, and when you watch the game, it's got to be 50.
Pfizer?
No.
That's the basketball.
That's
Miller,
bad.
It's like the Miller Light. I don't know.
Oh, yeah.
Pfizer.
Miller Park or something.
Yeah, Pfizer everything's basketball.
Yeah.
It's really nice.
It's nice. It's a nice stadium.
Yeah, they had the roof shut that day. It was nice.
Yeah. I mean, back in the day, tickets were reasonable. You can't get tickets to anything now that are reasonable. I mean,
and they got the thing that runs around. What's the thing called? Flash or whatever it's called.
Oh yeah, where they race the like a person from the stands or something.
Wait, seriously, you understood what he was saying? The thing?
Yeah.
I haven't seen it in person, but I've seen
it is like the
videos.
brat. I think it's a brat.
The sausage race, not a brat.
Brat, sausage, something, whatever.
Sausage race. It's good.
Speaking of sausage, I had the burger at Publican Quality Meats last night. They do burgers on Tuesday night.
Yeah.
At PQM or Publican?
PQM.
Oh, okay. Was it?
So it's a charity thing.
Okay.
Where they have like celebrities come in. So you'll appreciate this. Let's see if you know this is. There were 2 celebrities. One.
Is this invite only? Is this like a
No.
Can I do this?
No, anybody can
2 celebrities. Go ahead.
Joe Shanahan and his wife.
I don't know who that is.
I don't know who that is.
Yes, you do. He owns Metro. So
I don't know who it is.
Okay. The
I
other
saw
one.
Joe Shanahan on the street. I wouldn't know who the hell it is.
Okay, how about Rick Cooper?
Rick Cooper, Jules' brother-in-law?
See, I told you you'd know who that one was.
He's a celebrity now?
I guess. Donnie Medea, the guy that owns it. So he owns a VAC and Big Star and, whatever.
Perfect. Jules can ride that coattail now for them.
Yeah, he owns Publican.
He's been riding that coattail.
Good.
Yeah.
No, I know.
Sorry about that one. That was a little
I wouldn't
ball.
consider him a celebrity.
I'm sorry. I'm sorry.
Jules?
I mean, the man's not even here to defend
I
himself.
I'm beating his dead body wherever he is.
Wait, who's the celebrity?
Sorry, Jules.
Jules?
No, Rick.
Oh, Rick.
I wouldn't consider him a celebrity, but nice guy.
Yeah.
Super nice guy.
Yeah. So, but the burger was ish, meh.
What was the the burger? What was it
so-
calling for the burger? The sauce or is it smash burger or something?
It didn't know what it wanted to be. It
Okay.
wasn't a smash
Can't do that.
burger.
You got to be decisive.
Yeah, it wasn't this and it wasn't that.
Okay.
You got to be. I agree with you.
Right, you gotta be decisive.
You got to have like.
So I knew I was in trouble when the waitress took the order and I said, "Do I get to say temperature?" She's like, "No." I said, "Okay." Okay.
That's fair. I mean,
So I'm like-
everybody knows how burgers should be cooked, but it's smash burger.
Smash
it gets
burger,
a
no
little-
problem. But if you have a thick burger, I don't want a thick burger well done.
Yeah. It
Right?
should be just like
Juicy.
medium. Like it should be
Medium
like
rare.
medium.
Medium rare. Sometimes you got to
Was
roast
it good? I mean,
Oh, it's fair. So pickle, sauce.
Is it one
blue
patty?
cheese, one patty.
Okay.
So and it was like
But it wasn't big enough to be like a big patty.
correct.
And it wasn't small
So
enough to be
the
a
Rick
smash.
Cooper was queso and some special ketchup. Didn't get that one.
Okay.
And then the other one was a turkey burger that the Six and somebody else shared.
Ah.
Oof.
What was the
Turkey burger? It was like a hot dog turkey burger, so it tasted like a hot dog. So
by the way, that is the worst celebrity outing I've ever heard.
I'm not disagreeing with you.
You should do a burger pop.
That is not a celebrity.
Yeah, I'm not disagreeing.
Bad coffee burger pop.
That's like
that would be
that's like going to get a burger and it's like Scott Sheridan.
Right.
Yeah, that's not good.
So, not a bad idea.
And you do it with the sourdough. You do it on the sourdough
Bring
bread.
the Blackstone.
Yeah, Blackstone.
Over.
Yeah.
Set it up outside. I'll do it with you one day.
Yeah,
Set it up
that could be a good
outside
thing
of,
for you.
Bad coffee.
Yeah.
Yeah, that's right. I'll just make burgers all day.
Right.
Yeah.
Gives you a purpose.
It does give me
good.
purpose.
How would you
Who's
do
the guy over there making the burgers? Don't worry about it.
You put your spicy mustard.
No, I got spicy mustard that'll kill you.
I know, but you could put that on it.
No.
Or you just put it on the patty before you throw it on the Blackstone, get that little char on it.
I'm saving the spicy mustard because I have a dish, a toast dish for it, but I can't get them to.
A toast dish with
You
spicy
can't source.
mustard?
Yeah, you can't source the special
I can't
mustard.
sort. Mustard's really hard to get.
Yeah.
How hard is it to get mustard? Where'd you get it from?
I ordered it online.
And they don't have more of it?
I mean, you can, but it's like there's no the little tiny jar. I can't make it work.
Okay.
I wanted to get
Because he's worried about the margins there. He's worried about dirty.
Not worried about the margins. I can't make money anything anyway.
I know. It's
Go have somebody replicate that?
I don't know. It's like from Australia or something or Germany.
He's not that high.
And they got. I'm not that motivated.
Give me the bottle. Let me see what I can do. I'm sure there's like mustard.com or something that will sell you any mustard you want to buy.
So it's like supposedly one of the hottest mustards in the world. So what I want to do.
What's in it that makes it so hot? Like ghost pepper hot?
I don't know.
Have you tasted it?
No. I mean, I tried one.
You haven't tasted it, but you know.
I tried one. I bought a couple different ones. I tried one of them.
And? Great.
It's hot. Yeah.
But hot, like blow your mouth out. You can't taste
blow your mouth. Yeah.
What's the point?
That's how he is.
Yeah, what's the point of that?
It's a test. So you come in there, you test yourself.
He's got no taste buds. He's getting old.
Here's what you do. I want to do it so it's like you come in, it's like a challenge. So you come in, you order a piece of toast you get pickles. I mean, not pickles. You get onions, mustard. Maybe
They did have grilled onions on the burger, which was a good touch, but go ahead.
and maybe a slice of cheese, and that's what you get on your toast.
You got a picture on the wall?
Is it open face or closed?
Open face.
Oof.
What do you win?
Then you have to have knife and fork.
You don't win anything. You just get to try it.
Well, you can't do that. You got to have it like, you finish it. It's free. You get a picture on the wall.
Picture.
Okay, speaking of getting something for it, you know the 99.99, whatever, 99.99, the 99 beers, 99 hot dogs.
Oh, yeah.
99
The Barstool guys did that. Yeah. With Joey Chestnut. Yeah.
Yeah. So
What they do? 99
a friend of
beers?
a friend of Lila's works with them. So we were at the game. They were on the rooftop across the street. Yeah. She was watching because they were live streaming it. So you got to drink
99 beers.
11. It's 11. It's 11
people
beers.
are drinking 99 beers?
It's 9.
I think it's 10
people. It's 9
or 9 people maybe.
I think it's 9 people. It's 11 beers, 11 hot dogs in 9 innings.
Yeah.
Oh, 11 beers, 11.
Oh, here it comes up. Easy. Right.
You could do that.
You could do that.
A beer and a hot dog per inning for 9.
A little more than that. I'll let you do 9. Forget the 11. I'll let you do 9.
He drinks like 1 beer.
How about this?
There's no
and you
way.
can't. And you can't throw up.
I'm not gonna throw up.
You could. You have no idea what it is to the quantity. 9 beers and 9. It's a lot.
Carbs.
I don't want to do it, but I could do it.
No, of course you could, because there's nothing you can't do. Okay, but anytime you want to put money on this, I got odds behind it that says you can't do it without throwing.
Well, the best part is that they had Joey Chestnut.
It's disgusting, and he was there.
But he couldn't eat the hot dogs. He was only beer.
How do you know?
So because he told them, he was like, yeah, I'll drink 20 beers. And so I think he drank like something like.
Isn't he only like 150 pounds?
He's not.
No, he's
not big.
no,
He's not big, is he?
But hold on.
Yeah.
Why didn't he want the hot dogs?
Because
that was just part of it.
And he probably didn't want to embarrass
If you bring him, he'll eat 60 hot dogs. Like
he could probably knock back the 99 on his own.
Yeah, over 9 innings, he does 70 in 3 minutes. In 9 innings, he can do 700.
That's fair.
It's
Okay.
so gross.
Yeah.
Ugh.
Yeah, but I mean, eating
11 hot dogs.
Well, if you here's what those guys do. They don't eat for the whole day.
I don't care. I'll let you not eat for 2 days.
Yeah.
Okay? You cannot eat for 3 days.
I don't want to do
We
that.
can put together a pretty good team here.
Okay. Of the people that I know,
I could do it.
TP might have a chance.
Not a chance.
Okay, yeah.
How about Q?
Yeah, we fly in TP
Maybe.
for that.
Q's,
Yeah, he could probably do it, but not
Q's pretty
TP.
strong with
Yeah. Not TP. He tried it once. He failed. A different kind of test. No, I don't think he could do it.
I think TP ate a quarter of the Costco chocolate cake.
Oh yeah, he goes wild with
Quarter
those.
of a Costco chocolate cake could kill you.
It's a strong effort. That's almost as
Or the Portillo's cake.
Yeah.
Oh, Costco.
Oh, yeah. It's almost
Really?
instant. It's got to be instant diabetes. Like you eat
Really?
it.
No, a quarter of a Costco cake is like eating a cake from Gibson's.
The Portillo's, I think the Portillo's cake shake is like one of the like most calorie dense foods you can
It
consume.
can't be any worse than
anything from Cheesecake Factory. Like you go to Cheesecake Factory, everything in the menu is like 25,000 calories. Ugh.
Careful.
All right, just let me know anytime you
I
want
haven't been to Cheesecake Factory in 25 years. Even though they're still open.
You know, it's funny.
I think they had like
There used to be
re-up.
one on the bottom floor, like the basement of the Hancock. I don't know if it's still there.
I don't know, man.
I got to look, actually. That's really funny. I have no idea.
There's one in like when we drive out to EJ.
Tony, there's got to be one by you. It's just, right for sure.
Every corner by him.
How many
Not every corner.
How many Cheesecake Factories by you?
Oh, at least 10.
We gotta go to your neighborhood, like in Skokie.
It's got to be at least 10.
Not bad. Not bad. All right. Well, I know you have better business to get to.
We're not better business than listening to your stories.
Not better, just different. Just different.
See, I appreciate that. See, Tom's got to pick on the stories. You get to say, right? I'm bringing.
Nothing's ever good enough.
Nothing's good as listening to Sheridan's stories.
Lunch tomorrow. He's going to be very happy.
What do we got?
What's tomorrow?
Dave's.
Oh, yeah.
Ooh, what's today?
Pita pita.
Pita pita.
It's good.
Pita pita's good.
It's solid.
Yeah.
It's all right.
Good onions.
Yeah. Pita pita's good.
Yeah.
Solid onions, good tzatziki.
I mean, I have to say, probably the best thing Steve's ever done for us is Hubs.
Yeah, Hubs is good. Habanero grill, I think.
Pretty good.
Oof.
We gotta start.
No, I'm not. It was really salty.
Really?
The steak.
And then the problem was, I left to go have a meeting with you, and I went back to look at my plate, and I don't know what happened, but it like congealed.
Yeah, it's not good.
It's not good.
It's not.
They do send a lot of guac,
which is nice.
Their guac is good.
They do send a lot of guac,
and their habanero sauce is good.
They do have good sauce.
You gotta eat it.
Good sauce, but the meat is.
Yeah, no.
You know, you could be right about that with Steve. It's pretty pathetic after 35 years.
Hubs.
And all we got was one restaurant recommendation.
It's good though. I mean,
after 35 years, one restaurant recommendation. It's not exactly a good track record.
Hey, what are you gonna do? It takes everybody a while to get there. All right. Top 20 symbols going through the system. First 40 minutes a day. No broad-based indices or futures. Time for you number 20. Etsy. At a 14. For everybody else. Starbucks at a 7. Huh?
It had earnings. I think it's up like $2-3, something like that.
What are you doing in NVIDIA? I'm sorry. What are you doing in Microsoft today?
I don't know yet. I mean, I'm getting shorted because I hate Microsoft.
Probably gonna cower and be scared.
Cower.
Wait, what are you doing? Wait, let's hear what being scared means. I don't know what that means.
No, he's gonna be scared.
What's the play?
Oh, I don't.
What's the Nicky
He'll
Bap
probably go 100 points out of the money on either side. There'll be about 70, 80 cents. Look at these.
No,
juicy
what's
ones.
your play?
Oh, I got Iron Condors.
How far out? How wide? Within, just outside. It's like a $20 expected.
Don't hurt yourself. It's a Johnny account, okay? Okay.
It's like a $20 expected move. Are you within or out?
I haven't put on a trade.
Microsoft?
Yeah, what is it?
I don't have Microsoft. I have Meta. I'm doing Meta Iron Condor.
Is that today?
$50 out of the
maybe it is.
Bring up Microsoft. Tony, you have it up. What's Microsoft's expected move?
Microsoft has an expected move.
Like $20.
Yeah,
up, the cat's back.
$18 for the next 2 days. $18
$18.
Good. You must have been a market maker.
He's good. He's good.
So you're not telling me what you're doing, or you're not touching.
I don't have one in Microsoft.
Oh, you're
I have
not?
one in Meta. I haven't really looked at Microsoft. I haven't looked at Volatility.
You have time to.
You caught me a little bit, but my vibe is inside up.
I just read an article.
What?
Vibe is the most frequently used word incorrectly.
In what way?
In the English language. I
Why?
don't know. Somebody wrote an opinion piece. I'll send it to you. Vibe, number one word. Go ahead.
Oh no, you got me. You got me. Sorry. That was a bad vibe.
There you go.
Bad vibe.
So you used it again incorrectly.
I used it incorrectly, I guess. It's okay.
All right, never mind. You can let us know if you do choose to make a trade in Microsoft.
I told you I did Microsoft or Meta. I haven't looked at
understand that, but I asked you.
Do you want to talk about Meta? That's the one I got a position.
I asked
on.
you. You wouldn't say anything. All you said was Iron Condor, and he laughed at you.
Yeah, no.
All right, so anyway, Starbucks at 17,
God.
SoFi at 7, NVIDIA at 12, AMD at 34, Tesla at 6, UNH at 24, HIMS at 50, Meta at a 23. Visa at a 15, Marvel at a 35, PLTR at a 34, PANW at a 42, Microsoft at a 19, Apple at a 26, NVO at a 51, GLD at an 18, TLT at a 16, MAR at a 7, SMC at an 18, and number for, ooh, we like the ding, and number 20 for Tom, Etsy at a 14. And on that, I'm turning over to the real talent. Play some music.
Thank you, Scott.
Play some music.
Johnny Trades.
That's right. We got
Johnny
Johnny
Trades.
My son, Nick Batista. What's up, son?
Good morning, gentlemen.
Good morning.
Good morning.
Ready to rock?
Ready.
Did you record Truth? Or is today live? Because you got a big day with J Powell.
We'll be live.
Oh, you'll be live. Okay. Fun. Very nice. J Powell today.
I know. It's going to be not event.
All right. Well, I got a Dylan trade for the first trade.
But I'm long bonds here just in case.
Okay, there you go. I like it.
All right, go ahead. What do you got?
I got 3 trades for you. First trade, this is a Dylan trade, of course.
A Dylan trade?
Yes. He loves being short oil, long Tesla. But as I was talking with Chris yesterday, his rule is 3 days. This will be only the second day. So we're a little early on the Dylan trade, favorite child trade. I'm selling a little call spread here. If you look at oil volatility, Ivy ranks at like 30-ish. If you type in OVX:CGI, it's the VIX style calculation for oil volatility. It's at about 40, so it's relatively high.
Oil's had a
a great move to up to 70. I think you sell a little call spread here, play into the volatility a little bit.
Hi, what call spread are you selling?
I went out to the September expiration, the 17th. I sold the 76.5. I did a 25-cent credit, which is $250. Because of span margining, you get a little bit of margin relief here. It only uses about $600 in buying power. 75, 76-ish was kind of the high back when we had our little kerfuffle.
I sold it at 25. That's where you sold it, right?
25-cent credit. Yeah.
Okay.
It's about a 25-ish delta, I think, was the short option there.
Let's see.
You're correct.
Yeah, trying to sell to 26. Nothing done yet. Okay.
Cool.
25 filled, 26, nothing done.
There you go.
All right, cancel. Go ahead, filled.
All right, Meta. I'm playing this one for earnings. I'm going into the weekly expiration this week, doing just a cookie cutter iron condor, 50 points out of the money on either side, 650, 640, 750, 760. I did it at $3.14. There is a little bit of call skew. If you look at the short options here, they're both about 50 points out of the money. Calls trading for, an extra $1.
I'm just playing Meta straight to the downside.
Ooh, you fading the Zuck? Can't do that. Zuck, speaking of vibes, he's a vibey guy now. Zuck.
He makes me sick.
Makes you sick. Turncoat.
He's a trader. So anyway, I don't know.
Not like you.
That's right. So I'm fading this.
Kiss the ring.
He's a ring kisser.
He's a ring kisser. Yeah, a bootlicker.
He's a bootlicker.
Yeah.
I'm fading the Zuck.
All right. Well, good luck with that one.
Okay.
All right. Last trade. This is an interesting one. I met a person that works at this company, Tempest. You got a position?
Yeah, but we don't trade it.
Why not? Do you have a conflict of interest? You get an early investment there?
I am not an investor. Yeah. I'm just friends with the CEO.
So you got any inside info you want to share?
No inside info.
Hey, wait a minute. Elon Musk can come out and say the stock should be 50-fold what it's trading at right now. You can certainly put on a stupid little trade in TEM.
I'm not going to.
Wow.
Darn.
I
almost had him, son.
And to be fair, they're also investors in Tasty.
Levkowski is, not Tempest.
No, they are personally, right?
Yeah.
The two founders. They're friends. I'm not going to touch it.
Nikki, you can trade it because your father.
I have no conflict of interest because I am not of Sosnov's stature.
Where's the stock trading right now?
59.
Okay. I'm not touching it.
All right. I sold the 50 puts, $2.47 in September. It's juicy.
When Eric was starting Tempest, came to our office on 19 Sagamon, and he sat in a chair and he said, I got this crazy idea to build this company called Tempest. And he was with Christine, myself, and him, and he said, what do you think? And I'm like, I don't know. Like, it's, you're pretty successful, dude. Do whatever, whatever you want. And he's like, yeah, I've got this idea. I think I'm putting it together. He was just thinking it through in his head. Now it's like a $20 billion company.
He wanted to cure cancer, right?
Yeah, he wanted to cure cancer because I think somebody's family had cancer, and he was like, I'm going to cure cancer. That was what he said. I'm like, wow, if you could do this,
Well, I'm long curing cancer.
Good.
There you go. Good
I'm
job
rooting for them.
son.
Nice guys. Always been supportive of us. Always investors in our company. But I don't touch it.
Even the S&P is
Fair
up
enough.
11 handles. NASDAQ up 80. Russell up 16. Dow up 4. I mean, the Russell's strong, up 16 points. Volatility in by 23. And bonds down 14 ticks, 114.03. Sadnov, all that means nothing till about 1 o'clock this afternoon, Central Standard Time. We're going to take a quick 90-second break and come back. That's right, because at 1 o'clock we got Truth or Skepticism with Mr. Tom Sadnov and Dylan Radigan. Oh, yeah, and Jay Powell speaks. But right now, Liz and Jenny next. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Zierking. That beautiful brunette to the left of me is Miss Jenny Andrews. Second favorite day of the week, live from the SIBO.
Actually, my favorite day of the week because Wednesdays are usually a busy day. We've got an FOMC announcement today,
and I'm stealing this from somebody else, but this is the busiest news day of our lives.
What on earth? The busiest news day of our lives?
Well, not our lives, but they said it's the most important of this year.
Of this year?
Of this year, yeah.
Really?
I mean, with all the stuff, I guess there was some stuff out that came out this morning, and I don't know. I'm just stealing it from someone, and I don't believe it to be factually accurate. But
well,
that was a quote I heard.
Let's take a look at bonds because they've been movers and shakers today. Let's take a look at what's been going on and what.
Bonds are back down, right? So let's take a look.
They were. That's why I want to see. They got as low today as they were 113.29. So they got into that 113 handle.
I saw it lower than that. I thought
so too.
I thought
but
113.16. Maybe it was before the open.
That might have been before the open.
Okay.
So we'll see. We'll see what happens after the announcement today. What are you doing anything in bonds right now? Do you have any position?
No, but when I saw, now they're back in the they're teetering between the 113. Yeah. So when I saw them down, I thought, we're out of all of our bond position.
I know.
But I might wait until after. I don't think, and they just crossed that thing they're saying there's not going to be doing. When I say they, I'm looking at a news network on a giant TV screen, and they think it's not going to be an event.
Hey, according to Frank the Great, it's not going to be an event.
Yeah. But another news station said it's going to be the greatest news day of our lives.
Well, this morning when they were down, I thought of selling some puts and bonds, but I didn't do anything. I have nothing on right now in bonds. And in the market, we both put on our SPX Ironfly.
On the train, on the way here, at the appropriate time.
Well, early. It was early.
Well, at least it wasn't right at 8:30. That's what I'm saying. I waited as long as I can.
I looked at the clock when you put yours on. It was 8:48.
Yeah, that's what I'm saying. I waited as long as I possibly could. I was itching on that train.
So, because you got more than you usually get.
And I split I figured because there's going to be inflated volatility throughout the day because of it. So I did a $10 wide, but I actually split the strikes.
Yeah. I started with a put spread and then thought, I shouldn't do this again because yesterday my put spread turned into a loser.
Oh, yeah.
So then I added on the call spread and turned it into an Ironfly.
So inquiring minds want to know, Jenny, do you have to sing to us?
No, Liz, I'm always going to make you sing today. You said if Etsy were down its expected move, which was $6, I would have to sing what song?
Regrets. I've had a few.
Etsy is up $3, so I think somebody else might have to sing today.
I just gave you the bar. But I will say, you said you're not doing anything against it, and I know that you protected it yesterday.
Well, later in the day, I decided to do a downside ratio spread.
Correct.
I put on a downside ratio spread for nothing, but not against all of my stock because I didn't want to get so long if it did fall down. And I was a little nervous about it. I
I was very happy when I looked at Etsy and it was up, although I really did kind of want you to
sing. Well, I had faith. Now,
Frank the Great is coming in saying tons of bond options are trading today, too.
Tons of bond options trading. Okay, you know, we can. Why don't you pop back into ZB, see if there's anything in this 2-day. What
well,
kind of?
I mean, you could
I'm
do
just
ZB,
curious
you
where you could go if you sell the 113, 112 and a half, and then to the upside, 115 and a half, 116. You're getting $140.
So I have the 13, 12 and a half in, and you're getting $93.75. It's a $5 wide, so you almost need to do the top side.
You have to add the top, but I gave us extra room to the top. Right or wrong, I don't know, but you could do the 115, 115 and a half, and then you're getting 187, just risking 312.
So I mean, we can do yours. I'm fine with it. I wrapped it around, so that little dotted bar gives me some sort of peace of mind. It's a standard deviation line. I took both and wrapped it around. Now we're not getting much.
We're getting $156.
Saying that it's not going to be going anywhere.
Well,
pressing the button.
I don't know. All I know is Frank says a lot of bonds are trading. I usually like to play this directionally. When it gets low, I sell puts. When it gets high, maybe I'll sell a call spread.
63,000 bond options have traded, 15 times their average.
People are
15,001. We'll see if we can get filled.
That was low risk.
It's low risk. It's defined risk. That's playing an event there.
And usually we don't. Usually on these OMC days, we are not selling premium like iron condors in TLT or ZB. Usually we're not.
And that was one of the questions that I received is, do you not do, not even the TLT, but these SPX? Now, we both did it today, but we both risked very, very little. But so the question was, are we doing them on these days where it could move? And I have no problem if you do it in the morning because... Well, it is kind of like doing an earnings trade. It's kind of like doing a neutral earnings trade before earnings because that vol will keep its wings up until the...
Now, I did it.
Do you want to take a look at it?
I purposely did one side just to hope to get a pop up in the market and get out, and then I added on the other side. I'm going to take a look at... I'm actually going to take a look at mine because here, this is where we were when I put mine on. I just want to see if anything's come out of it.
Okay, so what we're referring to is the iron fly. Now, once again, on a day like today, there's the expected move for today. So we're in the 0 DTE SPX. The expected move for today is still $22.40. It's pretty big.
Well, I'll tell you, nothing's come out of it. Like, it's trading pretty much, it's like a $10 difference from when I put this on.
Yeah, nothing has.
So between 840 and now, it hasn't changed.
And so with the iron flies, because it's an iron fly, right? Not an iron condor you have?
Yes.
So with the iron flies.
And I've made mine a little wider, $15 wide instead of 10.
Which you usually can't get out during our show. The iron condors you can get out quickly. But when they're the iron flies, I mean, I'm not getting filled until after our show. I'm out.
I know, but
10%.
usually at this point, maybe you'd see a little bit out of it. $10, $20.
So mine probably is. I got filled at $8.50, and it's now $8.
Oh.
I don't even know if my strikes are the same strikes.
And I will say that...
But now it's $8. I think that was a lucky fill, not a...
You got $8.50 on it. That's a lot.
I think that's a lucky fill. I think that was some one lot who took pity on me and said, fine, I'll give you $8.50 for it.
5 minutes after the fact, you couldn't get in that trade for more than $8.15.
Correct.
So... Yeah, I think you got a lucky fill.
I got a lucky fill.
Yesterday was my lucky day. Today was your...
yesterday was awesome.
Oh, my gosh. Today's your lucky day, Liz. You got 35 cents more on your fill.
So I'll tell you why. We're on the train on the way home. Our conductor, I hope he's watching. So he was running a square pool for the Crosstown Classic.
I had, a month ago, he came up to us and asked all of us, does anyone have $50 I want to get in this pool? And I happened to have $50 in my pocket, said, sure, put my name down. I had no idea what the pool was even for.
She never even got the numbers. He texted me and not her. And then he came up and handed her a wad of cash yesterday.
Yeah, came up, handed me a stack of hundreds, and I didn't even know what it was for.
This conductor is going to stop asking us because the last time we were in a square pool, he had to come up and hand me a wad of cash, and I didn't know I won. And we're both like, what? I didn't even look at the numbers.
I know. So
he's going to stop asking
I
us.
have been on a lucky streak between my $9,000 casino hit
and
my yesterday's $700 for the Crosstown Classic game. I'm almost at 10 grand in winnings in the last week.
I still love when you made the $9,000 winning. You're like, well, if you take into account all the hours that I've been at this casino, if you don't quit one day, I was thinking, so your message was never quit gambling.
No, I don't think that was my message. I don't think that was my message. So anyway, I have been on a hot streak, and Etsy is just the trifecta.
We do have a lot to do today, Jenny, and I'm gonna let you kind of guide me because I'm running this. We have a Jacob study. It's part 2 of the Ironfly in depth, which is great.
I can't wait to see it because I missed last week. I was out of town, so I can't wait to see it.
On top. It does not pile onto last week's.
Oh,
He's
because
almost
it says
going
part 2.
Yeah, but part 1 was 2 weeks ago.
When I looked at and saw part 2, I thought, oh, this is going to be part 2 from part 1 last week.
No.
Part 1 couple
so
weeks
what
ago.
he has been doing, which I love, and I know Jacob's watching, so thank you for watching, Jacob.
Why do you think Jacob was watching?
Because he said, I watched your show, and you guys were very confused by something last week, so let me clarify this.
Hello, Jacob. We'll try not to be confused today. Thank you for watching.
You know what
our show.
it was? Well, let's jump into the study, okay?
Okay.
Can we do that?
Sure.
So I'm going to go in here. Zero DTE Ironflies in depth part 2. So I'm just going to give you a brief rundown, Jenny Andrews.
Got it.
Because in-depth part 1 was not last week, and he's almost leapfrogging weeks because he did the contrarian move versus following the momentum, but they were bookended
She's
by...
got a million 80s references today. First, talking about...
But that was the title.
No, the leapfrog. The leapfrog.
Oh, yeah. But he is. So he's taking them in kind of the in-depth Ironflies part 2.
Oh, no, that was Frogger.
Yeah. Yeah. Okay,
All right,
so
let's get into this.
Hold on. I'm just going to clarify this for you, okay? Just so you can see this.
I believe you that he skipped a week.
No, they have built on each other. So here, if you go in here, testing momentum in 0 DTEs, okay?
Okay.
And then 0 DT, this one here is the week before, so the 17th.
Part 1.
Yes.
There we go.
So in-depth part 2 is springboarding off July 16th of our show.
Got it.
Okay?
July 17th.
That's the boys. We're the 16th.
That was Thursday.
We did it on the 16th.
No, I know. I'm just saying that was Thursday. That was the weekend. That was the Thursday leading into the crazy weekend of our high school friend reunion weekend.
These are stories we cannot tell on camera.
I saw July 17th, and I got chills.
Got flashbacks.
Flashbacks.
Well, you were on the front line. I was not there. You were for sure on the front lines of this escapade. Okay.
Man.
But 0 DTE Ironflies part 1. So if you want to see it, it's July 16th of the Liz and Jenny show was part 1.
If someone missed part 1 and they want to check it out,
July 16th. Okay.
Okay. 0 DTE's part 2.
Part 2.
Are you ready?
I'm already in it.
One standout result for our 0 DT research has been the encouraging performance of Ironflies with aggressive profit targets.
Yes.
What profit target did you set today for yours?
10%.
That's what I set. 10%.
I'm staying with Ironflies 10%. I'm going to be tried and true. Okay. Last week, which means I know it's 2 weeks ago. I just want to say we focused on the impact of wing widths.
That's why I was confused.
Yes.
Because when I read this earlier today, when I saw last week, I thought, oh, it was last week.
It wasn't. That's why I figured I would clear things up for you. 2 weeks ago, we focused on the impact of wing widths, finding that wider wings profited more from slightly higher profit targets, around 35, though the limited downside of narrow wings may still leave them the overall most appealing trade.
Okay. Perfect. This week we extend our exploration by considering different volatility regimes. How do these conditions influence our mechanics? Let's dive into the details of Ironfly success by testing different widths and profit targets in a variety of volatility environments.
Yes, correct. Okay. And
love these studies from Jacob. And we need to talk to someone about packaging these up, putting a pretty little bow on it, and pushing them out there to the world.
That's one Jeffrey we're going to talk to. Okay. So the study, and this is where I know he's watching because he said you guys seem to be confused by this. Using over 2 years of data in 0 DTE SPX options collected every 10 minutes, he is putting the trade on at 9 a.m., but the closing orders are every 10 minutes.
Okay, that's where we were talking about the every 10 minutes. We thought this trade went on at 9 a.m. What's the every 10 minutes?
Yes, it's the making sure that you can get out at your profit target. So thank you very much, Jacob.
Thank you for clarifying that for everyone.
Yeah.
Excellent. All right, considered selling variety of DTEs, Ironflies at 9 a.m. Chicago time, plus or minus 5 minutes every day.
Yep. And then using VIX-derived IVR compared with the results in 3 regimes. So you've got low VIX, low IVR 15, moderate 15 to 25, or high IVR 25, over 25.
I kind of like this breakdown. We're working on something right now, and we just have low VIX, high VIX, but I kind of like this under 15, or then you've got the moderate VIX, 15 to 25, or you have the high VIX over 25, which that's what I would say is high VIX. Like, if you say over 18 high VIX, well, is it? It's average.
I think it's average.
So I like having 3 different categories here.
It is kind of nice.
High volatility over IVR over 20. And this is, honestly, this says IVR.
Yeah, that's what it says, using VIX-derived IVR.
So he's not using VIX. It's not VIX under 15. VIX
so
15,
this is
20.
SPX
It's IVR. It's IVR. And
let me just show you where that is. So what we're looking at here is SPX IVR of 13, because that's VIX-derived.
So this doesn't matter where VIX is. This is just IVR. So just comparing to its recent volatility. So VIX could be 14 and IVR can still be high compared to where it's been. So this is using IVR. That's something important to keep in mind.
It is something to keep in mind. So that's what we're looking at right here, VIX-derived IVR.
And saying over 25 is high, that's almost a new category, because we used to say over 35 was high.
Unless they're using VIX IVR here. Because I know SPX, the VIX is derived off the SPX prices, so I assumed it would be SPX IVR, but the IVR of VIX is 28. So technically, it's in the high range.
Well, he's using, it says, and Jacob might be calling us again after this show.
Call me.
So using VIX-derived IVR, so low volatility IVR less than 15. So he's just looking at IVR. So is he using, I think he's probably using SPX IVR or SPY IVR. Like if you go to SPX, what's the IVR?
It's low.
Yeah, so right now we're in 13, so we're in the low.
But it depends. Are you using VIX or using SPX?
No, I think he's using SPX.
But it doesn't
IVR.
say that. We'll get to the bottom of this. So we're not sure what IVR environment
No,
we're in.
I'm going to, if we're trading SPX, we're not trading VIX. If we're trading SPX, I think he's using SPX IVR.
Can you do me a favor?
Yes.
Because you are not plugged in. Go to your teams. And read what he said, because I think he clarified this.
Oh, did he?
I think so.
In Teams.
I glanced at it, and it was like 5 in the morning, so I believe he did clarify this.
Let me check.
Did you do it on your computer? No?
It was easier just to pull my Teams up here. All right, here's my chat with Jacob. Let's see, what is his clarification? Here's part 2 of the Ironfly Deep Dive, looking at different IV regimes. I use the VIX rather than the VIX 1 day because our 0DT data goes slightly further back than VIX 1
Okay,
day
so he's using the VIX IVR.
Had in volatility rank since it takes a year after it starts coming out. Also, I finally... Okay, so...
It's the VIX IVR.
The VIX IVR. Looking at different IV regimes, I use the VIX rather than the VIX 1 day.
Okay.
Because our 0DT data goes... VIX 1 day. So VIX IVR. So
here's the VIX 1 day, which it doesn't have an IVR. That's why he's not using it, because it goes back farther. So he's using the VIX IVR, which is right here.
28. So
the VIX is a 16, 18, but the IVR is a 28. So we're in a high IVR range.
Yeah, I guess so.
And it should be, because today there is something going on. Let me just go to the chart.
Which the SPX prices are... They're based on the VIX. So like the VIX and the SPX prices are one derived from the other. It's like what came first, the chicken or the egg. The VIX is higher, the SPX prices are higher. If the VIX IVR is higher, the SPX prices are higher.
We just wanted to take a deep dive into that. I think we got it. Okay. So for each regime and wing width, we identified the most successful profit target by net profits, presented alongside the 10% profit target results, known for the highest win rate.
All trades were assumed to exercise at mid-price.
Okay. Now here we get into the study.
So here we have the...
Any VIX IVR. It is VIX IVR. Okay, so we just cleared that up.
Yeah, so there. If we would have went to the slide 3, it would have
clarified it right away.
$10 wide, 10% profit, $10 wide, 20% profit. And then you have $20 wide, or $30 wide, or $60 wide. You look at these average P&Ls, and you look at the C-bar as well. $10 wide.
I'm telling you, I still like $10 wide. I like $10 wide, 10% profit. But you can retrofit this. You can look at this and be like, I would like to go $30 wide, 35% profit.
If someone just looks at the average P&L, well, they're going to say $20 wide, 35% profit. But if you look,
I'd say $30 wide, 35% profit.
Oh yeah, $30 wide, 35%. But then if you look at the win rate, if you go up to the top column and look at the win rate on the 10% profit, whatever one you do, $10 wide, $20 wide, $30 wide, the 10% profit, the win rate jumps dramatically.
Okay, but we need to clarify this because this confused the children. Average P&L for all of them means the same, meaning that if you let it go and it's a loss, you do it every day consistently, if you did it for 2 years, data collected every 10 minutes, your profit would be this. So somebody might look at this and say, I still want the $30 wide,
I still
35.
want the $30 wide, 35% profit target. They might.
Correct. So because that is, but that's been over 2 years, to me, I look at it and you got to kind of take these all with a grain of salt. I like the less conditional value at risk.
Well, the lower conditional value at risk, yeah, because if you've got 1,600 at risk making 103 or 250 at risk making 77, I kind of like the lower conditional value at risk. And then, or it's making 61 on the $10 wide. I do like the high win rates, the 70% or the 78% or 83%, because think of just your mental
stability,
happiness. Yeah, your mental health, right? I would rather be winning 78% of the time than 53% of the time.
Right. Now, I do want to say, so this was, it was very hard to put in an email, and I did talk through this with TP. I don't know that we were really on the same page with this, but let's just take the $10 wide, 10% profit target, okay? Okay. Somebody said if you win 70% of the time, you get $61.
There it goes.
On average. There it goes. There's ALO. There's our local celebrity.
Local celebrity.
Local celebrity. So if you Hollywood's his nickname, by the way. Thank you very much for reminding me of that. If you win 70% of the time, you get $61. She's like, if you do the math, and 30% of the time you have max loss of 257, that's not going to do that. That's not the case.
It's not always max loss.
And sometimes, if it doesn't come off for 10%, you might make 9%. You might make 5%. You might lose 1%.
Right. Yeah. So the numbers are the numbers. These are studies that we've back tested. The average P&L is the average P&L.
Correct.
But don't you going back to the whole mental health? Wouldn't you rather be winning most of the time than 50% of the time? Like, well, there was another loser.
You want to talk about for mental health? I don't want to lose $3,900 my first in any attempt.
First one.
Even if it's my 15th attempt.
Yeah.
Because I'm making $70, and then you're out for $4,000.
I mean, yesterday I did a few put spreads, and they went to max loss. I'll tell you, my mental health wasn't that good today when I put on my SPX trade.
She was angry.
I was unhappy. So, and when I looked at my SPX P&L, it got me mad.
It does. I know.
It did get me mad. So
I'm gonna have to black tape that for you.
I think I'm choosing high win rate.
I agree. Now let's go. So this is just the study with any VIX IVR, and that's what I've actually been doing, and that's what I'm trying to teach my son: is don't overthink it. Just at 9 o'clock, put the trade in, right? So that's I was like, don't overthink it. So that's what I'm hoping the conclusion is, but we'll see.
Well, okay, because here is taking it a step further. It's like, okay, we decided what trade we want to do, but now we have to factor in the VIX IVR. So now, if VIX IVR is lower, we're doing this trade. If it's higher, we're doing that trade.
Yeah, or
so
what profit target you're
I
taking.
get it. It's easier to not overthink it.
Because if you go low IVR and you still do that same one, your average P&L went up by $1, but your win rate went up by 7%.
And the win rate, it's similar.
They're the same.
The numbers are similar.
So I do know if you're putting on a butterfly, so if you're taking right here, and TP always says this, butterflies, when there is a low implied volatility, there's a better chance of your market staying there.
Staying there because the market's not moving around.
Unless it does move, and then you're going to have max loss.
Right. Yes.
Yes.
True.
Okay.
So I would think these are similar results.
Okay, so then
there's nothing jumping out at me saying, oh, when the VIX IVR is low, we have to do this one instead.
Correct. So no, yeah. I mean honestly, my eye line is saying it's still okay in low IVR. I'm still okay with my trade in low IVR. And for somebody else who's looking at it from the other one, say it's still okay in low IVR if I want the $60 wide for 10% profit. You're still getting a 91% win rate.
Can you go back one slide?
Sure.
So back one slide, we've got the $10 wide 10% profit, 61 average P&L.
And this is all IVRs.
And $20 wide 10% is a lower. I wanted to see if that was lower across the board, and $30 wide is lower. So it's crazy that you're taking more risk, but you've got a lower average P&L.
Yeah. Well, because you're taking more risk. So if you get a max loss, it's going to bring down your average P&L.
Yeah.
Okay. So then that's the low IVR. Now I'm going to go to moderate IVR. And still my eye line will go to, with a moderate IVR, with that bump in IVR, my go-to trade, the win rate went down, my average P&L went down, but I'm still okay with $53 a day. In moderate IVR.
In moderate IVR. And that's IVR 15 to 25?
15 to 25.
15 to 25. So here, some of the other ones I think significantly bumped up, though.
Yes. But not significant enough for me to have to teach someone to be like, hey, look at this, then this.
I'm just curious for myself because I did a wider iron fly today. And in the previous two tables, I thought, well, geez, I should have just stuck with the $10 wide. I shouldn't have done a wider one. But then here, where we have in moderate IVR, that $20 wide iron fly seemed to perform better in the moderate IVR. And where are we now? Where do we fall in the IVR right now? High.
Yes. So let's go to the next one. So if high IVR, that doesn't look so good. None of these look good, right? All the P&Ls went down. Don't do the $30 wide for 10% because you're getting $6.
Right. Nothing looks that great, and that's IVR over 25.
IVR, which we're in right now.
Go back to the platform. Let's get a visual of the IVR again. VIX IVR.
VIX IVR.
We're in the high.
And we should be in the high on a day like today because today there is news coming out, right? So the VIX should have a little bit of a
Does it make you want to go into your platform and close yours right now?
I can't because I'm in our platform.
I can't. I'm in ours too. But it doesn't look that good in high IVR.
No, but what I will tell you, Jenny, is that
I mean, they're all winners. They're all winners, but not as much.
But what makes me, and I love these studies because it's helping me. I don't want analysis by paralysis. I just want to look at this and be like, okay, in all of these scenarios, they're not that bad. Like I kind of like going in every IV environment. It's not bad. They're not bad.
They're not bad.
You can choose your poison and stick with it.
But you see, they're not as good in high IVR. So if you take this study of like slide 4 where it's in any VIX IVR,
yeah, I'm sticking with the lowest drawdown for me.
Then it should be higher. They should be higher if you're only doing it in the low VIX IVR because you're removing that high VIX IVR, which those were the worst numbers.
Mm-hmm.
So most of your losers come from that high VIX, putting these on in high VIX. So I think I'm going to stick with, I'm not putting these on with the high VIX IVR.
I'm sticking with, and what I love is everybody can do what they want. I'm sticking with do it every day.
I'm going to do it not in high VIX IVR.
So you wouldn't have done it today?
Right.
Yeah.
Shame on, slap my hand.
Waiting for that. Should have slapped harder. Okay, so let's go to the takeaways. Takeaways. Picking your strike and mechanics gives you a great deal of control over your degree of risk and likelihood of profits. There you go.
Okay, in every volatility regime, for those willing to take on the risk and buying power of a synthetic straddle, 10% profit targets that were both the most winning and the most profitable in every regime.
I am willing to take that risk.
She's willing to take it. I'm not going to do it.
It's a low risk. Like I said, I risked $150 today.
It is low risk.
Yeah.
It is low risk.
Oddly, in moderate IVR, very low profit targets performed the best, but in both low and high, larger net profits were found to be slightly more patient.
Larger net profits were found to be slightly more patient, like looking for more of a percent.
I will take your word for it.
In contrast to our experience with longer dated trades, high volatility at market open was a sign that 0DT short premium trades might be challenging. So longer dated trades, high volatility at market open.
Yeah, I mean, for sure. Yeah. And then still, provided we're open to rapid trade management, 10%, a 0DTE premium seller was able to turn a net profit in any volatility.
Love it, Jacob. Another killer study.
And there's our disclaimer.
Can't wait to see what's coming next week.
I think maybe he's going to leapfrog again.
Is it going to be part 3 next week, or is that going to come in 2 weeks?
It's going to come in 2 weeks.
Thanks, Jacob, for putting that together for us. And
Spoo's completely, well, they were just unched. Now they're down a little bit.
Oh, yeah.
Unched, sharply unched.
Interesting. When I said Frank thought nothing was going to happen, if you go to Twitter.
Let's do that. Hold on, Twitter.
Oh, and here we've got questions. So this comes in from Florida 7.
Hold on. First, we have to go with this.
Liz saw this, and it just brought back so many memories of her childhood. She had to share it.
Because I'm going to guess. I'm going to extrapolate here. Sorry, Tasty Nation. But I'm going to assume most of our viewers are our age-ish.
Yeah, sure.
Because they're not our children's age. Like, I don't know of any 20-year-olds that are really watching us, minus Faraz and Maxine.
I've never had a young kid come up to me and say, although the guy at the UPS store, when I shipped something for UPS. He watched the show.
Faraz and Maxime, the two of my son's friends, they're watching. Hello, boys.
And the guy at the UPS store. Hello. Those are only young viewers.
Those are only young viewers. But so people with siblings have better survival skills because they experience physical combat, psychological warfare, and sensing suspicious activity. And I brought this up because I believe that Jenny and I each have one older brother that's exactly 2 years older than us that used to wrestle with us to the death, and that helped us with this.
Oh, that's
to
how
be
we,
part of the trading floor.
That's how we could survive on the trading floor.
Yep.
Because we grew up having the living daylights beat out of us.
I mean, they didn't.
And I don't.
we're not saying we were beaten up in the pit, but we had a thick skin.
We had older brothers that grew up watching WrestleMania. I grew up watching WrestleMania, and they would try every move on us.
Oh yeah. Oh yeah. So we had thick skin. So that's how it did help us.
Yeah.
Navigate the trading floor. But
the only thing that saved me was my nose would bleed so easily. So almost every
pile driver,
I did in my nose bleeding, and then I would be like, "Mom, my nose is bleeding."
Well, I was joking around about this with Steve and Matthew, but we were latchkey kids. I couldn't yell for my mom. I had to be like, "Uncle."
But you're right. That's how we survived. That's how we survived here, and that's probably how trading. When you start trading, you'll see. When you start trading, it's a little bit challenging because you'll see some losses, and it might make you feel like have a bad feeling in your stomach, like, oh, I don't like the look of this loss. That doesn't even faze us.
Not anymore.
Not anymore. No, you get
now I laugh at her. Like now you laugh at me and I laugh at you. When you're just like, oh, I stole calls against that, I'll just start laughing.
Laughs at me. So you do develop like a strong stomach for taking risk, and it all started from us being beat up by our brothers, and that's how we ended up here.
And you know what's so funny? Does your brother watch the show?
No.
Neither does mine. So we can talk about them all we want.
I mean, they weren't that bad, but that was just a typical situation.
That was
growing up in
that was the era. We
Yeah.
were latchkey kids. There was no supervision, and
Yeah, we were born in the 70s.
all we did was watch wrestling.
Our parents were both at work.
Both at work, yeah.
Yeah.
Yeah. Okay. I just had to
Oh my
post
gosh,
that.
I told your story. So this is a really good story, and our viewers might not all know this, but my son lost something at. He was at Big Run. So your mom used to work at a golf course.
Yes.
He's been going to the golf courses, or Big Run, Ruffled Feathers, all near you, and he lost something at the golf course. He left it there. He's like, oh my gosh, I lost this at the golf course. I hope someone turns it into me. I don't know if someone's going to steal it. And so I told him your story, and this is how Liz ended up on the trading floor. Do you want to tell the story?
Yeah, so my mom worked at Big Run. She ran like the restaurant bar area of a very hard golf course in like the Lamont area. And someone left $30,000 in an unmarked envelope underneath a chair in the bar. And she gave it back to the person that was sitting there, who happened to be the head of Bear Stearns. That's how I wound up in the bond room, because he's like, what can I do? Do you need anything? And I was like, she's like, my daughter needs a job. And I was the intern there. That summer you worked at the SIBO and I worked at the Board of Trade.
Right.
And I remember being there when like the first open interest report came out in the bonds, and the place went nuts. And I remember being like, this is where I need to be. Because I talk fast, I walk fast, and I do everything fast. And I remember being down there being like, I have found my people.
Yeah, that's good. That's perfect.
Yep.
And so
Did he get it back?
I love that. He did. They called him yesterday.
Was it $30,000 in an unmarked envelope?
No, it was one of his clubs. You know how you're golfing, and if you take a pitching wedge to the sand trap, and then you accidentally leave it there because you're grabbing your putter. He left one of his clubs there, so he's so worried about getting his club.
That's amazing that they got it back
they called
to him.
And they got it back to him.
It's pretty good.
So these golf course people.
Big Run's for sale. We should buy it.
Is there?
It's been for sale for 30 years.
What are we going to do with the golf course?
Film a sitcom there.
Okay, so
I went top down.
Okay, back
so if
into
we can
Twitter.
pop into Twitter, so
top down.
Thank you very much, Steve and Matthew.
Excellent. So, top down, Florida 7 has a question. On your study today, why not do 5 of the $10 wides? Yes, 10% profit of 305 and a similar C-bar. 5 of the $10 wides instead of a wider one. That would seem to make sense to me. Just keep in mind commissions and what that will take away from it.
So Florida 7, I love that you asked this question because we kind of touched on it last week with TP as well. And I do think, so I'm so trained with 45 DTE that I say, instead of doing multiples of one,
go wider.
Widen it. But you have to take everything that you thought you knew and crumple it up with the 0 DTEs.
And so what did TP say about that?
TP said the same thing. He said you're better off because you're risking less for the same amount. You're risking less. Let's go back into the study just to... Whoops, sorry.
Well, you've got better results. I see what he's saying, like doing more.
So I'm just going to go any IVR. Let's say you wanted to risk, I'm just going to make this up, $1,000. So you're going to do 5 of, here, wait. You're going to do 5, right? No, you'll do 4.
4 of the $10 wide versus,
versus one.
One of the $20 wide.
Yes.
So.
And if you do 4, you technically can take that
right,
61.
You can make more money, and it covers the extra profits that the average P&L would cover the cost, would cover the extra cost of the extra contracts.
So in my mind, when I look at these results, I think the exact same thing. Now, it's still in its infancy, so maybe we'll be proven wrong by this, right?
Because it hasn't been around that long. So our studies only go back 2 years.
And things work until they don't, right? So we could be proven wrong by this, but Florida 7, I think the exact same way.
Yeah. So I did like that. And then Keaton came in on top if you refresh.
Oh, okay, hold on.
So Keaton says his takeaway from this study today is $10 wide iron fly every day in SPX.
Me too, Keaton.
Especially once PDT rule is removed, and that is, fingers crossed, that's coming sooner than later, but we know it's...
Keaton and Liz, I like this.
All right, Asif. Oh, looking at a Hood short strangle. Now, Hood has earnings today. He's looking at short strangle and Hood. Yeah, it's you know what you're gonna get, Asif? Asif is gonna get certified badass option trader card.
Will you bring those to the Cubs game? We got to give one to Kathy.
Yeah, sure.
Okay.
I'm pretty sure I've given Kathy one of these.
She's gonna get another one.
She's getting another one. Certified badass option trader card to Asif for selling a strangle and Hood right before earnings.
So we have also offered everyone behind us the opportunity to get a certified badass options trading card if they will come talk to us. So far, only one's been given away, and that is our local celebrity.
Yeah, the only one. But I've got a handful here. So a Hood strangle, I struggle with Hood because it's gone up so much. Why don't we pop it in
Let's
Hood?
go in the platform. Jenny, I need some counseling on my Hood.
Yeah, I don't know what to tell you.
So
it's gone up so much. I struggle with the naked put and naked call in Hood,
so in
honestly.
1 year, Hood went from 17, because I believe we were at the Cubs game on August 5th, to 106.
So
it's got a 24 rank. Let's look at Asif's first before I give you my. So if he's looking at a strangle, now there is quite a bit of premium here. So you can go. I'm just going to go to the 94. I'm trying to get $1 and $1. Look at the call skew here. You can go to the 94 120 and get $2. You're putting up $1,000 to do it. It's not bad. It's not good, but it's not bad.
Here's my struggle with Robinhood. If you pop out the overview and you look at the market cap, a Hood is worth $92 billion.
Woo!
Woo! And that's my struggle. Hood is worth $92 billion.
Yeah, but so what does that mean? Like, does that mean you're not going to trade it?
It means I don't want to naked put in here right now.
Okay, fair enough.
I don't want to naked
that's what
put,
that means.
I don't
That's what
want
that
to
means to you.
in here right now.
Okay, so you'd rather just have the call?
No, I think I'm not going to trade Hood for earnings. I'm not going to trade Hood for earnings. And if I were you, if I had the stock, because I got out of my Hood stock a long time ago, if I were you and I had the stock, I'd put a collar around my stock.
So I think I'm going to go and I appreciate your. I think I'm going to protect it because I've had the stock for so long. And I'm just gonna I'm gonna buy something and protect the downside. So I'm gonna buy 1, sell 2, because I've got quite a bit of it.
And I did this in Etsy for even. Like I did this against my Etsy for even.
I'm paying for it because I don't mind.
Yeah,
I don't mind giving up $1 to get my break even to 90.
Okay.
That's what
and
my
then
plan
what would
is.
happen at 90? She would get long for every one of these 2x1s. At 90, she'd get long an extra 100 shares.
Correct. So, and that seems a level where I was like, okay, if it drops down to 90, which it was just right there, that's what I'm going to do. But Asif, if you were new to this, like if you're not putting anything on, the strangle looks pretty good, but everybody's got opinions on things. Jenny looked at the market cap. Jenny looked at the market cap and doesn't like the naked put.
I don't want the naked put.
I'm not gonna lie to you, naked calls through earnings scare the hell out of me.
Scare me, and I don't trade a lot. I don't sell a lot of naked calls, so I wouldn't be selling the naked call in earnings and Hood, and I don't want the naked put up at this level.
Yeah, so, and that's fine, but I see if there is premium there, you're putting up $1,000 to make $200, it's not bad. Okay, let's go back to Twitter.
Okay.
Jared Hillhouse, I believe you're new, welcome. When you say that SPX 0DD ironflies may not get the full 10% win, you may get 7, 8, 9% win. Are you managing? Do you have to manage them at 7, 8, or 9 win?
No, they cash settle.
Yeah.
So that's just, when we're looking at those results, the P&L results, it looks at closing them at 10% win. If they don't close at 10% win, they just cash settle.
It just goes, yeah. So you would get whatever profit it is or whatever loss it is. So you might lose 10%, 5% on it. It might not be a full loss either.
And so this morning, I didn't even know where SPX closed yesterday, and I had on a spread. And this morning, I just went into my emails. I get the email, you were assigned or you were exercised. And I went to see if I was exercised and assigned on both sides. Then I would know, like, okay, it was through both sides. But if you only have one of them, if you only get the email on one side or one leg, then you know it was somewhere in between your two strikes.
Then it was somewhere in between your two strikes. That's true. And now I want to get to this one, Rosso, because this is pretty important too. The 0 DTE butterflies, $10 wide, are really not working. Sold at 9 o'clock, set for 10%. I have 5 losers in a row, and I'm down over 1K. I'm down over 1K. So 25, 23, 22, 18, and 2nd of July are all losers. Lost 10% of the account so far. So I have to say that is a real risk because we're in a high implied volatility. Keep in mind, this study has been over 2 years, and we've been in a high implied volatility. But you're looking at what Jacob's study is consistently doing it every day.
I have 5 losers in a row. 5 losers in a row. 25, 23, 22.
He's giving dates.
Yeah, right. No, I'm trying.
But that's not every day either.
Well, that's what I was trying to look at.
I mean, that happens.
Okay, honestly, this is what I'm going to say. This is not the
end-all,
be-all only trade. And honestly, there are times in my life where I get hit with a big loss in SPX, and I'm like, you know what? I'm taking a break from it.
She almost did that today.
You get frustrated and you're like, I'm taking a break from it because it doesn't have to be. There are some people who, they want all their money to come from SPX. We know a lot of people who want to make most of their money in SPX. It has some tax benefits to it. But it doesn't have to be. Like for me, this year, I had one real doozy in SPX this year. So net, like I'm down in the year in SPX because I had a real doozy in SPX this year. But I'm still chugging along in there, but most of my profits are coming from other positions. So everyone has to find what works for them or what they're comfortable with or what they're happy doing. It doesn't have to be this trade.
And I got to tell you, it's hard to. Now, I do talk about my son's account, and he's putting these in, and he's doing decent. He has had some losses, but he's doing decent with it. But I will tell you, that's a huge loss for a small account. And I have I shouldn't say very large, but I have a larger account than my son, and I'm doing a 1 lot. I haven't scaled up yet.
Yeah.
In mine. So I get it because that could be a big loss if you're doing it the $10 wide.
If they lost 10% of their account, it's a $10,000 account. They've got $9,000.
But they can't be doing these. Pattern day trading rule.
Well, that's what I don't understand. You can't do these in a $10,000 account.
You can't. You'd have to be using something else.
So I don't know.
Yeah.
I don't know. But again, you find what works for you. My son has a smaller account, and he just looks for low price products and looks for 50-cent puts. Like, where can I get $50, $50, $50, $50? Low price products, 50-cent puts.
Yeah.
He's got a lot of those now. He used to have some like stocks he would hold on to, but now it's more like low price products, 50-cent puts that he feels like can't hurt him too much because he wanted to close the other positions and like take his profits.
I think you got to graduate to that. My son hasn't graduated to that yet. He still has like 4 shares of Tesla. You know what I mean?
Yeah.
I'm just like, okay.
Well, no, and I think that's fine. But at one point in time, he was like, okay, I made enough money on these long positions. Let's just close them all. And I want to make.
But I think that's the next. I think that's like the level
step.
up. Yeah.
Like if he wants to make $100 a week, where can he get like 2 50-cent puts for the week, and then do that the next week, and do that the next week, and do that the next week, in a small account that adds up and builds.
And it does. Now, I will tell you also, and I'm not trying. He's doing a great job, but it won't always be like that. If you're in a down move, those 50-cent puts can hurt.
Well, that's why he is only in very low price products, very low price products where he's got his little 50-cent puts. He's not in any product.
And then he'll be long the stock.
He's not in any product that's more than $20 right now. That, like as far as selling his little.
But
puts,
even in a down move, when you're looking at it, if we're in a down market and everything is going down, those will cause pain. A little bit of pain in his account.
A little bit of pain, but then you have to keep rolling them.
Yeah.
If you want to stick with it.
Okay.
So again, it doesn't have to be, if you want to start trading, it doesn't have to be with the SPX Ironfly.
But
it
I
could
did
mean something else.
But I did like that he put this up because I like people that are putting their winners and their losers on here because it's real.
And we had that study about the put spreads, which is why I've been leaning more towards put spreads, where someone might want a put spread and you get a bounce up and you get out. Like today, when this morning SPUs were up only 4, and then we were up as much as 12. That put spread would have come off.
But you did the put spread yesterday and it was a full loss.
I know, but that I've only done. I know it doesn't. I've had like 3 wins, but the problem with those is 3 small wins and then 1 big loss. It wipes out more than your 3
More
wins.
than the 3 wins, right. Okay, so then Alan Miller comes in. I have an AUG 15 Jade Blizzard. What is he in?
Short 27.5, 31.32. Earnings are in a couple of weeks. Yeah, Alan, what?
It doesn't
say
matter
what product, but earnings are in a couple of weeks. Would you just roll?
Yeah.
27.5.
Put, yes, I would do that. So if you can roll the put to collect, Alan, I think you just wanted your name up here. You know what you're doing. So if the risk in a Jade Lizard is just the short put. So if it's profitable at all, close the call, and that's the risky part. Roll
If you
it out
don't want
September.
the risk through earnings, you could take off the short put and turn it into a zebra if you want to be long, if you want to stay long and you'd want less risk, or turn it into a long in the money call.
It does look like it's a low price product, so you could probably roll it out in time
Yeah.
too. So good, yeah, we appreciate that, Alan. Now Frank the Great comes in. This is from Andreas B. How about selling some SoFi 20 puts for September 19th?
Unfortunately, we sold SoFi puts yesterday. Where we filled, I don't know.
Oh wait.
Yes. So we sold a Jade Lizard in SoFi yesterday. SoFi was up to $25 yesterday. Now it's down to 21. It was even lower earlier. So it lost all of its earnings gains.
Look
So
at that.
take a
It
look
came
at that.
right back down.
It's right back to where it was before earnings.
Okay, so this might have been what Alan's talking about. No.
So, like, would I sell puts today? Yes, but we sold them yesterday.
Yes. Now, I just want to go through what you and I used to do, just to see if it makes sense. SoFi's a $21 product, right? We have a dollar-wide call spread and a naked put. If it's not a very high, expensive place, you got to keep in mind we have 0 risk for the upside. So can I sell another one? Wait.
Another what?
Hold on. I want to buy back my call spread and sell one right on top. Am I doing that right? No.
There's only that call spread's worth 10 cents that we'd have to buy back.
So
and what
you're
are you
getting
gonna
an additional 33 cents.
Oh, you are?
Yeah. I'm buying one back and selling the other one out.
Sure.
So keep in mind, there's no risk to the upside. We're just adding an additional 33 cents in.
Yeah, you can roll it down.
So in the beginning, that's what we used to do to Jade Lizards, and then at some point, Jenny and I are like, we don't need 30 cents that way.
33 cents isn't doing
But
much.
if it goes up, we'll still keep 30 cents.
Yeah, roll that call spread down and get another 30 cents.
Okay.
It will help a little bit to the downside.
Because it's a low
I mean,
price
who thought
product.
SoFi would go from 25 down to 21 in a day?
Yeah, that's crazy.
Okay, so make sure you're pushing all these out, and I'll get them.
All these?
All these. Make sure you get all these trades. That's all we've done so far?
Yes, that's
roll down the SoFi calls. Well, we have a lot to do. We have What's Your Assumption? We have plenty of earnings. Let's try to get through Twitter.
So I just wanted to get to the earnings trades, too, because they're right here. It's right underneath Andreas. So Bob on fire. Meta, Microsoft Hood, Carvana, LRCX, Qualcomm, ARM, CBS, Roblox, ABBV, Norwegian Cruise Line.
Yeah.
I want to look at that one just because Royal went down so much. CI, MasterCard, and Bristol Myers.
And this is what I'm talking about, Florida 7. Florida 7 was picking up when I was putting it down. Scroll to the top.
I'll sell it at 70. I got a 200 allowance across 80, 120.
Yeah.
Yeah. Right.
Yeah.
That's what I'm talking about.
Yeah.
So, 1 billion for us, 92 billion for them.
Hey, our friend's a CEO.
Hey.
Congratulations on your wealth. Okay, so the win rate mentally you're talking about is so true for me. I swear every time I try 0 to T strategies, I wind up with a loss, and then I get scared out of it for the next few days. I need to stick with your strategy of the fly every day, no matter what. I'm not advocating doing that or not doing that. I'm just saying that my account can handle the risk of doing it every day.
Yeah. And I have not been doing the iron fly every day, because SPX, sometimes it has my number. And I think I still have not gotten over the, when was that? I don't know. We had a debacle in SPX.
Oh, we thought we had it all.
We had a debacle in SPX.
We thought we had it all answered.
That, like, AM, PM, trade where we did a calendar, one expiring at PM, the next AM, and then we were at the mercy of the settlement in the morning.
And the
It
settlement went horribly wrong.
Didn't go well.
Okay, but I'm going to get to these, and then we're going to get into the earnings. This is Jackie. No trade today. Normally I would place a put spread here, but avoid big event days as part of my discipline. So that's his discipline. Scott Somer, beware of zero DTE trades may not decay properly until after the completion. This is 100% accurate.
And I'm going to check on mine again, where SPOOs are up 250. I'm going to see if anything's come out of it yet.
And he also says avoid physically delivered, meaning SPY, zero DTE products due to Microsoft and Meta earnings. They will not decay properly throughout the day because those will keep their wings up because of the earnings.
I've got about $20 in my Iron Fly.
Ooh, congratulations. I mean, loss or win?
I'm just saying it's decayed about $20 since I put it on.
Yes, and usually
so that's not much. That's not much.
The Iron Flies, if you are selling at the monies, they do not come off until close to noon.
So that'll be right before the announcement. It may not. They may not come off today. We'll have to see. We may have to hope for the market.
Off for $20 though before. I mean,
no, it's not worth the commissions.
Then you're not losing. That's the only thing.
Well.
Okay, so let's go back to Bob on Fire.
Earnings today: Meta, Microsoft, Hood, CNBA. That's not Carvana.
I thought I read that as Carvana.
CBS, Roblox.
Do we have positions in any of these?
No.
I don't think so.
No. Microsoft, Meta. I mean, but if we're going to trade any of them on earnings, it would probably just be. I mean, in Meta, it would have to just be an Iron Condor.
Correct.
$42 expected move.
So this is going to be my most expensive trade.
But this is what I'm going to, I think we go to what's your assumption, because this is what I would say about earnings. We have the FOMC at 1 o'clock.
I wouldn't put earnings trades on
I wouldn't put an earnings trade on until after 1 o'clock.
Because because things could move, and if you did, say you were going to sell, and that's a good point about Hood. If you're selling that strangle, that's neutral. If the market moves in one direction or the other, you become directional and you didn't mean to be.
Right, and then you're at the mercy of the earnings because the market already moved on the FOMC.
Yes, true.
So I would say let's go to what's your assumption, because what's your assumption will look for durational trades. The FOMC meeting doesn't really matter for that. So I'd rather look at durational trades than overnight earnings trades before the FOMC announcement.
And I'm going to apologize because the way I have it set up, every time I go to and from the platform, from what's your assumption, we have to go through Twitter.
That's fine.
So there we go. They're playing our music right now as we speak. Okay, first one. Joby, bearish. This is from Trade Small Trade Off and John. 112 degree Fahrenheit heat index in the villages. It's been like that here. It was 105 here this weekend.
I missed it. It was nice. It was nice in New York.
It was beautiful in the pool. I stayed in there the whole time.
Okay, Joby bearish. Now, I wish Archer would get the lift that Joby's gotten from its deal.
But listen, he says the same thing. Love the it's the elevated stuff market, but Joby's rise has been a bit too jolly. I'm doing a simple defined risk put spread. What do you think?
Yeah, let's do it. Let's get in with Trade Small Trade Off and John. Bypass Twitter, go right to the platform into Joby, buy a put debit spread, or buy a put diagonal.
Let's take a look.
They have earnings. Let's just go to the 9-day and buy a put debit spread.
Why wouldn't we do the 2-day? Oh, I guess.
Because we're going through earnings. Like it'll be our earnings trade.
So if I'm buying a put debit spread.
Yeah, just do like the 8.
I did the 18, 16 and a half. Because that totally washes extrinsic value.
$1.50 for 85. Sure. Yeah. We're in, John.
Max profit is $65 for 85. What are you looking at?
That's only because it's only $1.50 wide. Yeah, so
I
guess
$1.50. I thought you were saying we got $1.50. Yeah, I'll ship that. We're in with Trade Small Trade Off and John.
Otherwise, just do the 17.5, 16.5 for 50 cents.
We're in. And I pushed it through.
Okay. So we're in bear put spread in Joby. If you really wanted to be bearish in there,
I mean, it's fine.
You can make it wider. You can do.
Okay, next up is Kohl's, bearish, 45 days. Have you been in a Kohl's lately? Cavernous, decent IV, headed for BK or a buyout. How's about a call ratio in September? It's a cheapie, but then so am I.
KSS, what does he want? A call ratio?
Bearish in Kohl's.
And a call ratio where you're collecting money. Now, if we're going to do a call ratio, let's see if we could. Yeah, maybe. We could stick with August, do the 12-13, buy 1, sell 2. You're not getting enough. I wouldn't say that's bearish. Then you have to go through earnings.
So what do you think about an earnings setup diagonal?
Yeah.
So I'm going to sell the 16. Oh.
You go all the way to SEP. You can buy SEP. You can like buy the SEP 12.5.
I know, but look at what you're selling in the August. There's nothing.
Sell the August.
Nothing.
11.
For 30 cents, just buy the 12. If you want to be bearish, just buy the one in September.
If I'm bearish in here, I'm just going to buy an in the money put. There's just not enough.
That's what I was saying.
here.
You're not getting much, so I kind of agree with you. And maybe I would just do it nearer term.
Or do a put zebra. It's probably really cheap.
In the 16-day or the 30-day?
Yeah, maybe. So you're going
in the
for
16-day,
earnings.
it's $2.60. Actually, you could do this. It's $1.70.
What do you? Which?
I'm in the 16-day.
Yeah, put zebra.
There's not much to sell, and there is a lot of premium. You know what? Let's just be cheap with it. Who cares? I'm sticking with mechanics. 16-day, I'm selling the 11, and in the 30-day, I'm just going to go one out. I'm buying the 12. Oh no.
I know you don't want to pay more than the width. It's tricky. Here's something where
I don't want it.
If you're directional, just buy an option. Buy an in the money option. Make it like a stock position. So if I'm directional, I don't know.
I'm going in the 16-day, and I'm spending $2 on the 13.
Are you in the 16? No, you're not in the 16.
I'm in the
You're
30
in the 30 day.
So I'll go 16-day.
Were we trying to do this after earnings?
Yeah.
Yeah. And where's
So that's why I just went to the 30-day.
Oh, okay, yeah, just go to the 30
And
day.
I'm paying $2 on the 13.
Sure.
Okay.
Yeah, fine. We've got one long put.
Kohl's is going to take us to the promised land.
When it drops from 11.70 to 11, we'll make 20 cents.
We'll make 20 cents. Okay, Microsoft. This has earnings, weekly options. I'm neutral to slightly bearish on Microsoft. Prefer weekly options to capture inflated IV. Thoughts? Okay, let's go a reverse
Neutral
big lizard.
To slightly bearish.
I want to show how we can do a reverse big lizard.
Oh, but we're not. Do they have earnings?
Yes.
Then we're not going to get our break even anywhere near like the break even, the upside expected move.
They're neutral to slightly bearish, so you can do that.
I would just.
Hold on, I'm just going to show you.
You can. You'll have upside risk pretty close.
It's
15.
5.
So 515, 505.
It's not bad. That's neutral to slightly bearish. I've got a $10 wide that I'm collecting $11.40 on. Now, I don't know that we're going to put this in because it's $800 risk to the upside of Microsoft, and I happen to be bullish.
Or I would just skew an iron condor if you're neutral to slightly bearish, or just sell a call spread. Like neutral to slightly bearish, just sell a call spread.
The 30-35
Yeah.
for 115. That's not bad.
Just sell that.
That's what I would do if I was that person.
Hey, this is not the Liz show. This is all. We'll throw it in. Throw
Damn
it in
it, Jenny.
Throw in the call spread. We're selling the call spread for $1.15.
Fine.
And
Let's hope we don't get filled on that one.
Can you push the trades out?
Everything that we've done has been pushed
Oh,
out.
the last one I have is Joby.
Yeah, that's the last one we did.
I guess we never got filled on that put in Kohl's.
They're in there. Everything's working right now.
Everything's working.
Okay, then CDNS. I don't know what that is, but this is Ajit from Chicago.
Oh, from Ajit. We are Ajit. Thanks for the tweets. CDNS. Take a look at it.
So what do they want? So they want 919, 15 delta.
330, 404 short strangle.
You keep an eye on
Ajit,
this.
you know what? We don't even need to look. $300, $400 product. We're not doing a strangle, but you are getting a certified badass card.
Oh yeah.
Ajit is getting a certified badass
For net
card.
credit,
Selling a
credit
strangle
$7.
in CDNS.
Yes, good job, Ajit. Okay, ETHA. I don't know what ETHA is.
Long crypto, isn't that that's the Ethereum
ETF?
ETF, I think.
Let's take a look.
iShares Ethereum Trust.
So 940 million shares have traded. 9.4 million shares have traded. And what did they want to do? Where were they?
They were
just bullish, 51 Ds.
Hey, you know what? It's probably similar to selling puts in IBIT, and I have been selling put spreads in IBIT. I'm curious, what is the buying power? If you go to SEP,
it's bad. I'm in September and it's $1,700 for the 25.
So it's almost cash secured. It's worse than like 50% margin.
So it's very similar to IBIT, where we always
would
have to
just
buy
have
something.
to sell a put spread in here.
So
or you know what? A Jade Lizard ish, kind of what we did in IBIT, where you use that 30 cents from the call spread to buy a put.
There's 21 cents on the call spread. I'm going to buy a put for 20 cents. And then whatever we get, we get. So
Here, you could do the 25-20 put spread.
So I did it backwards so people can see what we're doing. So I just did the call spread for 20 cents, and then I bought a put using that exact amount, and then we decide what credit we want in the put.
Yeah, then you got to sell a put for $1.
Then we can sell. I mean, you could sell it for 85, knowing you're only getting 85 cents.
Right.
I just wanted to wash that so people can see how our mentality is here. So you can go to the 25 for $1, but if you're okay with the 85 cents and that's the put you want to sell, that's fine too.
Okay.
So I'm going to go with $1.25.
Yeah. Then we're getting over $1, but we're not using that much. What is it using? $400 versus the naked put was using $1,700.
Yeah.
It's again, this is similar to selling premium and IBIT. The margin is high.
Okay, I was going to say, I wonder if we'll get filled. We did. I took it down by a couple pennies. We did 106.
Okay.
And that's pushed out. Okay. Then I'm going to go
All right,
back.
wait, we're out of time.
We only got three done?
through.
Hold on, let the person see their one. Max from Houston, Netflix bearish, good luck.
We didn't get through everything, but we have a handful of trades. And durational trades, again, we don't mind doing those before the announcement today. Earnings trades, we'll wait. I'll put my earnings trades on end of the day today, probably around 2:30.
That's what I'll do too. All right, everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Glenn Freiberger in the house with us today for our TCFX takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Mr. Glenn. Good morning, sir.
Good morning to you guys. How are we feeling?
Fantastic.
I feel incredible.
Really?
Yeah, because I've been, I've been holding these long dollar positions. I've been adding to them.
Layering in.
The last 2 days.
Yeah.
Just complete reversal. Closed almost all of them.
Really?
I'm up $257 in this account.
Get the hell out of here.
Yeah.
Yeah, I got.
Who would have thought?
Good job out of you.
Ah.
You're probably in the same boat.
Yeah. Wow. Yeah.
Yes, yes.
Smashing the dollar at lows. Feels great.
Yeah, this is the payoff that
Mm-hmm.
some people have been waiting months for.
Yes.
Now dollar comeback on this glorious Fed day.
Yes.
Had some good, strong like bull GDP numbers.
Yes.
But our good friend Chris Vecchio not entirely pleased because his core GDP number, slight decline.
Ooh.
So when you start to pull back the curtain, maybe it's a little shaky. So maybe it's good you're pulling out of some of these positions, Mikey.
When you mess with Vecchio, you get the horns.
Yeah, I wouldn't.
You don't mess with that
Got
guy.
horns.
Don't mess with that guy.
Yeah, Fed day. Nick is calling for no tie Powell today, right?
Ooh,
no tie.
That'd be amazing.
He's certainly gonna
Casual
have it.
Powell.
No tie.
Yeah.
Casual
Stain
Powell.
on his shirt.
Just a late night of drinking all night. He's like a little.
I would just love that.
I just wanted to see him come back out with that hard hat.
Yeah.
Oh, that would
That
be
was
good.
good.
It's like, yeah, I was in the basement,
I haven't seen those
approving some
numbers.
plans. Are these Fed days typically kind of wild moves in the FX markets?
Yes.
Like is today like a Super Bowl for FX traders?
Absolutely. Before all of this tariff volatility, it would be safe to say most reliably that Fed days are not only more volatile, the most volatile days of the month, but also that the most people are engaged in the markets because
Okay.
these events, while they absolutely can cause major volatility in equity markets and across asset classes, most historically correlated to dollar bonds and those more reliant on interest rate projections.
Yes.
So, yeah, I mean, now we'll see with the slate we had. Me and Nick were talking on overtime yesterday that with all the things coming about, maybe this Fed meeting isn't all that important. We've got other numbers to look at, numbers to crunch, and Powell, he's not the fireworks that
He used to be,
yeah.
he doesn't have that same pizzazz.
No,
It's unfortunate.
but he's holding the line.
He's holding the line.
And now with
staying
this GDP
strong.
reading, market's saying, please proceed holding the line.
Yes. Yes.
Yeah, if you look at the 0-day SPX expected move, it's only 20 points.
Ooh.
We've seen Fed days where it was 100 points leading up to the 1 o'clock hour. And 97% chance based on the FedWatch tool that there is no cut. So basically, the market's telling us that not a lot is going to be said that's meaningful to the markets during this day.
I think the exercise in looking at that CME watch tool is never really on the today's day. I know last year we got a surprise jumbo cut. That was about the most excitement we'll get out of a day of meeting. But if you look at the September projections, now from 1 day ago, we've got 5% increase in no rate cuts.
Ooh.
I've been saying we're not getting a cut all year, and people
Yeah.
think I'm insane.
That is.
But then he
I've heard that's
goes
what
on
you say.
stage and he says, "No cut." He's going to do it again 3 more times.
3 more times.
Yeah.
But yeah, now looking at a 60-40 still in favor of a September rate cut, but yesterday looking like 35% chance of no rate cut. So we'll see if this is just the move off GDP. I don't know how that plays in the hierarchy to tomorrow's inflation number, to Friday's employment data.
If the rate projections move further out in time, that would be, or the rate cut projections move further out in time, or at least decrease, you'd think you'd see more dollar strength.
Correct.
Just because rates would stay higher, you would expect, a lot of other places to be continuing to decrease rates or keep them the same. So a further strengthening to our long dollar case.
This is true.
Yeah.
I'm only long the dollar shekel these days.
Oh, yeesh.
I gotta.
That one's coming
That's
back.
come back. Yeah,
That's come back.
That was my biggest loser. Now it's just down 20
The
bucks.
Frank, I closed out the Frank this morning.
Nice.
That was a nice little scoopy.
Got some pop there.
Yeah.
But yeah, very interesting that, this week, you don't really have to look any further than the most popularly traded market, Euro USD. That's been one of the big movers.
About time.
Yeah. That one, I mean, coming off of the trade news over the weekend, already had some. But yeah, we opened the week above 117.5 in the spot market. Now we're trading well below 115, nearing 114.5. So that's almost a 300 pip move.
The big one.
Pretty remarkable.
Pretty big. Give a quick little market update. We'll get into it. E-minis right now up 7. It's been a very, very tight range. We've had a 19-point intraday range today, just under 19 points. Been a big old nothing burger. A little bit of volatility into the close yesterday, but nothing too crazy. We are just a skosh off all-time highs here. You got the NASDAQ up 69. NVIDIA seems to just go up $3 to $4 every single day. It's had a massive rally. It's really the only one of the group doing anything. You have Meta pinned at 700 into earnings here after the close. Microsoft as well, basically unchanged. Apple and Amazon kind of the movers to the downside. Apple down $1, Amazon down 83 cents. You got Tesla weak as well. Some other names underneath the surface, like saw some of the cybersecurity stocks, PanW down 10 and change. CrowdStrike was down like $6 or $7. You have some, gross earnings moves like PayPal, which was down as well. So it's definitely a mixed bag in the tech land. Dow down 6. You have UNH continuing to get just absolutely murdered. It's basically unchanged right now. Was up a couple, down a couple. It's one of the bigger names in the NASDAQ leading the way there, or in the Dow leading the way to the downside. But Russell actually up. It's up 0.6%, 13 and change here. So big move in the Russell relative to everything else. On the backs of the move in bonds going down, rates going up. A little bit of a surprise there to see the Russell outperforming. Oil continuing its rally, 70.15. First time we've seen the 70 handle. I got short via a call spread in my Johnny Trader account. You might look for something similar, maybe an iron condor or something like that. Volatility in there continues to increase. Volatility futures themselves have stayed relatively stagnant today, 1775. You have the VIX at 16, which is nice to see given that we had a 14 handle yesterday. Gold getting killed, $33 to the downside, 33.47. Silver down 57 cents, bigger move in silver. Both of those are off the highs. Bitcoin has had some two-sided action today. The futures up a little over $100, spot down 200 and change, but has had about a almost $2,000, $1,500 range. So pretty big move in Bitcoin, high to low here. A little two-sided action there. Churn. It's a chop fest today. I imagine Jay Powell, the earnings after the close, we have a bunch of different earnings, or a bunch of the big name stocks throughout the rest of the week. So there's a lot going on today and the rest of the week.
Great update. Yeah, I'm actually surprised about the crypto holding in there.
Yeah,
I think it's a good sign because
it's a risk on.
As I'm sure Ryan Grace has come on time and time again.
Yes.
These kind of like high interest rate environments, big handcuffs.
Yes.
For blast off mode. So they're hanging in.
We're waiting for the blast off.
Yeah, I think the only thing worse than high interest rate is high interest rate and recession.
Yes, that would be tough.
Not looking like that right now.
No.
Which is good.
No. Initial reactions on J-Pow, you think USD strong? Because he's got, I would imagine he kind of data dependent.
Right. That's a good guess.
Data dependent.
What's the market on him saying data dependent? It's got to be
minus 10,000. I mean, I don't even think you can bet that market. Yeah. But you'd think if he's still a little dovish, you would think, or a little hawkish of keeping rates high, you would think dollar would have some strength.
Right. And so what you'll get is we'll have a meeting here at 1 p.m. Central, 2 p.m. Eastern. His speech will be released at that time, right?
Mm-hmm.
And the initial market algo reaction will just look for changes in rhetoric from last meeting to this.
Mhm.
We're not expecting any cut, but I think Chris Vecchio is saying there will be a couple dissents this time. Not sure if that will cause a snap reaction or if that's already priced in. If Vecchio knows about it, does the U.S. dollar probably. So not looking for too much of a reaction right on that. What will be interesting is 30 minutes later, we're going to see what kind of questions and answers Jay Powell will have to go through. And that's where you're really looking for a reaction that isn't already priced in. But yeah, if GDP is any indication, and rates will be higher for longer, then you could see a little more dollar strength perhaps throughout the rest of the day here. We did see a pretty big move in the first 2 hours after the GDP release, and now we're kind of getting we're back in the chop fest. U.S. dollar joining the chop party here this hour and the last, with prices consolidating across U.S. dollar markets.
Yes. EXY, which is dollar index, just under 100. Getting back the last month of pain.
A lot of pain.
A lot of pain.
A lot of red. A lot of red.
Yeah, you're seeing what's nice about looking past the dollar index and looking into the spot markets, looking at these distinct currency pairs, is if you look at just the popular U.S. dollar pairs right now, you're seeing a lot. If historic price levels and historic price action is a key crux of how you enter positions, you have a lot of different opportunities here. I mean, we have dollar yen back at its highs. So there you have a dollar that has been performing relatively well compared to everything else. You've got a euro dollar market that's now at a 1 month low, but if you look back at that tape action, that 1 month low was on the rise from 112. So it had a pretty easy ride up. Not sure how much more. Yeah, there you go. So we're right near perhaps a historic resistance or support level right there, but last time it went through it, it blew through it to the downside. So you're getting, if you're opinionated, you have a lot. And then this Australian dollar, US dollar market, very interesting to me. That has
finally come back.
Some correlations to, historic correlations to gold, not so much anymore. Chinese equities, and then also just the kind of risk on, risk off sentiment. So, and that one, historically is still favoring the U.S. dollar. So perhaps Australian dollar, more room to run if you think any news this week will be good for U.S. stocks. Then maybe that's a risk on pair. And nice to see that dollar Swiss franc. Dollar CAD. We also had a Bank of Canada interest rate decision this morning. They held rates. Nothing too exciting out of there. But again, there you're at, kind of a, 1 month high?
Yeah.
But also haven't seen much, if you zoom out there, haven't seen much price action above that. You can just scroll out. Yeah, so I mean, last time we were up here, we were all the way up at 140. If, you got a lot of different charts to look at if you want to speculate on U.S. dollar, but want to get a good price entry. One thing through some of our studies we've looked at is which pairs have been more mean reverting, right? And in
do I short this U.S. dollar Japanese yen?
You could.
That was a trick question. Good job, you passed.
I actually had it pulled up. I was going to buy it. The dollar yen.
So dollar yen, it depends on your time horizon as well, right? If you're long that market, you're getting paid overnight to be long, right?
Yeah.
Similar to that U.S. dollar Swiss franc. If you're short in this market and you have a long time horizon on it, because maybe you haven't seen anything from Japan. Also, Bank of Japan rate decision tonight.
Oh.
Yeah, add that to your calendar.
Hell yeah.
You got some event risk there. They're prone to surprise, but are expected to hold rates where they are.
Okay.
No crazy intervention expected, but we'll see. What'd you just put on there?
You saw it? I got long the dollar yen.
All right. So
0.04.
Yeah, you're looking for those 150 prints.
There you go.
Which we saw not too long ago.
All right.
So yeah, a lot of dynamics at play. Are you going to define that risk at all?
No.
For some possible Bank of Japan snapback?
No. We just go straight at it, you know.
Yeah.
All right.
Trade small to hold forever. That's the currency phrase. Trade small to hold forever. Eventually, maybe you'll be right.
But which we've seen, but
I'm
yeah,
getting paid to hold it.
That's
So
what
there
I
you
was
go.
going to say. Is at least that one isn't eating away at you.
Yes.
As much as, one kind of sleeper is if you look in your history, you're long that U.S. dollar shekel pair, right?
Yeah.
That one, if I'm not mistaken, you actually are paying for.
I think so.
Yeah. So that one, either way, you're trading that. You're paying for it to hold it, and not a crazy amount, but just something to note is that's one of the only U.S. dollar pairs where you are not compensated through the overnight carry to hold long positions like you are with, Japanese yen, dollar, Swiss franc.
The dollar franc, I was getting $1 a day.
Yeah, it was a nice one.
So that was fun.
Yeah, because of the combination of leverage compared to the Japanese yen is held at 5%, and dollar Swiss franc is 3%. So even though maybe the interest rate differential between actually I think it's the same now, franc rates and yen rates. But in my last analysis, it looked like for an equal amount of money, Swiss franc was your biggest carry trade over the Japanese yen, which is more of the headline carry trade.
Yeah, the dollar shekel looks like it was siphoning 6 cents per day. So really nothing.
Yeah, that's okay. That's nothing. Charge that to Glenn.
Take it out of my pita allowance.
There you go.
Oh, that's what we have today. It looks nice. I walked by. Brian said, "There's 2 minutes to your show." And I said, "Yeah, I got to go."
So now watch this drive.
Yeah, I'll watch this drive.
Should we get to some slides quick?
Yeah.
Just run through those real quick. Just talk through what you got because they're cool. I like the little data approach that you bring me.
Yeah, so covered this on Forex Focus, but just looking at managing profit expectations for long U.S. dollar positions. I've been doing some of these studies with, more perhaps opportunistic trade entry criteria, what happens after a down day, after an up day. This one is just taking a ton of data and seeing if there has been historically any sort of dollar edge and what kind of to expect if you are end up in the green like our good friends Mike and Nick today.
We'll say that was my America trade. I kind of had that one.
It only took 2 days.
Yeah.
You just said you had to hold it for 60 days, and it took 2 days for it to work.
Yeah, you were trying to poo-poo me. I remember, like an elephant. I remember all those things. Okay, remember. It's okay.
Let's go to the next slide.
Let's
let it be known I did not call you an elephant, good sir. You called
I have memory like an elephant. All right, I'm not an elephant.
Okay, big dog like an elephant.
Big dog. Yeah.
But yeah, here's just a little background we covered already. But client sentiment given from IG Group in something like dollar Swiss franc has been heavily in favor of long USD plays. So very popular. If you have been for months, it's been very painful. But now US dollar starting to come back on a lot of these trade deals and continued sustained growth and high interest rates. But we wanted to look at, what profit targets are realistic for kind of what time horizons you're looking for. So if we can go to the next slide, we'll go into what the study was, measured 3 years of price data dating back to July 2022. Just used daily data, high, low, open, close for all of our popular US dollar pairs, all 7 there, and just entered kind of random trades at daily close prices for all of these, a lot of number crunching, and used a max time in trade period of 10 days. So looking at a period of 1 to 10 days, what did well for you, and just calculated win rate based on symmetric take profit and stop loss distance. So what hit first, not like our friend Mike here, who's undefined into dollar yen, whatever happens, happens. If we were to put those symmetric boundaries on, here are the win rates. So let's go first to those win rates. We saw that if you are looking for, very small profit targets, so this is in pips, and the reason I did such is because depending on your position size, you're seeing, what your profit or loss tick is per pip. And so when you enter that trade, you're already thinking in pips. And so that's a good way to set expectations. And I think it's a good exercise for, this is not taken into account, those wild swinging days like we already have this morning. But it also just tells you that there is historically, some edge for some long dollar plays. We're seeing with only 20 pips, if you're only asking for 20 pips, you're seeing some pretty successful win rates here for long dollar across the board. But that starts to really slip away around 40, 50 pips. And so if you're looking for those moonshots to near 100 pips, perhaps you have to get, more granular, more decisive in your entry points. You're not seeing any sort of dollar edge historically.
Don't most people trade this very quick? Like
Exactly.
It's small because the size is so big, the leverage is so
right
extreme that most people are taking 20 or 30 pips.
Exactly, and that's something if you're looking at it intraday today.
Yeah.
Last time I ran some of these numbers, most of the daily standard deviation, one standard deviation move for a lot of these pairs is in the 50 to 60 range.
Okay.
And so on a day like a Fed and GDP day, you could expect to expand those to maybe double. And we've already seen some of those magnitudes today already. So if that gets your gears turning for any sort of contrarian snapback or kind of a breakthrough, how much can you expect further than that? Maybe this helps out, and not to expect more than 20 to 50 points in a given day. And if we want to go to the next slide, this just breaks down kind of, it's a lot of numbers to look at, but kind of what days, how long it would take to hit these profit targets. So this is just looking at trades that hit your profit target. How long did it take? In the 20 to 40 pip range, you can expect that under 2 days historically. But if you're looking for 80, 90, 100 pips, can take up to 5 days. So I thought that was interesting on maybe an outside day like today. This wouldn't hold. You're getting some bigger moves. But yeah, I know coming from the world of meme stocks and some big movers, you're expecting a lot of percentage points looking at these FX markets, given the leverage you're looking at. Similar to futures, just very different profit expectations if you are looking to not position trade near historic lows, but swing these within a couple days to 10 days.
What's is the USD Canadian dollar, is that one that, could move today?
Yeah, absolutely. That's one that it historically is a commodity currency. In other pairs, it trades very similarly to US dollar in those non-dollar pairs. But on a day like today, we didn't get any sort of unique moves from the Bank of Canada per se. But that's probably a less volatile commodity currency than an Australian dollar.
Okay.
Yeah, then just going to the key takeaways.
Yeah.
Same things covered as, over the past 3 years, U.S. dollar has outperformed using this criteria. But if you're looking for consistent win rates, you shouldn't ask for too much. Those 20 to 30 pip targets have been the most consistent, and dollar yen has been the most consistent across the board in the dollar's favor. We've seen over those 3 year spans, a historic run up all the way to 30-year highs, now off them. So maybe our good friend Mike thinking it'll get back towards it. And then looking at time and trade, if you're looking more or less than 50 days, then that might be a good place to expect, I'll be in this trade maybe longer than 2 days or get out of it.
I like it.
Based on this analysis, I have entered a profit target at 100 pips.
For your
That's
dollar
a
yen.
much.
Well, not for the Japanese yen.
Not for the
Not
Japanese
for the
yen.
dollar yen.
That one, had some higher rates, higher win rates, and not on, we have a couple big events that could perhaps expand this volatility. Already has. So Mikey B thinking still some more room to run in that dollar yen.
Right around 150.
I went into the USD Canadian dollar, and I did the 20 pips.
20 pips,
Just a small little
long US dollar.
Long US dollar.
All right.
Yeah.
So you're looking for a little more juice. So
a little more juice.
We've had a good move this morning, consolidated a little bit. If we get another pop, you're not asking for too much.
20
maybe
pips.
even
$10, a little 10
exactly.
bucks.
And 20 pips, you could see. I'd be more wary of a stop loss at 20 pips. This study I ran had symmetric stop loss take profit. But on an event day like today with the Fed, where you could get some snap reactions back and forth, I'd be more wary of those stop losses, because you could be, directionally right in 30 minutes.
Yeah.
After J. Powell takes the stand, but people stepping in right away could move very well more than 20 pips. So
on the platform, if we jump over the platform, you can move the stop and take profit orders right on the chart, which is a pretty cool little feature there. So you can move this, you want to do 40 to the upside and 60 to the downside, or 50 to the downside. You could certainly do that too. So, and it tells you the actual profit and loss at those points. So you could do
and the pips.
And the pips. Yes. Gives you all of that. So it's pretty cool.
Yeah. And so if you're tracking this, real time, you could expand that stop loss way out just for, the initial move. And then once you get a better idea, you could move it back in.
Yep.
So yeah, we'll see what happens this afternoon. But dollar volatility could be expected to continue past this Fed day, with inflation data tomorrow, non-farm payroll data on Friday. So keep your eye on those dollar markets.
Two things. I got a question and also, a little something. I see that my description column hasn't yet been implemented here.
Description column has not been implemented.
Sure. Should be a pretty quick thing to do.
Should be. But what you can do is you can email support@tastyfx now.
I appreciate that. That was a nice quick turnaround on that. This one, I just need a little descriptor here. That should be coming soon, right?
Yes. End of August, is when
30 days. You got it. 30 days to write it in.
All right. So Putin has 10 days.
Yeah.
Glenn has 30 days.
Okay. Yeah.
Otherwise, no more pita.
But yes, definitely no lunch for you. One other trade that I'm looking for, or a product that I might be interested in looking at. Euro has had a huge move back. I don't want to get long the euro via the US dollar. Is there a euro pair trade where I could be long the euro against something else? Like I was looking at euro British pound or euro Japanese yen. Are any of those particularly interesting at the moment?
Yeah, absolutely. I mean, you've had a huge pullback off of the euro recently, so you're looking for a snapback, both off of highs, but I'd say either of those pairs are very liquid. If you're looking at, something like the IMF said UK growth could outpace European growth, then maybe you look more towards that British pound pair. We've seen that, up there before. But if you're looking for more of a position trade and you're looking to that carry, you would be getting paid to go long euro yen.
Ooh.
So, and another thing is you're going in right now. If you want no part of whatever happens at that Bank of Japan meeting, then you would skew more towards that euro pound. Euro pound definitely historically less volatile because those two countries are so correlated.
Yeah.
And so if you're looking for a quick mean reversion, maybe you're looking at euro pound. But if you have any sort of opinions on the other side, on the pound or on the yen, then I'd say that's how you decide. But both good options, both very liquid options, both very traded.
And you see whether you're getting paid or paying based on the swap bid, swap ask?
Correct. So those are the indicative rates in pips. If that's positive for your bid or ask, then that's how you'd know about what to expect. And Wednesday is a 3-day roll. So you're getting, if you get a position in today, hold it past 4 p.m. Central, you're getting the weekend roll here.
Ooh.
So boosted.
Boosted dollar yen.
Euro Aussie dollar.
Euro Aussie dollar, that's a crazy one. We actually have both pairs. We have the Aussie Euro and Euro Aussie.
Why?
Synthetic pair. There's no real difference.
Yes, just the
but
opposite.
Exactly, and it ends up netting out in terms of margin and all these things, but some people like having the quote currency be in euros versus in Australian dollars.
This would be a positive carry, though, too.
Oh, nice.
Right? Am I? But
Yeah,
if I'm long the euro,
if you're
the Euro Aussie,
you'd have to be
you'd have to be short.
You'd have to be short. Short the euro.
Short the euro.
Whatever the positive number is what you'd have to do. So you'd hit the bid on the Euro Aussie or the ask on the Aussie Euro.
Okay, I got it.
Because if you're looking to buy Euro Aussie, you're looking at that offer.
Yeah.
The offer is negative.
Okay.
Negative 4.64.
Okay.
So you just want to stay on the positive side. Get that. What would you call it? Revenue.
You can call it whatever you want. Juice.
Tendy.
Okay,
drip?
so long the euro versus Japanese yen would be a positive carry trade.
Yes.
Correct. But then, again, your time horizon factors into it. If you're looking here, not for long-term European growth, you just think it slid a little too far too fast. Then maybe you don't. It doesn't matter what the overnight cost to hold it is if you're only going to hold it a couple days in theory.
What is this one here? I don't know if that's me.
Oh yeah, you're already in.
Look at that.
You're short.
I don't know. I think that might be one. I think that might be one of the accounts linked to me or something.
Doesn't sound like me.
That doesn't sound. It's not in. It's not my position, so I'm assuming it's. I'm the master. I'm the master on the follow page. So
this is showing your short euro yen.
Yeah, but I don't have. Oh yeah, I do have that. Shoot, that's not a good one. So I've been paying that one.
Memory like a.
Yeah.
Goldfish.
Emo? We call you Emo?
All right, so I'm getting some of that back today.
And to answer some of the questions in the
Can't
chat,
flip that one.
This fall, we'll see about the beard.
Yeah.
You want to do a no shave November? We'll raise money.
I'll do a mustache.
Yeah.
Kyle out there was saying he thinks I'm close.
But we should do a tasty wide one.
All right.
Like all the men of tasty.
Mustache.
Yes.
And I'm good with G Money or Fry Guy.
G Money.
They're putting in nicknames in the
A
chat.
Hamburglar. We could do that too.
I don't know about that one.
What if you're short Japanese yen, Mexican peso?
Ooh.
So that would be MXN JPY would be the pair, and you're getting a positive carry to be long that, not to be short that. But it doesn't look like a big magnitude in either direction. We had someone call in and call this MJ.
MJ trade.
MJ.
Oh, we're trading MJ.
Huh.
Is there any pair that's at a goofy extreme right now?
You know, with the economic slate we've had this week, I haven't been looking farther than U.S. dollar, but I can do some digging for you.
Yeah.
I mean, the bounce off of, you called it, the bounce off of the euro pound was notable last week, or from Sunday's open. We're up there at, highs dating back to 2023. So that one would have been a good one in hindsight, wouldn't it?
What about New Zealand versus Canadian dollar?
Two commodity currencies against each other. That one's been chopping. If you're looking for more of a less correlated to what's going on right now in the U.S., and you're looking for maybe some range trading there, then you're nearing the lows dating back to mid-April.
Yeah.
So could see some opportunity there.
Not a positive carry. It's small, tiny.
Yeah.
If you're buying this.
Right.
Or no, if you're buying this at the ask, it's small carry.
Yeah, and if you actually are position trading this and think there's a lot of juice in it, then any sort of large price movement will usually outweigh any carry. It's just something that I think is interesting to note.
Yes, I agree.
When
especially because we're little Johnnies.
Exactly. Scoopy.
All right, we're gonna scoopy another one.
I'm just sticking to my guns with my positive trickle of tendy in the dollar yen.
All right.
We'll see what happens there. With a 100 bip
that's a big
profit target. So yeah.
Best of luck.
Thank you.
Fantastic. Are we gonna say goodbye to you? We'll say goodbye to you.
Pita awaits.
Pita awaits. It was great to have you, Glenn. Thank you
both
for coming on and giving us our little FX update. It was fun.
Much appreciated.
Yeah.
See you later.
We'll see you next week.
Enjoy.
Thank you.
Enjoy.
All right, popping over to the YouTube chat.
Yes.
Now.
E-mini's up 9. Had a little bit of a rally while we were schmoozing.
Naturally.
Not doing a whole lot of anything significant, but
a lot of interesting discussions happening in the YouTube chat. But there are some trades in here as well.
Okay, let's do it.
Question on NVIDIA, long a Jan 134 call, net debit 4,300.
Beautiful. January,
and short a 172.5 in August.
140 what? January? 140?
134.
34.
Yeah.
And short, the August 70.
172.5 in August. August 1st. 2 days.
Okay.
So.
Gotta do something.
Considering rolling call up to the 180 in August 29th for a $1.60 credit, what would you do? Yeah, I mean, that's kind of the move.
Waited.
You've waited. It's much easier to do this when it's not in the money.
Yes.
If you made this move before it went in the money, you would be able to move it way further up and out into the August 29 day. You'd be able to move it up significantly for a small credit. Now, if you move it to the 180, you're collecting a small credit, so I like it.
Mm-hmm.
You're basically adding $800 of extrinsic value to your position because you're buying back intrinsic, replacing it with extrinsic. You remove your protection from 172.5 up to 180. So you don't have the same protection to the downside in terms of intrinsic value. But yeah, if you want to stay in the trade, then this would be the move to consider.
Yeah.
And that's pretty much it.
Yeah. I might even consider going to the September monthly, but
Yeah.
either,
If you want to give yourself more upside. Reddit trade ideas?
Somebody gave me an iron condor in there that I closed out of the other day. Yeah, we had that. I think that was a fast market trade. It took like $75 pretty quick out of that. Stock's been pretty range bound. I was actually trading in August. Let's see. Do they have earnings coming up?
Tomorrow.
Mm-hmm.
Tomorrow.
Maybe a SEP trade.
Yeah, this is a huge expected move.
Some buying power on here. It's a little much.
This is a big expected move here.
One standard deviation type thing, like 115, 105, maybe move it to 120. Hey, do a cookie cutter iron condor, 120, 110, and then your call spreads at 200, 210. Definitely some call skew. 200, 210 is the high, 120-ish kind of the lower end of where it traded.
Yeah, I think selling premium here makes a lot of sense.
Yeah.
I do like the fact that you can get a nice wide range for earnings.
Mm-hmm.
Like I was looking at in August, I was looking at the 130, 170 shorts, 10 points wide for $4.
August, the weekly?
Monthly. I was just filled, $4.
Okay.
So
130, 120?
130, 130, 120, 170, 180.
Yeah.
Basically a chicken iron condor, but the nice thing about this trade is it's got 16 days. Regardless of what happens with earnings, as long as it passes through this range, I'm not going to do anything to this trade. I won't adjust it. As long as it passes through this range at some point after earnings, it'll be profitable and we'll take it off. But yeah, diagonals in there are expensive. But I think it absolutely makes sense to have a short premium against any kind of long premium in the 2-day cycle because you're getting a 20-point implied move worth of premium in the 2-day, which is a lot. But yeah, I go to the 16-day, give myself a couple weeks for this thing to reverse if it goes nuts outside of these ranges. But yeah, I like it.
Good job. I like
that. Let's see. What do we got? Hims. Short the August 15th, 40-80 strangle.
Look at this thing. $4 and change. August 18th, 48, or August 8th?
August 15th, monthly.
15th.
40-80 strangle. Collected $1.82. Currently taking heat with the move today. Should I roll up the put side before earnings or leave as is?
I just close the put. 50 cents. 60 cents.
Yeah, the problem with moving it up is that if you, let's say you move it from the 40 to 50, you're only picking up $1 and you're moving your risk 10 points higher. So I kind of agree with Nick here. I think you could just buy back the put.
It was trading at 50 3 days ago, three sessions ago.
Yeah. So, yeah, I think if you want to move it up, you can. You're moving it up significantly for not much premium, although it is a 16-day and it'll collapse pretty quickly. But if you want to lean short-ish, I think this is it's not going to hurt you if you get to move back down to 50, we'll say. Yeah, still out of the money, so not tested yet. How to best play volatility going up in the next 2 months? I was looking at this. So I was looking at the VIX. If we're playing for a volatility pop, we're just buying a call. I think it makes the most sense when you consider your risk outlay, your profit potential, if you are right. Because if the VIX goes from 16 to 25, volatility of the VIX is going to go up too. You don't want to have necessarily a short option on against that. I was looking at like the difference in price between the 20 or the 25 call. There's very little difference in the December versus the November if you're going out that far. If you want to encompass 2 months, I think you have to go further so your option still has some value if you're right.
Yeah, but those won't change as much. So VIX, you have the curve. So if you're thinking volatility is going to expand, you want the front.
September.
Yeah. Like you gotta, with VIX, that's how you have to trade it.
Yeah.
In the shorter duration. Because the back won't.
It won't move as much.
Yeah.
Yeah. So September 20 or 25 call is probably where we'd go.
Yeah.
A couple $100. If you get a big pop, maybe you make 50% or double.
You could also look at stuff in SPY or Qs. We've been doing the put diagonal spreads. Big wide butterflies in SPX are also long vol. So those are, those are ways that you can do it as well.
Yeah. I'm naturally long vol because I have a completely in the money Iron Condor and SPX on the upside.
There you go.
And I have a downside put diagonal and SPY.
There you go.
So I don't necessarily need to play vol because I'm already positioned for a vol pop, which would coincide with the market sell-off if it's ever happening again in our lifetimes.
Probably not.
Let's see. BRKB short put. You could. It's just a lot of buying power for $500.
They got
the markets aren't that great. Earnings early August. It doesn't seem like the premium is there for earnings. They already report August 4th.
What you're seeing?
Yeah.
I've done a trade in here, and I think I made a little bit on it, but markets are not great. Yeah. Maybe you just do like a short put spread or something. Put it on and never look at it again. I do like the 470, 460, kind of an at the money put spread in September. Let's see if I even get filled on this anywhere.
Closing the Starbucks call diagonal. Starbucks is flat. It finally rallied. Look at that. A little intraday rally.
It was up like $5 or $6 in the after hours session. I mean, look at this candle. It's got it.
Yeah.
Huge.
Thought it was going to be a nice winner this morning, and then I looked at it and I was like, oh, this is not. Damn. I'm going to hold on to this one. If you want to close it for 25 cents, that's totally fine. But I'm going to hold on to it and try and get some more out of it. I'd rather get $1 out of it or manage it going forward. But I like the fact that it's rebounded. Big buy from 90 to where we're at now. So I'm comfortable with the risk there. But if you want to close it, it's totally fine. Where's Fartcoin at? Time to load up? Good question. This is when you buy, when nobody's paying attention to it.
I love how you just started with good question. Yeah, it's at 1 month lows right now.
Ooh.
Generational opportunity.
It was 50% higher 9 days ago.
Yes.
So yeah, if you think it's coming back, why not? CCJ earnings play for tomorrow. Massive move up. Could see retracement back to 70.
That's so you're playing both sides.
Well, massive move up, playing for a downside move back to 70. Yeah.
I have a at the money free butterfly 75, 80, 85. So I'm locked and loaded in the August monthly expiration, but it's a good trading vehicle. It's high volatility. Maybe I put something on for September.
Yeah, September.
I do another call ratio. Damn, can't do it.
There's not much premium in the 1 day or the 2 day. They have earnings tomorrow morning.
And you do like the 80-85 call ratio, almost $1. Let's see if I get $1 here. If we get that move lower, I'll buy in the risk and I'll have another little butterfly shot. All right, I like that. 96 cents. I like that. Break even at 90 and change. I mean, that'd be well above highs.
Sure. Hood diagonal for earnings. Long the 120, call, short the 130, August, September. And then a SoFi one after this one. Hood, long the 120, short the 130.
You could just remove the 130. I think if you're going to do this in the weekly, you got to do like the 110, 115 maybe.
It was August 15th for the short.
Oh.
But yeah, I think if you're gonna do the short option, I like the 2 day short much better.
Yeah.
I think you move it to the 110, 120. It's more expensive, but you get paid more on an inside move. For sure.
116, 115. Can't do the 20 or the 70.
For the short, yeah. But yeah, if you're in the monthly, I think it's okay. But I would rather, like for these trades, they work better if you're right, if you have the short option in the 2 day cycle. Because that, even on a rally, it still collapses in value. You get better profit if you're directionally right. I am scared to play to the upside. I think I'm in Coin. No, I'm not in Coinbase yet. Coinbase has earnings tomorrow after the close. So we'll actually get a little Hood precursor.
Hood as a preview for Coinbase.
Yes. Yeah. So I think I'll watch Hood and then I'll play Coinbase.
Okay.
Feels right.
It feels right.
Yeah. SoFi.
Yes.
Buy into the rug pull. Earnings were good. Maybe a 20 put. Sure. I'm down.
I sold out. Well, I bought back the put this morning that I had at the 19 strike. I bought it in for 27 cents, and then I sold it out again into the downside move for another 80 cents. Now it's marked at 50, so I might just scalp out of it and again for the 30, 40 cents. But I need it a little bit lower. I need it at 20. Just under 20 would be perfect for me.
Instead of a short put, I'm going to go into a call zebra.
You can buy the stock.
Or you can buy the stock.
$600.
I just got it filled on the 2022. Long two of the 20s, short one of the 22s in September for 380, 385. Call zebra. More profit potential than a short put, less risk. I like it.
Very nice.
Is a meta September 600, 800 strangle even a good idea?
600, 800. Well, it's going to be juicy.
Last time I sold a strangle for earnings in meta, it collapsed 50%. So I won't be doing that.
It's a big position.
Yeah. But I mean, if you have the account for it, I think it's fine. But going to September, if you look at the difference in implied volatility in August for September, you have 10 percentage points higher implied volatility in August compared to September. So you're not going to get as big of a vol crush. I think if you're trying to do something like this and you're trying to play for the vol crush, I think you go to August and do this trade for $4. You could get this $4 overnight if it's an inside move, where September is not going to collapse as much. And then if you need to manage it, you can roll from August to September after earnings. But yeah, I don't mind it if you have the account for it. What are we doing in Etsy? Waiting for it to crash? Yes.
No.
I did the call, or no, I did the put diagonal, small.
Yeah, I had the put side too. We both did it.
So it's down 150 bucks. If you get a reversal of 2 points, it's
You're a scratch. Yeah, if it's back to
because the
where it
short
was
option
yesterday.
Yeah, the short option we got 120 bucks out of that.
Yeah, I bought that. I closed out of that too. 6 cents.
Yeah, there's nothing to roll. Like if you look at the 55 in August, it's only trading for 15 cents. So there's no reason to have that on.
Yeah.
So yeah, just a long option now. You need a 2-3 point sell off and it'll be good.
Yeah.
I think that's it.
Cool.
That's pretty much it. Cool. Thanks for tuning in.
Sweet.
So for Tasty FX, I got long the dollar yen. Yes, got long the dollar yen. See what happens. I've got the profit target at 150. See if we hit it.
Very nice. I'm long USD versus the Canadian dollar and New Zealand dollar versus the Canadian dollar.
There you go.
Yes. Took off a number of them today. And if you have questions, you can email support@tastyfx.com.
Indeed, you can.
Yes.
Glenn is at Glenn Frybarger with an A on Twitter if you want to give him some love. I'm at Trader Mikey B. Next to Trader Nikki Bat. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Yeah, I can see it.
We're back. It's still Wednesday, July 30th, 2025. This is Futures Power Hour, sponsored by CME Group and apparently the color blue. I'm your host, Chris Vecchio in New York. Ilya Spivak is back in San Francisco. Welcome, my friend.
Always good to be back. I've missed this. I've been watching markets intently, and they've been doing some things.
They've been doing some things, and the things started doing today because we have the acronym week beginning with GDP this morning. Of course, FOMC later today in just about 54 minutes time. And then we're going to have non-farm payrolls on Friday. That's not to mention the Meta and the Microsoft earnings today. We have Apple and Amazon tomorrow. It's a hectic few days around here. So what did we learn from today's GDP report? We may have learned what the Fed won't do, which is potentially not need to cut rates in September, or will they? Ilya, you and I have been following the GDP data in particular. We've been looking at the underlying core GDP in recent months, stripping away the noise of the exports and imports, stripping away the noise of government spending and Doge. And, well, Doge didn't really do anything to government spending. So we look at core GDP, final domestic sales or final sales to domestic producers, basically consumption and investment. And it's getting worse. Left-hand side of your headline figures, this comes from, I believe it was Jason Furman, one of his graphs. We see here, this is top-line GDP, was 3%. Nice bounce back in line with what the Atlanta Fed GDP Now growth tracker suggested in their update. That was released yesterday for a 2.9% rating. So if only evidence in real time why we pay attention to that one more than the others, it tends to be a little bit closer to the actual result. I digress, though. Our core GDP reading, it was 2.9% in the fourth quarter of 2024, revised down to 1.9% in the final reading of the first quarter GDP, and the first iteration of 2Q GDP is at a paltry 1.2%. This is the worst that we've seen since the end of 2022, and it goes to show that maybe those who are calling for a rate cut, maybe they're not so off track. So we won't get a Fed cut today, but data along this trajectory over the next few weeks, weakening consumption and investment, that could tip the scales for a September cut.
Certainly. And I think this is really what we see in these numbers. I mean, I've been banging on endlessly that the first quarter had the weakest consumption since, by the way, post revisions, the COVID quarter. So let's just let that sink in. The first quarter had the worst consumption since that quarter where COVID happened, and we saw all of that brief recession. And 68% of the economy is consumption. Let's strip the noise away completely. Let's just look at that. We see a mild rebound in consumption this go around. But when you compare to what this looks like for what is a normal contribution from consumption to a given quarter, this is paltry. And so when you look at the noise and you go, okay, so imports, again, another big swing. This time they're up. The contribution was 5.2 percentage points of GDP. Investment was the big drawdown, a 3% take away from GDP, because ostensibly all of those inventories that got stocked up in the first quarter are starting to get wound down, because we're seeing the companies that front ran the tariffs spend down those defenses. So this is only going to get more normalized in the coming quarter, and you can see how, as over the coming quarters you strip away these defenses, the tariffs really start to bite. We seem to be sinking in on a 15% rate across the board, which ostensibly looks worse than the reciprocal tariff bottom that we announced in April, apparently. So we're getting to a place here where the winds are not looking great for U.S. economic growth. And of course, again, as I've been banging on endlessly, if the U.S. economy falters, there is no backup. There is no backup in China. There's no backup in the Eurozone. They're both still at standstill. And so this is starting to look a little dicey.
The data haven't been looking great out of Europe. We did today have the privilege, Ilya, of getting some economic data out from across the continent ahead of our own. German growth quarter over quarter was minus 0.1%. Eurozone growth was only 0.1%, down from 0.6. So Europe's growth engine is slowing down. Germany's year-over-year growth rate is only 0.4%. That's paltry. Overall, Eurozone growing at 1.4%. Paltry, not great. So if the U.S. falters, what do you have left? Well, not a problem for stocks here today, at least. We've been grinding higher ever so slightly ahead of this Fed meeting. Ilya, we've been reconstituting our technicals over the past few days here to take a different perspective. I want to get your take on some macro level technicals first. I wanted to ignore, and I'm thinking that what happened in April, right? If we discount everything that happens after April 2nd, we consider April a wash to just resetting the table from Liberation Day onwards.
Yep.
The market effectively enters May right where it closes on April 2nd. April 2nd, the Nasdaq's 19,950. Okay, we go into May. May 1st, we close at 20,059. All right, so we're basically at the same point. If we were to examine the uptrend in place from the China, US, Geneva tariff truce onwards, you get a really neat little channel here that's actually defined the past 2.5 months of price action pretty cleanly. And you can do this in the Russell and you can do this in the S&P 500 where it's really May 9th onwards and you get this very clear uptrend. So to that extent, we do see that the market's still here on the highs. On the 4-hour time frame, we see a NASDAQ that's still holding above 23,430, which resistance now becomes support. All that's to say that despite the gains here, it is a crowded market. CTAs are still in the 90th percentile in terms of equity longs. We're aware of the fact that S&P 500 valuations have re-entered the zone where they were back during, the .com bubble. Ilya, what's the timing of all this now? We just had a GDP report that tells us recession isn't imminent, even if things are slowing down. Why wouldn't stocks just hold on here and keep grinding up absent a new catalyst?
Well, they certainly might, but I think the price action we've seen since the beginning of the week and the lead up now into the Fed is not the kind of thing that would tell you that the markets have already resigned to these factors. Now, that's not to say that they won't ultimately resolve to the upside. We don't know, and no one does. But what I think we can say is that we opened this week with a apparently confirmed deal on trade between the two largest economies in the world. China is the largest single country, or the second largest single country economy after the US, but the Eurozone, by various measures, is either the largest or the second largest overall economic engine. And so when you look at all of this collectively, you say, okay, well, what could possibly be better for growth than if the can with China gets kicked down the road on these tariffs, which apparently it has, again, and negotiations are resuming, and you have a deal between the EU and the US, apparently. They're going to eat a 15% tariff as part of the deal. Now, of course, they're not going to eat it. U.S. importers are, but it will diminish demand for their goods. We've seen, of course, that the power of these tariffs is really on display. The administration is touting all this revenue they're raising, but who are they raising it from? U.S. businesses. So this is essentially just a tax on U.S. business, which doesn't help the economic growth situation clearly, and we're seeing it, including in this GDP data. But what does the market do with this uncertainty removed just in sentiment terms? There's a gap up and we fade. And we fade for a second day thereafter. It's not surprising that we've bounced a little bit going into the Fed. This is, of course, a big event risk. The markets don't want to be one-sided in terms of their positioning, but we're not even recovering fully from yesterday's downturn at this point on the S&P. It's a little bit perkier on the NASDAQ. It's not a whole lot more supportive for the Russell, which has been a kind of downbeat going back even before this deal. I mean, even a week ago, perhaps, is sort of the formation of the range internally on the Russell, maybe even going back to July 10th if you squint a little. So the level of conviction in these markets is not great given positive news flow. Now, they haven't suffered any kind of confirmed technical damage whereby you would say, here's a top, it's confirmed, there we go. But a Fed that isn't going to, it's close. A Fed that isn't going to confirm today that it's going to get any more dovish after today, something that might be being telegraphed by the roaring US dollar in the wake of these announcements, that might start to tell you a story about equities that's not quite so supportive.
Russell here is really hanging on by a thread. I mean, we've talked the past few sessions about how we're running into this trend line off the low from April, one that we have here in middle of June, or now, July. We pushed below it yesterday. Today, we're trying to poke back above it. Ilya, you're more of a man for horizontal lines anyhow. So the broader range is still very much contained. This could be a flag that's happening here, right? This appears to be a nice little equidistant channel of sorts that's been forming up here as well. Maybe that's what's occurring. This could be your little bit of like a cup handle situation over here, or heck, an inverse head and shoulders pattern. So the bullish contours are there still. I mean, the NASDAQ hasn't broken down or given up its former swing highs. The stepstone pattern that we've seen throughout July actually has been very well maintained. We continue to do this thing where we level up, carve out a new range for a few days, level up. Reminds me a lot of the price action last year. For what it's worth, Ilya, because you haven't been around, I've been talking out of both sides of my mouth. You left, and I felt like that gave me the intellectual freedom to finally be a little bit bearish.
Welcome.
No, so I've been playing up the short-dated NASDAQ calls and then hanging on to out-of-the-money S&P 500 puts dated at the end of August. And while those S&P 500 puts haven't been working, it also feels like this is a market that's really priced for perfection up right here. And August is a month where volatility historically over the past decade has expanded the most in percentage terms. But you think about the August, September, October window, and that 3-month stretch has produced the biggest percent and nominal gains in VIX, period. End of story. We all have memories. We all remember the last several years. So I just don't see the, pot odds, as a Sosnoff might say, as pressing into too big of a long position if we're going to continue to chase this higher. It's more prudent to just take something short term where if we are wrong and it goes against us, it's a small loss, as opposed to having laid out a new 45 in, 21 day out. Let's look at something like 25 delta out of the money and hope that it gets there in the next 3 weeks. That just seems imprudent.
Right. And obviously I've been bearish, but I've been doing so in this kind of very reserved way where I have a lot of duration. I'm using risk-defined put verticals, and I'm keeping it very, very small so that if I'm wrong, I am wrong by a very small amount. But if I'm right, it really has an asymmetric tilt. And so I'm sitting on tiny, maybe 0.5%, maybe 0.25%, depending on index losses, having gotten a little bit early. They are more than compensated by the ridiculous rally in the dollar that we've had, which I have been long. And so I'm just sitting here waiting for the next shoe to drop. These moves in gold, the move in the dollar, the move in the bonds, especially at the long end, all of it seems to be lining up for that second half year scenario that we've been talking about before I went off on vacation, where the focus is on growth. The fog of geopolitics, the fog of trade policy lifts because the markets essentially discount what all of it seems to mean. And we get to a place where everybody goes, right, so we don't need to change anything here on those fronts. We don't need to chase the headlines, at least for the most part. Where are we macro-wise? And today's GDP number is just another brick in the wall of this is not good macro-wise. And if the markets aren't going to get ping-ponged around this headline and that on reciprocal tariffs or the Middle East or this or that, then the markets are going to have a chance to really digest that idea.
Ilya, let's play a game here. It's the end of the day today. We're getting onto overtime. The S&P 500 is going to be up 1% or down 1%.
Yeah.
Keeping in mind that we're likely to have 2 dissents at this Fed meeting. We haven't had 2 dissents at a Fed meeting since September 2020. We haven't had 2 governors dissent at a Fed meeting since 1993. So Waller and Bowman are expected to dissent, given the fact that prior to the Fed's communication blackout window, they were laying the groundwork for rate cuts, and they both came out and said that they would support a rate cut in July. Notably,
like somebody wants a job next year.
Oh, well, there you go, taking what I was going to say. But that's exactly it. Bowman, for example, was appointed by President Trump, and it's among monetary policy watchers for those of us out there who have evolved beyond watching paint dry, if you were, as it were, Ilya. The rumors are that Bowman wants to have her name in consideration for the Fed chair job, too. So staking at a position to call for a rate cut in July when Trump is, maybe a signal that she's willing to play ball. I digress. The point is that these 2 Fed governors are likely to dissent. They've signaled it well ahead of time. It's going to be the first time 2 Fed governors have dissented since 93. So with that backdrop, there's no cut coming, 2 dissents. If the S&P 500 is up 1%, what will Powell and co have said to the market? And if it's down 1%, what would they have said in that scenario? I'm looking for the buzzwords that people should be thinking about when we get the policy statement in 40 minutes and the press conference in an hour and 10 minutes.
I think the very first one, and probably the most important one, is the word uncertainty, because the Fed has been using that as framing, saying uncertainty is elevated or uncertainty is diminished, but still elevated. If we get language here that basically says uncertainty has continued to diminish, you would get a sense that the Fed is gaining confidence in what it needs to do. And for what it's worth, the market thinks that they are getting a rate cut in September. The odds at this point, just about 58%. It's not the greatest, but also, as we've talked about here, we just need to keep the odds above 55% or so as we go into that meeting. And if we think about, in a kind of slightly extrapolated sense, about what Jackson Hole is, what that central bank symposium is in August, it's not a pre-announcement of September, but it is a lens tuning for 12 months forward. And so the Fed will readjust the prism through which it wants markets to see what it's doing. And it's a kind of laying out of intent rather than action. And so if you get now this language about uncertainty coming off, you might expect the markets would conclude that they'll already get a green light of sorts to an easing cycle at the Jackson Hole Symposium in August before the Fed even comes to the meeting in September.
That's the chain.
So you might say, if the odds are 55% or over at Jackson Hole for a September cut, it's done. It's on. And so obviously things change, events sometimes spin out of the Fed's control. We have a growth risk coming in. You might see credit risk couple that. So obviously take everything here with a grain of salt. But the way this is starting to set up is, as long as the markets can maintain above better than even odds that there is this cut that's coming in September, that one is probably it. The real disparity is what happens next. And this is, I think, really where you're going to start to have to listen to what the markets do around how Powell explains it at the press conference. Because the real big difference between what the markets think and what the Fed thinks is for next year. The markets think 72 basis points. The Fed has owned up to 25. And so this is really where the disconnect is. And again, you come back to this language on uncertainty and risks to growth and the timeline by which you would expect the tariff impact to be onboarded. Now, I am really hoping that we're not going to have reporters baiting Powell, because it'll be fantastic television when we watch the press conference. The tour of the Fed's construction site was already one of the most amazing things to watch that you could see.
Oh, I thought you missed that last week.
Oh, no. I was watching intently. That was magnificent. And so as you watch this now, I'm hoping that reporters aren't going to take the bait, because Powell is just going to do Powell and shoot it all down in the deftest way. But I hope they don't waste their time, because everybody knows this is going to happen now. And so instead, we really should be focused on when the Fed thinks the impact is coming, and therefore which way the disparity on rates goes. Because the Fed's not going to update official forecasts until September's move. So now what you want to see is the markets start to get a sense from the Fed that their view is being embraced. I think if the markets are up 1%, it's because the Fed has convinced them that it's going to go their way. And that's going to be nuanced, but that will be, I think, the key for how all of this resolves.
I want to go back to one of our discussion points from last September about what type of rate cut we're getting.
Yes.
The type of rate cut that we get matters a lot. There are maintenance cuts, there are emergency cuts, and then there are recessionary cuts. This is the spreadsheet that we used a number of times in the fall of last year to discuss this. And the only thing different that's been updated, there we go, have been the numbers since the September 2024 cut, Ilya. A month out, it was a 4.1% gain, 3 months, 7.6. You got into March, things cooled off 0.4. But as of this morning, it was a 13.3% gain since the September cut. You know what's interesting about that? These data points haven't been incorporated into the series, but when the cut is a maintenance rate cut, the average 12-month return for the S&P 500 since 1980 has been 13.3%. So this has actually worked out really neatly, where if you were able to get to September and arrive at the conclusion the economy's fine, the Fed's cutting rates, why are they cutting rates? It's not an emergency, it's not a recession, so reflation.
Yeah.
In hindsight, that was the exact right call. And so if Powell is making the case today that uncertainty is diminished and they're not cutting rates because of recessionary conditions and there's not an emergency afoot, but the forthcoming rate cut is going to be one of the maintenance variety. It's a framework, a lens with which we can view upcoming data. And then if the data sours, the rate cut tips from maintenance into recession and you have a problem. But if the data holds up, rate cuts are coming for a good reason again. And that I think we should just lean on, right? That was the consensus view from looking at the data last September. How does Powell sell the rate cut? Is it for a good reason or a bad reason? And if he can sell good reasons coming, sentiment should be fine short term, even if it's crowded.
That is really the key. Because if you look at what the markets are saying versus what the Fed is saying, there is a distinct difference in the narrative. The markets are saying there is no uncertainty about inflation. You should get on with these rate cuts. The Fed is saying we're waiting for the tariffs to really materialize and get a sense of whether there'll be an inflation shock. And that's why we're so slow going. That's why it's only one cut for next year. It's not because they don't think that we need cuts. It's because they don't know. And so when we look at all of this, we say, okay, so are the markets concerned about growth, or are they just suggesting there's no inflation scare? And from that perspective, you go, well, why don't the markets think that there is an inflation scare? Is it because they don't think the tariffs will be inflationary? Or is it because they think that the tariffs will be so damaging to consumption because they'll be inflationary enough to spook consumers to such an extent that there'll be a growth scare. And there's no need to think about these things. Because for next year, it really is quite extrapolated. Now, for me, in my mind, the markets see a growth downturn. But you wouldn't know it by looking at the S&P. You'd see it in the recovering long bond, for example. But it's tepid for now. We don't have conviction. This GDP number was, at least at face value, a number that the markets can live with. So let's see what happens now. Let's see what Powell can sell. If he comes out here, and obviously we've just had the tour, the hard hat summit, as it were, and we see that the president is intent on pressuring Powell. Powell has the job of defending the Fed's independence. Ironically, that probably delays rate cuts longer because he cannot look as though he is kowtowing. In this sense, these dissents might actually help. But as we look at all of this, the real question is, will the markets buy it? Will they come out and go, there is no growth risk, we're just delaying maintenance cuts, it'll be a little longer, we'll have to suck it up for a little longer, but the trajectory is there, the bricks for an easing cycle are getting stacked up, it's coming, we can discount it, everything is fine, or the Fed is asleep at the wheel as there is a growth scare because they are being hemmed in by politics. And what's going to happen is they're going to have to allow some kind of economic choke-off before they can really go in a credible way. This will be, I think, maybe defining for how the market listens, not just to the statement, but to the press conference today.
Volatility here, 16 handle. We did a brief dip below 15 the other day, but we're back up to 16.10. Volatility futures, though, sitting slightly off by about 20 cents. The churn into FOMC persists. Sector winner and losers before we turn our attention to the bond market here. Top performer utilities, followed by semiconductors. Are those two related? Semis and data centers. Energy. Also, we see that oil prices are sharply up and natural gas prices are sharply down, and it makes data centers a little bit more profitable because the inputs are cheaper and the output is more desired. XLU has been great, and Ilya, we've been talking. I know for me at least, Exelon this year has been one of our trades going back to the phase 2 AI exposure from January. So this has been working out neatly when it was back under 40. In any event, though, we have those on the top. Outside of that, there's really no narrative to follow because you only have 9 ETFs in the green, 1 unched, and then 15 red, led lower by oil services. That's a 2.01% loss. And then the miners. We're going to head into gold, into silver shortly here, but it's really the commodities that are taking it on the chin today, which provides more interesting context for what the dollar is doing and how it's rippling through the global economy in this Wednesday session prior to the Fed. But bonds perhaps are seeing oil here because oil prices have been shooting up the last few sessions. President Trump is telling Russia they now have 9 days to come to a truce with Ukraine. There's been some interesting stories floating out and starting to circulate in Western media. Vogue just did a splashy article on a new Ukrainian general who might be being eyed to replace Zelensky following the country's corruption legislation that just didn't go through. Either way, there's clearly something happening here in the oil market, and I want to go there first for a brief second. Oil just doesn't go from 65 to 70 in 3 days without a geopolitical risk, some supply disruption being priced in. And perhaps it's become a little too much for the bonds to bear, which, as we know, at the long end of the curve, that's where our inflation expectations are imbued. So a slight overhang today, but you've only been gone for 10 days, Ilya, could I point out that 10 days ago, we were looking at a market that was mostly range bound in notes and bonds. And since you've come back, nothing really has changed to a large extent?
It hasn't. You really have to look at ZB to see where the changes are starting to occur, because here you've actually pushed through that band of support and resistance, that kind of axis band. And it's not surprising, frankly, that you're retesting back through it ahead of the Fed. But that is a convincing break. Now, it's not a big break. It's only a break of the immediate congestion. You still got those highs right around 116 that are holding. Obviously, we haven't even gone back to retest them yet, the highs from earlier in the month. And so it's still very contained, but something is starting to happen at the long end. What I was particularly taken with is that yesterday's long end rally happened alongside a surging US dollar. And so very different things are happening with the price of cash and the price of longer term money. And when you look at all of that together, you start to get this sense that actually Fed funds futures have it about right. And this might indeed be a growth scare, because you could then have risk aversion classic. You could have stronger dollar, stronger long end bonds, weaker stocks, just your risk off textbook classic that's starting to take shape here. And when you look at the geopolitics as an overlay, I mean, certainly crude oil surging today doesn't hurt the cause. But when you look at then what the implications are, what the read through is, do we think that this is something that's going to curtail the Fed's rate cutting abilities next year? Because for this year, we're pretty locked in. And that's really the question. Is there, in fact, a read through here? Certainly the Ukraine situation is very interesting, and certainly there seems to be something that's starting to move there. And we'll see how this goes. One of the more interesting parts of this EU deal on trade might be that, as usual, the Eurozone and the EU more generally have prioritized geopolitics over economics. This has been their story since their inception. It is, in fact, baked into the cake for how European integrationists think about the project going all the way back to the 1950s at its inception. It was always more about geopolitics and preventing another series of world wars, and not about getting the economics perfect. It was always, let's just get this done and we'll figure out the economics as we go. Well, one of the things that maybe was on the table here for this negotiation was, listen, we're going to get this 15% tariff thing done. You go around and you say you've won and you got everything that you wanted. And we all collectively turn the screws on Russia. We stop this wishy-washy situation. We get this done. And you might be seeing the oil market, of all things, sniff that out. Because what have we seen since the beginning of the week, since this deal was done? Stocks are anemic. The dollar is up a lot. Bonds broke out, maybe at the long end. And crude oil is up.
And crude oil is up here. Energy is really interesting. Actually, I was looking at the weather earlier today, looking at natural gas. It's like, how could anyone get long natural gas when I have weather like this here? 3 p.m.
I was just in New York yesterday, and it was 97 degrees with total humidity. You can't imagine how happy I was to see the fog rolling in over the hills of San Francisco when I walked out of the airport.
Well, you're missing a really fun phenomenon here today. At 3 p.m., it's going to be 99 degrees. At 4 p.m., it's going to drop down to 79 degrees. It's going to be a 20 degree swing in about an hour. So I'm looking forward to feeling that. That should be interesting. We do need to make our way over to energy, though, but we're going to stop in the metals first because the metal correction is underway. The technical tops that may have been carved out in gold and silver indeed have materialized in a more apparent fashion. Gold, especially here, which is now down to a new swing low relative to the start of this week. We did put in those two closes below the 1 month and the 50-day yesterday, which was really unique. We hadn't seen two consecutive closes below both of those in the form and function where, we don't really get that anytime going back to December. And it's after a break of the uptrend from the December lows.
Yeah.
Probably setting up a move back down to 33. If we see dollar strength continue, 32 and change, even deeper comes into play. It doesn't change the fact that an uptrend could be here. I'm going to say really unique more and more often just for Josh. But if we see a pullback, the flag is still in place, perhaps even by mid-September, down to near $3,100 an ounce. So careful sledding right now. That decline in gold volatility, just like we've seen in silver, where IVRs are basically sitting flat at 1, that's the contemporaneous thing that occurs, right? Oil vol, gold vol, silver vol gets sucked out of the market. Prices usually come in. People don't panic, sell gold and silver. They relinquish those holdings to find something that produces a higher return than a shiny rock.
Right.
Ilya, 37.70 is our line in the sand here for silver because it's the swing high that you have up on June 18th. Swing lows that we've had in recent sessions. We're dancing along it right now. Will Powell save and keep our silver position? I may be out of this by the time overtime rolls around. Yeah. So might have to throw in the towel and wait for a re-entry closer to 36. But this would be great news, Ilya, right? If gold and silver are getting crushed in August and the dollar's bouncing back, that's a global sign of confidence in the US dollar and the trajectory of the economy, whether or not we want to admit it. And that probably is good for the stock market.
Maybe it is a sign of confidence in the dollar. I think that much I agree with clearly. And we've seen this building for quite a while. Obviously, in April, when it looked like for a second there that the U.S. was going to try to spite everyone by surgically removing itself from the global financial system, which it itself constructed and placed itself at the center of, almost like a house having its foundation decide that it's going to go on vacation and leaving everybody else to hover and fend for themselves. Once we realized that was not what was going on, the fear that the dollar would self-immolate, essentially, has unwound. And there was a really interesting conversation being had around the increasing role of retail in the market and retail in FX markets being very bearish on the US dollar. And for that reason, the dollar being sort of slow to turn. But of course, now it's turned. And so you have a situation, I think, in metals where it was only a matter of time before that was going to be impossible to fight. And I think gold started to roll over. I actually flipped my position over while I was on vacation. I saw gold start to fade. I felt like, so I was short puts in there looking for vol crush and some upward progress. Once it started to look like we were back into that congestion range, that was about 2 days ago, I got out of the position and I actually flipped it to the other way. And so I'm actually a little bit short calls here now. Again, in a protected, vertical, risk-defined kind of a way. I'm barely risking 0.25% of equity on this thing. So it's small, it's comfortable, but I think you're right. It looks like we're going to have some kind of a pullback here. Now, I think the overall direction is still constructive, but we might get even as low as 3,200 or something like this if what we're carving out is a complicated consolidation flag kind of a thing. I think as you might extrapolate from those blue lines that you have on the chart, they suggest that maybe there's a path to some kind of a downward sloped consolidation. We have a series of lower highs here, not quite lower lows yet, but that wouldn't change the main and structural direction. We still have rate cuts coming down. I think the place where I depart here is that the confidence that this implies, the rebuilding confidence in the US dollar, is necessarily confidence in the economy. It seems to be confidence in the durability of the status quo going back to the early 1970s for global finance, the sort of fiat dollar-based system that, of course, has overseen unprecedented expansion in economic growth, economic prosperity, the spreading of that prosperity. Obviously, everybody's soured on globalization in the current iteration, but it has paid tremendous benefits. And so I think not even ones, but benefits nevertheless. And when you look at what you see in the dollar, I think the markets are happy that that's going to hold up. I don't necessarily think that when you have bonds surging at the long end in the same environment, that what this is growth confidence. What it might be, again, is risk aversion classic. And so we'll see how this develops now, because stock markets have to put up or shut up. If they like the Fed today and they jump, well, then we'll have our answer.
Silver potential top there, gold potential top, copper obviously sticking in the range. We had a news 2 days ago that Chile may get an exemption for copper tariffs, and Chile produces a large amount of the world's copper. So that would be less constraint on supply, which shot us up back on July 8th. Otherwise, Ilya, we have 15 minutes to the Fed meeting and we need to keep moving. So let's talk about oil becoming a bit of a nuisance for the market here today. We've been exploring the Radigan mindset here, both on Futures Power Hour and Overtime, even without him being around, about when it's appropriate to fade a geopolitical move in oil. And I think that we flagged this on Monday appropriately, noting that Trump had told the world that he was changing the timeline from 50 days to an indeterminate amount of time for when new sanctions would go into place against Russia. Yesterday, it was announced as 10 days. Today, we see a further squeeze because as part of the announcement for a new 25% tariff against India, a country that I thought that we had come to terms on a trade deal with a few weeks ago, I must have misread the news. We do see that we are going to be penalizing them with an additional layer of tariffs thanks to their role in buying and processing, refining Russian oil. So this is clearly tariff policy is now becoming geopolitical policy, or foreign policy, I should say. What will Russia do? Russia said that, they have to be prepared for war with the US if it comes to it. I guess we're in the throes of one of these geopolitical stress windows, Ilya. You know what bothers me, though? There's been no commensurate rise in volatility.
Yep.
We're pinned below 30 IVR yesterday and the day before and the day before. And we're stuck there right now. I suppose the question is, if this is really a geopolitical bounce, which I think it is, it's day 3. Is it time to start phasing in to a short delta position in oil?
I don't think that we have the evidence. It might be. We're getting to levels where we've seen some friction before, around 72. That's the last time that we had a meaningful spike, and that's around where we stalled. So I think we're getting there. Obviously, the ultimate high, that spike high, is closer to 76, but that was ultimately a massive gap followed by an aggressive sell-off. So you might say that kind of more reasonable fair value-ish levels on geopolitics concerns is around 72, 73. We're getting into that area here pretty closely. And so maybe this is where it all fades, but I do think you have to let the price action tell you. And what we have now is a series of, it looks like 3 strong up days. So let's see. Let's let the market say. As we've seen in these surges before, you get a big run up, then you get a violent downturn, then another bounce, then things kind of start to settle, and you start to see those candles with long wicks and narrow bodies. I know a friend of the show, Josh, loves candlestick formation. So this part of the show is just for him. You start to see those hammers, you start to see those hanging men take shape, some shooting stars, maybe some dojis, and then you get a sense that, okay, we're leveling out. The market has reached some level of comfort with what the level is. And that's where you start to go, okay, just give me a 4-hour close below an internal range. Give me an 8-hour close below an internal range, and I'm pulling the ripcord on this thing.
Yeah, there's been no break in momentum, and the rise here, right? You think about how the Israel-Iran war got spun up. Second week of June, energy prices, oil prices are up 13.01%. The week before Trump bombs Iran, they're up 1.18%. The week following the bombing in Iran, oil prices are down 11.27%. This might be a market where realistically, if we have a deadline, yesterday was 10 days, now today it's 9, this thing is stuck until next week, trying to fade it before we see what this deadline actually amounts to. But the second there's the notion of Trump clarifying, backing down, resetting, opening up negotiations, like anything that there's an off-ramp, maybe you get that pullback as aggressively as we saw following the actual bombing of Iran in June. Can't believe that was only in June. Felt like that was years ago.
Yeah.
I can't believe that was
this
only
stuff is coming so fast and furious, you forget. We're less than 6 months into this administration.
Natural gas here continues to break down, 3.061. This is sitting right on the edge for me, at the barrier of my threshold for patience and tolerance in my short iron condor here, because that volatility remains high and it is still appealing in a certain perspective. When you take a look at the energy sector, broadly speaking here, how do you approach this? Because the volatility certainly persists in these products more so than it is in bonds, in metals, in equity indexes right now.
Yeah, I mean, I think when you look at where you might deploy an incremental dollar, it becomes really difficult to deploy it for something like nat gas, because it's clearly ignoring whatever else might be going on. It's clearly disconnected from the macro narrative. The main attraction here is you're starting to claw your way around the November, October lows. And that starts to get interesting just in terms of positioning. But vol is still relatively high at 48. So if you were going to do anything, then actually looking for a directional reversal signal somewhere around these lows, if what crude oil is saying is true, if we are in fact going to have some kind of a turn in the energy structure, because the playing field of all things in the Russia-Ukraine theater, not the Middle Eastern theater, is going to really start to get upended, then what you need is maybe just to be short puts here, because there's going to be a directional rebound with some vol crush. And maybe that's what you get, but you don't have it yet, and there's no evidence of it. So it's really difficult to make a call here when you're sitting pretty much right on support.
I think we're on support
no indication of a breakout and no indication of a turn.
I don't take the gap open lower. That's the election day, in fact,
Yes.
Tuesday, November 4th. That gap open lower where we ultimately close. The line in the sand to me is the it's basically 3.01.
Yes. And you're right there.
We hit 3.016 as the low today before bouncing 5 cents, but we're still off over 8 cents here. So it's not it hasn't been a great day for natural gas, but I'm at my breaking point. And natural gas the last 2 trades have been such a hassle and source of indigestion, as mentioned last week and earlier this week. My rule of thumb, particularly around the summer, especially around the end of the year between Christmas and New Year's, if I'm having a bad stretch with a particular product and I know I'm going to be in a thin volume, thin liquidity, vacation time for the market, I just step away from trading that product for a few weeks, delete everything on the chart. Don't think about it. Don't follow the news. I'll ignore economic data related to it. I won't look at the EIA reports, for example. And I just got to reset the slate and kind of clear the memory cache so I can look at it with fresh eyes and know prior biases or even subconscious. Maybe I need to chase and make up for this tug and pull, which I mean, I certainly feel when I'm trading, and I fight it off most of the time. But I know my weaknesses right now, and I know that natural gas is bothering me and I want to conquer it. So if I make a third trade, I'm going to start to do stupid things. So let's be aware of our own cognitive biases here, Ilya. Dollar bottoming is continuing. Hello, Japanese yen, finding a new low for the month here today. Thank you very much. Last night it flashed higher.
I'm loving this.
Last night it flashed higher ever so briefly because we did have this 8.8 Richter scale earthquake. Geez, out in the Pacific Ocean. There was a tsunami watch for Japan, tsunami watch for Russia, Hawaii, parts of the West Coast. Thankfully, was not that serious. But last night when I was watching the yen, I was thinking about what happened in March 2011 with the Fukushima prefecture earthquake and the ensuing damage to their nuclear power plant, because the reaction in the yen initially was the yen strengthened a great deal. And then we had to have, and then weakened first dramatically, and then it strengthened a great deal because we were talking about repatriation of yen in order to help with the rebuilding efforts. And so you saw last night when the tsunami warning was out, the yen was creeping up. As the news flow came in this morning that damages were going to be minimal, particularly to Japan, it fell off the face of the earth. And then you get the GDP report, and that kind of did it in for the rest of the day so far. The yen has dispatched all of the election gains, which I think says a lot in this environment. So that's working out well for us with our 0067, 0068. Put spreads, we've been going in and out of those, taking profit, extending duration, Ilya. With the euro here, this looks like a heck of a breakdown now with that engulfing bar for Monday, below the 50-day yesterday, and again today, which would mark the second consecutive below the 50-day for the first time since February 27th, 28th. This is a market that really legitimately may have turned. I know it was a painful week last week, but we've endured. And I think we can say that this is now the tactical trade, that it helps inform what we can think about for the buy America, sell America dynamic, and moreover, how we should be approaching gold and silver here in the interim period.
Absolutely. The trade that's been really working for me now for a while. I've been on this long dollar narrative, as you know, for quite a bit here. And when the dollar had a little bit of a spook and pullback last week, I used it as an opportunity to add. And so I am quite long at this point. I'm short the euro. I'm short the pound. I'm short the yen. I'm short the Aussie. And so I'm sort of the same sort of thing that I did with selling dollars in the first 6 months of the year, where I really loaded the boat, and it more than made up for my attempts at fighting the stock market, because of course I was fighting it in very, very tiny tester positions, as I tend to do before a move is confirmed. Well, I did the same thing with the dollar, but boy, did that move confirm. So I was loading into dollar shorts with gusto all of the first half of the year. I am starting to get to these kinds of level of exposure. Not quite there, not quite the full board. I haven't touched the Canadian dollar yet.
And that's looking nice. It's looking nice right now.
Starting to come around. So
54.3 IVR there.
Yeah. Really the only thing I'm waiting for is in 3 minutes the Fed will say something. So we'll see. But I am very long dollars now, and I expect that will continue.
I point to the Canadian dollar because it does have a 54.3 IVR. We've seen here, we had that failed attempt to get back over 74 last week. We lose the 1 month, we lose the 1 week, we lose the 50-day, we lose the uptrend from the low. February, April, mid-July here onwards, that's lost. Yeah. Ilya, for those horizontal men out there, we have the swing lows in June and July.
That's where I'm
That's broken. Right, British pound, similar setup, maybe a head and shoulders pattern there. There's your neckline break following a loss of the uptrend going back to the lows we have here in January.
It's where I started, actually. I started laying out long dollar exposure when the pound appeared to top back at the beginning of this month, and it's really followed through here. It does look just like a head and shoulders pattern, and in fact, about as classic of one as you can think of. And so when you extrapolate that out, you are looking at pound maybe back down to something like 129.40. Depending on how you set up these levels. And of course, that's right in the middle of that congestion area that we had back in March going into April. So it would be a very auspicious spot for a sell-off to land.
Ilya, calendar tomorrow. It is busy. It's the lighter of the few days ahead, but we do have PCE as our week of acronyms continue. We can impute most of that from the PPI and CPI data. Is it at a place where the Fed would say it's appropriate to cut rates right now? Probably not. You want a 0.2% month-over-month run rate. We're currently at around 0.3% on the core. They're going to want to buy time. But that's it for us, because you and I need to get ready for one of our favorite times of the year. It only happens 8 times a year, Ilya. But Fed Chair Powell and the FOMC are going to be releasing their policy statement in about a minute's time. You and I are going to take a quick break. Everyone else should be prepared for that tier. We're going to get off air, and then everyone's fortunate because guess what? It's Wednesday. It's time for Radigan and Sosnoff, Truth or Skepticism, up next on Tasty Live.
Hello, everybody. We're back. It's another edition of Truth or Skepticism. I'm Tom Sosnoff here with Dylan Radigan. Mr. Radigan, how are you today?
Very good. Nice to see you. Always a pleasure. It's with these Wednesdays sneak right up on you. Yeah, but I'm happy to be here. I've been thinking through this whole GPT. So do you use GPT on the daily? Is it on your phone? Is it an app? Do you pay the $20?
No, but I use a reasonable amount of AI. Nothing crazy. Mostly for searches and things like that.
How do you use it?
Mostly in searches. I have an account. I have a Chat GPT account. I have a Google. Couple other ones too.
Okay. And is there one particular one that you use? Do you use Google search anymore? I guess would be my next question.
No, I don't use like the old. I only use the AI
original
search. Yeah.
Okay. So Google search is no longer part of your generally. I mean, I'm from maybe from time to time, but in general, you use an AI search, not a Google search.
Right. On my computer, on my desktop, I use an AI search. On my laptop, I use an AI search. On my phone, I use kind of a traditional search.
Okay. I use GPT. I don't use anything other than Chat GPT. I do pay the $20.
Okay.
And I use it on my phone as an app.
Okay.
Like I basically have it on my toolbar on the bottom of my phone where I used to have this Google search.
Yeah.
And now I use it for Google, for some document things, for some PowerPoint things, this kind of stuff.
Okay.
But even you can use it to design things. I designed some baby sneakers with it, this stuff like this. A few things sort of, I guess what I'm getting at is I feel like, how we talked about the digital transition in the financial markets years ago, where like, oh, with 2001, we're going to go to decimalization or we're going to go to digital markets, but we're still going to do open outcry and it'll be a mix. And then it wasn't a mix because as soon as it went digital, the open outcry was dead within a matter of days or weeks or months. It didn't take 5 years to make the transition once we went to a digital marketplace. And I feel like whether the transition from, I'm just looking at search right now, from the transition from traditional search, Google search, to sort of AI search, or what I call GPT, but that's my own little thing. It seems almost universal very quickly. I mean, I'm sure there are a lot of people still using Google search right now or whatever, but It's probably not as many as you would think. And it makes me think that we're in another one of those sort of, I won't say instantaneous, but semi-instantaneous technological transitions, where it's not a 5-year transition where we're going to migrate from Google search to AI search. It's a few weeks or months, and all of a sudden everybody is using an AI search almost all the time. it's not just a search function, as you know, right? I mean, and sort of it's a secretarial function, right? It's letter writing, it's making PowerPoints and Excel spreadsheets. It's sort of junior level Goldman analyst kind of work, or senior level executive assistant kind of work. And I know that in the past, when you and I have talked about AI, you've been fairly cautious in saying, well, yeah, obviously it's super interesting, it's super awesome, and all the obvious superlatives. But you've also held on to the idea that, listen, I don't say held on to. My recollection is that your characterization was that its impact on things like profits is unclear still, and that its impact on things like sort of mid-level manager and junior sort of Goldman analyst type work is also unclear. And I'm just curious whether your opinion has changed at all in that regard.
It's funny that you say this, because I'm getting more and more involved in AI through different investments and through different projects that I'm working on. So I feel like I've taken it up a notch as far as, trying to grasp a bigger picture.
deeper into the pool.
Yeah. And I'm much more of I consider myself, I lean towards being an entrepreneur more than I lean towards anything else in the way my mind works. So I've been trying to figure out, like, I'm always thinking about monetization of AI and things like that. And one of the things that I've fully come to recognize, and I'm not sure that everybody else yet realizes this, and I'm talking about a very basic, naive level, is that AI on its own it's very challenging to monetize it. AI can do some amazing things, but it doesn't have a personality. It doesn't have a promoter. It doesn't have a differentiator attached to it. As much as you think you can create this, you cannot. And so its ability to sell, its ability to engage, sell, promote does not exist. And so what AI is kind of a little bit how you described it. It was pretty accurate, but as cool as it is, it needs a human component. There's no warmth. It has no personality. It does not have the ability to get.
Who else doesn't have a printer? Who else doesn't have a personality is a junior Goldman analyst.
Okay, that's entirely possible, and I'm not sure exactly how that analyst fits into the equation, but I guess from the way I look
I feel
at
like
things,
that's the job that's threatened by. I feel like what I'm getting at is that there's a slice of jobs that are between junior analyst and senior executive assistant that are being taken away, that are the first to go.
I'm not sure that I doubt that, or I question that at all. I think that in a lot of different industries, a lot of professions, I think that's true. But the hard part is, if you think of yourself as a creator, like I think of you as a creative person. I think of me as a creative person. I love to innovate. I love to do things that nobody else has done before. And AI is not capable of that. AI needs a roadmap. It needs direction. It needs to learn from something else. And so it doesn't have the ability to create or innovate. I know somebody's going to say, oh, that's ridiculous because it can build you blah, blah, blah. It can do 1 million lines of code faster than you can do 1,000 lines of code. I get that. It's not the same thing.
And I totally agree with you. And I actually think the creative professionals, and that's why even tactile things, handmade furniture, beautiful cars, beautiful homes, like AI is never going to make a luxury Italian sofa couch, right? Like if you want some special, kangaroo leather couch, like someone's got, that AI is never going to make a thing. I guess is my point, whatever the thing is, although somebody might argue that the design of the thing or the robots that make the thing or whatever. But anyway, at the end of the day, things are going to be things. What is interesting for me is whether there's a social disruption. Like, so I accept all that. And I view you as a creative, and for sure you need human connection to sell. If you don't sit across from somebody and have a real conversation, all these things. But I feel like that's different from a whole slew of pieces of what would be traditionally sort of white collar jobs that are not sales jobs, but that are analyst jobs, or that are marketing jobs, or are executive assistant jobs that are going to go away much fast. The same way that open outcry floor traders went away fast. You know better than anybody. It didn't happen slowly.
No,
it happened quickly. And you were agile enough and lucky enough and hardworking enough to make it through the transition in a beautiful way. But not everybody makes it. And it's certainly not as well as you did. And I just wonder if we're in another one of those moments, but for a different sort of professional way.
That's a really good point, because trading is a great example. The exchanges, when they went fully electronic, basically traders became outdated overnight. They were essentially rendered useless almost, in a very short period of time. Of course, there's still a small percentage hanging around, but for the most part, the trading floors with thousands of people went away. But what's important to note about that is you can look back at that and say, oh my God, that is the death of the exchange, the demise of exchanges. That's the end of trading. The reality was, and this is the same argument I make for AI, is that's what it took for the business to explode. The inefficiency of open outcry and individuals being replaced by, incredibly efficient technology allowed the entire space to explode over the next 20 years, which is a relatively short period of time, or 25 years. And the entire business is different now, and it's a massive enterprise worth, trillions of dollars, where before it was a fraction of that, 1/120th, 1/130th of what the size it is today. So, if you look back at it and you said, well, is that a bad thing? And the answer is, of course not, because it was going to happen. It was necessary. That's the way I look at AI. That's the way I look at this entire space now. Are we going to lose a lot of white collar jobs? Sure, probably. Are we going to lose a lot of jobs that can be arbed out of the system through AI? Of course. But the bottom line is that either what it does to kind of jumpstart the economy, or to accelerate, as an accelerant to the economy, I think you're going to see massive growth due to AI. And yeah, sure, you're going to lose some kind of jobs, but people are going to be retrained for other jobs and other opportunities, because you're going to have a massive explosion in the economy.
If you had a child graduating from high school right now and going into university, or debating going to university, I'm assuming that you would recommend that they do go to university given the opportunity.
1,000%.
Right. And I believe I know why you make that recommendation, which I think is probably for the same reason I would make that recommendation. And I have two nephews right now, one at university here in Milan, and another one who's going to be a senior at MIT, who's studying AI at MIT. And I talk to them both. They're both young men, and I talk to them regularly. And their entire relationship with homework, their entire relationship with information is different than anything that you or I obviously experience, because knowing things is no longer a thing. The skill is to know how to find things out. The skill is not to know something, although surely people do know things, but that the skill that's rewarded now is not to know things. The skill that's rewarded now is to know how to find things out, figure things out, and put the things that you figure and find out together in a way that is persuasive in communication or in creation of some other thing.
Yeah, that's the reason. The reason that you go to university or you go to grad school now is, I mean, the know-how has been commoditized. The maturation process and the networking process and learning how to apply that stuff, like the practical application of all that and how to use that and monetize it, that is where that's all the value. That's why you go to school. So it doesn't matter, I mean, it's great if you can get, if you're super technical and you can get a degree in data science or AI or whatever, fine.
Biochemistry or whatever.
But it doesn't matter if you want to be a poet. It really doesn't. Like, for me, the creative talent is equally as important. And, so I think the reason you go to school is for everything that you thought was, for everything you used to think were the reasons, those are no longer the reasons. The reasons, because
Totally.
anybody can learn anything. The reasons today are just to mature, just to network, just to learn
And
how
the
to be.
just the social stabilization, to have that interaction and just the cultural capital of becoming.
Yeah.
It's like an in-between space for a human being who's no longer a child and not yet an adult.
That's right. Learn how to be reasonable, learn how to be likable, learn how to talk to people, learn how to articulate things, learn how to differentiate yourself. That's the beauty. That's what school's all about now. And one of the things we don't accept enough in this world is mostly everybody's really smart. And and we should appreciate that, and we should use that to our advantage. And one of the things about leveling the playing field with respect to know-how is accepting the fact that most people are very smart. They just apply themselves in weird ways because of the old roles that were available. Now, I think the roles change so people can apply themselves much more effectively. And I think a lot of that is due to what's happening technologically, on every level, starting when you're in grade school all the way through your, in a master's program. And when you get into the workforce now, we are seeing some very, very talented people, and the real challenge is just getting them to learn what the purpose is.
Mm-hmm. When you think, I like the open outcry transition as a comparison to the AI transition.
Sure.
How many months or years do you think it was between when you had a full floor of screaming traders and no electronic trading, and when the floor of any exchange was basically a museum or a television set?
I mean, within a year, you could see the trend. Within 3 to 5 years, it was over.
And do you think that same timeline applies for AI relative to what?
No. I think the timeline is way shorter now. Everything gets shorter. Nothing gets lengthened. Everything gets shorter. The learning curve, the process. Now the one thing you got to realize, especially in the world of finance, it works both ways. And the consumer, the individual investor, the self-directed investor, the do-it-yourselfer, the pure consumer investor, they also have access to stuff that they never had before. So so their learning curve is a fraction. We used to train floor traders. It would take 2 years minimum before they learned how to make money. Now you can take a retail investor, and in 2 weeks, they can ramp up with, years of knowledge. And so I think it's a really positive thing.
And so the other side of this, whether it's the open outcry transition or the AI labor force transition, is these types of transitions invite all sorts of catastrophization of what will happen to the floor, what will happen to all the families of all those traders, what will happen to all those traders. And I would argue that the AI transition is bigger than the floor. It's sort of like, it's the same thing where you could say, well, what about self-drive? What about the truck drivers? Self-driving trucks. What about all the cab drivers? I mean, we've been down this road a million times. No one does anything about it. No one can do anything about it. The ultimate, the cliched metaphor is the horse and buggy. But sort of how do you make peace with, or how do you imagine sort of managing the disruption in the instability that comes with.
I mean, what about all the stagecoach drivers? What about all the
No, I get it.
What about all the line judges at Wimbledon? You know, like, you know,
The
technology
laser
is
beam.
yeah, technology is a wonderful thing. And, you know, you figure something else out. I mean, that's, you know, life is too short to be locked down. And and I think one of the things that young people understand today better than my generation is that, you know, is that things are they're very, I was almost going to say they're transactional, but they're really transitional. And you're not locked down. You know, you don't have one single path to take or one single vertical. You're essentially, everything is, you know, everything's available to you now, because the learning the learning curve is short. The amount of information is always in front of you, and you don't have to be locked into a single vertical. So you can really do anything. That is a very powerful economic motivator. It also eliminates a lot of the dysfunction in kind of a economic class system. This way, it helps to eventually will help to alleviate a lot of the wealth disparity.
Yeah, so I was going to say, so you think it increases economic mobility over time?
Of course, it has to. That's the beauty of technology. I mean, that it absolutely does. It has to level the playing field. And you know, everybody talks about AI as, oh my God, you know, like they think about all the illegal uses or the nefarious uses or the dangerous
Doomsday
things.
kind of thing, you're saying?
Yeah, but the other side to it is, I mean, how much is it going to speed up our lives and speed up the process of just, you know, making people more mobile, in a sense that just giving you so much more optionality on an individual basis. I think it's going to be extraordinary.
I totally agree with everything, which may make this a less interesting conversation. But I do wonder, like, the reason I pause is because I feel like I hate myself for even asking this question, but I'm going to do it anyway. So please forgive me. But there's a world that is there's a percentage of the community of young people that are disenfranchised. That's always been the case forever. That's not a new phenomenon. So I'm not suggesting that that's okay. But but the risk is that disenfranchised community now has the availability of widespread video games, widespread pornography, and widespread marijuana.
Okay.
All three of which make it easier to sort of pacify the brain or whatever and maintain a total level of disengagement. A social scientist would argue, well, this is a social disaster in the making. We can't have an increasing percentage of the young people alienated at this level, and that as technology benefits the people that have this motivation, discipline, intellectual, but like what all the sort of levels of you don't have to be the smartest person in the room. You just have to be willing to get up in the morning and you know, do something. It's not about it's not about intellect. It's just about like a willingness to flip on the lights.
I think I like that better. I don't think you need to be the smartest person in the room. I think you have to be the one who's willing to get up in the morning. Right.
And so when you hear people, I'm thinking of like this, I don't know if this guy's got this man, there's a guy, Scott Galloway, talks about these things, whatever. There's a couple of sort of talking heads in you who are like, oh, well, with a huge social crisis because the young men are, and I listen to that and I think that's a bunch of fucking bullshit, excuse my language. I'm like, okay.
Total bullshit. Absolutely, like, 1000% bullshit.
For me, come on, like, let's go. Like, what are we doing? And so I don't think it's BS because it doesn't exist, but I think it's BS to indulge it in any way. And I don't think there's anything that can be done about it other than to encourage anybody around, the young men and women in my life, to get out of bed and do something every day. I mean, just as sure as I encourage myself, anybody at any age, when you wake up, you should get up and go do something. It's not a complicated thing, And I feel like AI becomes the newest excuse for why there's nothing for you to do. Basically, is what I'm getting at. It's like a cop out.
You know what's funny is you started off this conversation today by saying something. It was just an offhanded comment you made where you said, I was designing children's shoes. Remember that?
Well, I used AI to design some children's shoes.
No. I know that. My point is the fact that you can say, you, Dylan Radigan, okay, you were not classically trained as a sneaker designer or clothing designer. Fact that you could,
I still don't know much.
Of course not. But if you had to sit down with a pen and paper and design kids' shoes, it's a challenge. It would be a challenge for anybody, but you and me, yes. The fact that you're designing kids' shoes because you have
because I got a company with 500,000 Instagram followers in New York. They are in love with the shoes. They're like, give me a proposal for, some baby shoes.
I understand.
I don't know what. I went to ChatGPT. I'm like, give me some baby shoes. They bing, 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 bing. They're great.
That's my whole point. So it's the person, but nobody's going to come out of the woodwork and say, Dylan Radigan, make me some baby shoes. The point is, you figured it out, and now you're using the technology to help grow. My whole point here is that the amount of opportunity that this opens up is it's ginormous. I mean, somebody like me can go build stuff now, that I could never even consider building before. And that to me is exciting. And somebody else, like you said, is going to worry, oh my God, this is going to replace, my cousin Nick, who's working in a machine shop somewhere. I'm like, I don't necessarily know if that's true. And if it is, I don't necessarily think that that's bad, because markets move. And one of the great things about being a trader or trading for my whole life is that I understand that markets move. I don't look at the world as it's being static. I think you have to look at everything and in it dynamically, and you have to consider everything kind of through the lens of that, through those dynamic lens. You have to look at everything as it's an opportunity. And I think that's one of the things that technology does, and specifically that the direction we're going with today's technology is going to allow us to do. Nothing is off limits. Nothing.
Mm-hmm.
I mean, there's physical
Literally
things
nothing.
we can't do. I'm not going to be able to go hit a golf ball 400 yards or hit a baseball out of Wrigley Field, okay? Because physically, I can't do that anymore in my life. But everything else that is every intellectual challenge, you're going to see.
Like you said, I wouldn't even consider. I would need a shoe designer. I don't need a shoe designer. But I mean, I think you could design more complex. I'm sure you can design things more complex than a shoe. You could probably create a customized Porsche 911 and send it to
here's the
Germany.
Thing. You may need a shoe designer still, but your shoe designer, if your shoe designer was worth $100 before because they were super talented with all the skill they had, now they're worth $500 because the technology is giving that shoe designer so much more to work with, that you take that original skill set. Like, I would take a skilled shoe designer over you designing baby shoes any day of the week. The fact that you can do it is amazing, but what a skilled designer can do with that same information will blow away what you can do, and therefore you have the ability to build something that's so much more valuable. What I said originally was that AI can only can do so much. It only can do what it knows. It needs to learn from something. And so anybody can do that, which means that essentially that original design is essentially been commoditized before you even start. So what you have to get to is the next level where you take that really skilled person and then you have the technology interpret their skills to take it to a different level where it has value.
how does any of this migrate back into the financial markets in a way that is meaningful? Is it a reason? I mean, the simple thing, right? The knee jerk is, well, better buy some NVIDIA, like that, but I just wonder, or does this affect, like, do the margins, do the profit margins get wider at the banks? Is there a world where
I think the example we gave at first with the exchanges when they went fully electronic is the best example. It's initially like, oh my God, we're all out of business, to, oh my God, this business increased 50-fold. And so the way you have to look at it is there's just so much more opportunity coming in the near future. Things are going to be so much better. All the inefficiencies are going to be arbed out. There's going to be so much more opportunity. Opportunity by definition becomes so much more. Everything's going to be priced right. It's going to be all efficient markets. Everything's perfect. And so the opportunity is going to be all over the place. It's going to grow the economy by leaps and bounds.
But that doesn't translate into an investment hypothesis other than positive drift plus, plus.
You're right, because the markets are too smart. So the markets, and I was really slow to absorb this or to adapt it in any way. But the market's way smarter than I am or you are or anybody else. And when the market, when NVIDIA was trading for, let's just say, the equivalent of $10, because it split. So it was the equivalent of $10. And now it's, now it's 100, almost, let's call it $200. Because it was 100, then it split 10 for 1, whatever, and then went to over 1,000, split 10 for 1. Now it's back to the equivalent of crazy numbers. But we're talking about the markets recognize this, and the flow of money actually suggested that this is what was going to happen way before any of us could even appreciate the reality of what the markets were telling us. Like the markets figured this out a year before any of us thought it was anything other than just a pump and dump or a crazy scheme. This is what happens all the time. And, it's wild when you look back at it, you think, oh my God, I wanted to short this stock at the equivalent of like what is $10, and now it's $200, and I never figured it out until it got to 150. Like it blows your mind. But that's how smart the flow of all that capital is. That's why it's hard to fade that. But it's probably priced right for the future now.
One thing we've been talking about on overtime is the idea that the tech CEOs, just because I know this week has a bunch of these earnings and all this stuff, so I'm just going to do a moment of market talk with you, if you don't mind.
Sure.
That there's an incentive, particularly because of the Trump tariffs and all these things, to basically guide it to be as negative as possible in the conference call, whatever the numbers are. Use the second quarter conference call to be like, oh, the tariffs, uncertainty, et cetera, as a way to basically try to set up a good second half.
No.
Do you think that that's the thing?
No, that's a ridiculous argument. I don't like that argument at all. I think Vecchio brought that up to me this morning, and I do not like it. I've never met a CEO. I know Elon talked it down a little bit, and occasionally you'll get a CEO on bad numbers that tries to talk things down.
Which is kind of famous, who is always for trying to.
But there's no such thing as a CEO. Life is too short now. As a CEO, as an athlete, whatever it is, a movie star, you're only as good as your last quarter, your last 6 months. You don't have enough leash unless you're the founder, okay? As a hired gun, you don't have enough leash to say to the marketplace, you know what?
Play a game.
We need some time here to build this thing back up. You can't do that. Nobody does that. Everybody goes out and says, hey, you know what? You put your best foot forward, and you make
swing
your
for the
teams
fences every day. No mercy every day.
Well, you don't have to swing for the fences, but you got to grind up every day, and you never set expectations down. The companies that do that, I would never buy that company.
That it basically, it's a red flag for amateur management.
In my opinion, it is.
Mm-hmm.
You know, you're not slow playing. Like in poker, they'd say, oh, you know, it's a slow whatever. But you're not slow playing the street. It's just it's not the way we operate. So no.
Mm-hmm. Mm-hmm. Forgive me. That's an unwelcome phone call. Forgive me. Excuse me. I'll just take the phone off the hook. How about that? I tend to think, I think I have a little bit more anxiety, probably just biologically than you do, maybe. I think anxiety levels ultimately are sort of a function of genetics as much as anything. And so I get a little bit of anxiety that I'm like, okay, well, what are all these young people that we're expecting to get this one category of jobs going to do? The same way as I would worry when I was a reporter on the floor of the New York Stock Exchange, like, what are all these guys that are down here on the floor going to do? Or the horse and buggy. I mean, there's no list, there's no shortage of people in this world to worry about.
Yeah.
If that's where you want to point your attention,
yeah.
You know, use any of the world wars to really get yourself worked up. But how do you make yourself comfortable that the stresses of the transition in the population and the labor force is okay?
Well, I mean, first of all, it's very real. The unemployment rate for new graduates now is way higher than the unemployment rate, you know, in general. But you got to remember, I'm a product of I graduated college in the middle of a recession with interest rates at 20% and unemployment at, like, you know, 14% or whatever it was at the time. So, you know, they say there's no jobs now. There was literally no jobs when I got out of school. So, like, you don't even know that that's the case. Like, if you start reading that stuff, you're like, oh man, it's almost like, oh my God, this guy throws 103 miles an hour, so I can never hit his pitches. You start reading that stuff, you will never hit his pitches. You know, I mean, if I told you how many times people told me and Scott, you know, like, you guys can't build an actual business. Like, you know, like, who listens to that crap? There's an entire world out there. There's whatever, 7 billion people. You know, don't give me this crap. I mean, I'll take my chances. Let me go. You know, I mean, I don't buy into that story. I don't want to hear it. Like, don't tell me that. Just get out there. Don't feel sorry for yourself.
Just keep on, just get up and do something.
Well, I mean, you know, we come from a different era where our parents basically, there was no kid gloves.
Threw us out of the house.
They threw you out of the house and said, figure it out. And we all thought it was normal.
I mean, that's why you would just hang out in the street.
Whatever. I mean, it's normal. Like, you know, hey, get out there and do whatever. Figure it out. Figure out how to get home. You can't say that to a kid today. Figure out how to get home.
They'll call the cops, though. You'll get a visit from the local police.
Hey, mom, I'm 2 miles away from our house. How am I going to get home? I don't know. Figure it out.
Figure it out.
Yeah. I mean, and there's not a kid, there's not a boomer out there today that didn't live in that world. Not a single person where it's like, a parent, hey, figure it out. You figure out how to get home.
Exactly.
We're kind of out of time here, Mr. Radigan. So that was a fun, very mellow discussion for us today. We did not get in trouble with anybody.
It's because I didn't bring up the AI-powered murder drones, but I didn't want to scare anybody.
I'm Tom Sosnoff. He's Dylan Radigan. And that was fun. Dylan, we'll see you next Wednesday. Thanks so much.
All right, see you next Wednesday. All right.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies. Shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
right together, spin it around. Yep. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, leave, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
That is not even close.
That bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No. You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
What has changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah, as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Stephen and Lan, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What is going on, everybody, and welcome back to today's assignment. It's been a little quiet. We got a lot of binary events this week. We're going to touch on the Google trade from last week, get into some more earnings from this week. But before we do that, Dr. Jim, how are we doing today?
Man, what's going on? I mean, man, did FOMC even happen? Like, have they even given out the number? Like, nothing is moving, like, at all.
No,
that's crazy.
I mean, it's been really quiet. I mean, it almost is reminding me of the Google position last week. We traded for a muted move, and it's looking like right now we're getting a muted move right now. Josh was saying how Jerome Powell's still speaking right now, so we'll see if we get some unexpected volatility throughout this segment today, Dr. Jim. But how are we holding up so far? Midway into the week, and we still have a few more binary events to get into for the rest of the week.
I know, man.
Right?
I mean, we've got this one. We've got obviously Powell finishing up his press conference right now. We've got lots of heavy earnings coming. You got Meta, Microsoft tonight, Apple, Amazon tomorrow, jobs number Friday morning. So
yeah, we got
we're not exactly out of the woods just yet, but man, I'm very surprised at just the metals are moving a little bit. They're getting hammered pretty good on the number or whatever. But other than that, it's been pretty quiet.
Yeah, no doubt. I mean, we'll take a look here. I want to first get into these slides, but before we do that, Dr. Jim, what are you and the team over there looking at? What are you and the intern? I know I want to get into Microsoft after we go over this Google position. What's been on Dr. Jim's mind? What's been going on with you guys on that end, Dr. Jim? We can go ahead and jump into this slide here.
I feel like this is one of those times, and I think we've actually said this a few times in the last 4 to 6 months. So maybe it's losing some potential validity because we keep bringing it up and it doesn't happen. But this feels like another one of those times when the market can do no wrong.
Right.
Like, what could possibly go wrong? Right. Like, the earnings are going to be fine. Like, tariffs are all good, whatever. So we decided to kind of take the other side of that and play both Meta and Microsoft to the downside.
Oh, really? Okay.
And just kind of see, see what might happen.
Yeah.
I don't know, man. I mean, it's like, I really felt like if you can't beat them, join them for a while there. But then I was like, I don't know, man.
Yeah.
Like, I feel like at some point at some point it's going to have to give it up. And I mean, it's like, I'm not talking about a 7% drop, like, but can you give me 75 basis points? Can you give me a little something?
Yeah, no,
I don't think it's that crazy.
I'm of the same boat. I was telling Kai today earlier over the computer. I was like, yo, what's going on with this market, man? This thing just keeps going up, you know? So I was kind of leaning the same and felt the same in terms of the Microsoft and some of these earnings this week. We have Risk of the Week Tuesdays and Thursdays with Gus and I. Quick plug for 4:30 Central Time. Come hang out with us. But for Risk of the Week this week, I wanted to get short. And we typically put on more, I guess you could say, riskier positions. We take a little bit more risk. And my Risk of the Week was selling an out-of-the-money call spread on SPY. You might say that's not too much of a risky position. But I mean, shorting these all-time highs at this point has fallen into one of those risky categories for myself. So I ended up doing that. I'm most likely going to be putting on a bearish position here on Microsoft whenever we get into the platform. Google was a flat position or a neutral position, and we'll go from there. No, things have been kind of crazy, but leaning a little to the downside, Dr. Jim. Some of these positions.
Yeah, we do.
We'll get on.
We do. And the Google trade worked out pretty well.
Worked
for you,
out really
I think,
well,
right? Because
and we went far out in time, and it still worked out really well.
Yeah. Because it didn't do very much.
No.
You know, like
much.
it just did a little bit. So, all right, that's good. That's some good stuff.
Yeah. And we could even jump into the platform here or the slide either way. But for last week, Google, Dr. Jim, if anybody missed, post-earnings move was muted. IV Crush really hit those directional debit plays hard. That's really one thing that I wanted to emphasize right here, Dr. Jim. It's nice getting those debit positions on when you get that directional move. But with a move like Google and last week was such a muted move and such a crush on volatility in such a short amount of time, those directional debit positions definitely hit a little harder on a move like that. But if you sold them, you were able to capitalize a little bit more. Avoided going non-directional in that one. Really no reason for it other than the fact that I wanted to dip my toes and sell more undefined risk strategies. I was able to go pretty far out wide, collect a lot of credit, so I felt comfortable doing that on an earnings, on a binary event, you know, selling something undefined risk. Sold the 220, sold the 160, was pretty wide, collected about 338. And then we seen, for the most part, that IV crush really come into play within the next 24 to 48 hours. We're up about 50% of the credit received on the trade right now. We're going to take that off whenever we get into the platform here, Dr. Jim. But this is just a quick update on what happened with the Google. Still a very muted move. We got the chart over there off to the right side. If you can see those white lines, prices in between those, I'm just representing what call I sold and what put I sold. So you can kind of get a good idea for the range that I'm trading in right now. And at the bottom, we can see that implied volatility crush. So worked out in my favor. It's an earnings trade. I'll take it, Dr. Jim. We can finance this Microsoft trade.
No, it's good. I mean, yeah. I mean, when it comes to selling a strangle, like, I mean, you've got the white lines that are on the chart. That's really nice. I mean, that's exactly what you want. Like, this is like your best case scenario. This is basically exactly what you're signing up for. And so, I mean, it's a great trade. And, you know, yeah, I mean, I know you don't do a ton of undefined risk, but, you know, this might be something that can kind of, you know, be a catalyst into doing a little bit more of that, because this highlights the power of doing something undefined risk where, you know, if you get a decent move, or I guess in this case, non-move, you can get a really, really nice trade on your hands in a very short amount of time. And so obviously if it moves significantly against you, then it hurts a lot more. I mean, there's gimmies and gotchas, of course, but this is a really good trade. And yeah, it worked out really, really nicely, man. If only they were all like this, you know?
Only. Yeah. Look, I'll take it. It was an undefined risk. I barely sell undefined risk strategies for binary events like earnings, so I'll take it. You know, it doesn't always work out this way, but I'm going to take it and we'll move on to the next one. So anything else to add on this slide, Dr. Jim, before we hop into the platform here? The market's moving.
No, I think it's good.
You're keeping the screen right now. But
yeah, we got
moving.
lots more to we got lots more to do. We got lots more to do. Like I said, I mean, you can take your pick, man. Meta, Microsoft, Apple, Amazon.
Yeah, we'll do it.
You know, we got the 4 horsemen of the apocalypse coming right now. So let's go.
The 4 horsemen. We can go ahead and jump into the platform here. This market is volatile right now. I mean, I have the 5-minute chart on right now, 5, 10, 15, 20, 25. Over the last 20 to 25 minutes, I mean, we've dropped 2.5 points in the S&P 500 just like that. So I don't know what Jerome Powell is saying right now, but let us know. Let us know what's going on out there. Some of the positions that we have on for the day, Dr. Jim. We got Carvana. Again, Carvana was one of those companies where I was kind of sus about, right? I know we're trading. We're not long-term investing right now. But I like Carvana. I like the stock. And Carvana's up a little bit, not too much. It's a pretty wide market. You can see here we're jumping between 15 and 30, 45 bucks on the P&L in a matter of a few seconds. Pretty wide markets. 16 days left to expiration. Nothing has really happened in this one, Dr. Jim. So I know we still have more time left. I'm pretty much break even, up a couple bucks, cover some commissions. But other than that, I'm going to get your thoughts on that one real quick, Dr. Jim. Not every single one, but Carvana. Is this one you would kind of sit in 16 days left to expiration? We really haven't gone anywhere. So I can get out of this for $5 profit, $10 profit. But now that I look at it again, 16 days, I might hold this one down to the wire a little bit longer, at least get some type of outcome, because I do have a decent amount of positions on. That's the thoughts on Carvana so far, Dr. Jim. What are your thoughts right off the bat?
Yeah. I mean, when I look at that, it's still out of the money. Like, I feel like the trade is still working, you know?
Yeah.
I mean, I don't know. I don't really feel a ton of urgency to get this guy off the books just yet. I would leave this guy on and it's defined risk, so you don't really have to worry about it blowing up in your face. Yeah, I would leave it on. I don't think I would take that off.
Would you have the same response if this was a naked call that I sold? Would it be a similar response if you're able to manage it?
No, because now at 16 days to go, you're getting a little close to expiration. So if you're at 21 or inside of 21 and you have a naked position on and it's green to really any degree, I think you either have to close it or roll it. I would not hold it any longer. I'd probably go ahead and get that guy off the books in its current form. And so that would be how that would be different in a significant way. But with this being defined risk, I really feel like, you can sit tight and not necessarily have to worry about it getting away from you because the risk is defined.
Great points there. We're going to leave it on. We have a couple more weeks still. And you can see now we're down on the position. Pretty wide markets on Carvana right now. So Google, we're down a little bit on this one on the day, just barely. Pretty solid move, 51 days left till expiration. I mean, to be able to be up this much in credit already with 51 days left still is a pretty solid move that we got in Google, or for that IV crush at least. So that was Google. Just for another reference point, we put this one on 723, so just about a week ago. Eli Lilly, this one's been taking a hit over the last couple of days. I know NVO, I don't know if you've been trading that, Dr. Jim, or have been looking at NVO, but NVO has been really volatile. And because of the lack of success at NVO, it's been really affecting Eli Lilly. So you're right. I guess those weight loss drugs, whatever you said last time about the weight loss drugs, I guess it's valid, Dr. Jim, because we're taking a hit.
I don't know about that. But so NVO and LLY, how are they related? They're both in the same space?
Yeah. We'll touch back on it whenever we hop back on here, and I'll give you more accurate details on what's going on. But I know NVO was taking a hit, and when I looked into the reports, it was dragging down Eli Lilly at the same time. So I'll circle back around to that, give you more details. But in NVO, Eli Lilly, these ones have been taking a little bit of a hit. It's defined risk, so I'm comfortable in there for now. But we were up a decent amount on this position. Let me give you a quick visual. I mean, this is like a $300 P&L swing in the matter of 24 to 48 hours. If I could zoom out. A little bit more. There we go. So you can really see how the turns have tabled in a very short amount of time. So that's what we're dealing with in Eli Lilly. NVIDIA bought a put. This is sitting out of the money right now, 16 days left to expiration. Can't stop, won't stop. That's been the story of NVIDIA for the last couple of years. QQQ sold an out of the money call spread, 16 days left till expiration. Call side being tested right now. We're kind of on the dance floor. That's what I'm going to say right there. And we have some time left. So market's been popping off. Market is starting to sell off a little bit more here now. And I mean, I know I sold the 560s, right? And I mean, when we zoom out, I mean, 560 isn't too far fetched. I mean, we still have some binary events. We still have some earnings. Something pulled the market down a little bit. This is one of those positions where I'm fine with breaking even on. Like, if we go back to break even, that's a green trade in my book. So that's my mindset on QQQ right there. SPY, just put this one on, Dr. Jim, right before we were on here. Sold an out of the money call spread. This is for the risk of the week with Gus and I. Tuesdays and Thursdays, 4:30 Central Time. Come hang out with us. And then we got Target, Dr. Jim. Target is an out of the money put spread that we sold, $5 wide. $5 wide. We're up a little bit on the trade, almost break even. 16 days left till expiration. I'm gonna let that cook for a little bit longer. Let it go down to the wire. Same kind of mindset as Carvana, like we discussed when we first hopped into the platform. And then UAL Airlines. UAL Airlines, we're break even right now. That was another earnings trade. I chose to go further out in time. I'm glad I did because it did not go in my direction. So the fact that I'm break even right now is a huge W right now. So just to add a little bit more context, Dr. Jim, that's where we're at. I don't know if any position in particular is sticking out to you, but let me know, and then we can get into some Microsoft.
No, I mean, I like the plan.
Yeah.
I mean, can you move your cursor because I can't see the tickers? Yeah, there you go.
Yeah,
I mean, pretty much across the board. I mean, especially with Target, that's very similar to Carvana. It's like same expiration even. It's like, all right, the trade is working. Give it a little bit more time. Like, I definitely think that's the move
This
when it
sounds
comes
so
to-
mechanical, Dr. Jim. It just sounds mechanical.
Well, I mean, we're just we're
Yeah.
trying to be when we can. I mean, trading
Absolutely.
is difficult, man. I mean, that's obviously the understatement of the century. But when it comes to like what to do next, it's oftentimes very difficult to say with some level of like definitive precision. Like, all right, you should do X,
Right,
or
of
you
course.
should do Y. It's typically just gimmies and gotchas. But generally speaking, if the position is still out of the money, if the strikes are out of the money, then sitting tight and doing nothing is almost always going to be the move that you want to make, as long as your risk is controlled on order entry. And that is the position that you're in. And so I think that's what you gotta roll with.
Yeah, no, I completely hear you there. We got Target. Target's taking a hit right now.
Man, the market's down 20 now?
I mean,
wow,
everything's
ES
down.
20, NASDAQ is red. Wow.
I mean,
okay.
Just a quick peek over here. Yeah, I mean, things can change quick. I might actually be up in profit by the end of this segment on QQQ. Hopefully not. We actually be halted if we ended up being in the profit over there.
Yeah.
Before we do that though, Dr. Jim, Microsoft earnings. Let's get into it.
Let's go. Microsoft. So Microsoft, not Meta. You rather do Microsoft?
Oh, I mean, I guess I could juggle between the two. Let's take a quick look at Meta.
Yeah.
If I could spell correctly, I know Microsoft is really focused on. I'm very curious to know if Microsoft is going to still roll out more plans for AI and revenue on those kind of. I'm curious to see if they're gonna still add more to that and give us more guidance in that area for Microsoft at least. Again, not that we care too much about the fundamentals, but curious about that.
Sure.
Meta taking an absolute hit right now too. Dr. Jim, Mag 7 going down. IV's up right now. Earnings after the bell. But I mean, from a larger time frame perspective, it looks like Meta and Microsoft might be telling a different story. Let's go to the daily and let's just get a good idea for what they've been doing recently. I know Microsoft has been on a can't stop, won't stop kind of vibe, just grinding higher highs. So this is what we got. Meta's been trading within a range, kind of making some lows as of the last couple weeks. Microsoft, on the other hand, has just been grinding higher highs. It might have been putting another all-time high every other day. So that's where we're at. I'm pretty bearish on both of them, if anything. I think I still want to get short on Microsoft, though, Dr. Jim, just from a purely visual standpoint. I have nothing else to back that bias up from, other than the fact that Microsoft has not had any type of significant pullback or sideways action in the last few months. So I'm going to go with Microsoft. Premiums are looking pretty juicy right now. What were you guys looking at, Dr. Jim? Was it a broken wing butterfly you guys ended up doing? And what expiration?
No, I think we just did an expected move butterfly with
Did you?
Microsoft. So yeah, I think so, if I remember correctly. The prices were a little bit different when we did them yesterday.
Yeah.
But I think we did like a 20-point wide expecting move butterfly to the downside. And so, yeah, I mean, you got to kind of figure out, like, if you want to play this thing to the downside, like, how do you want to do it? Do you want to do like a very simple at the money vertical spread, like an at the money put spread? Do you want to sell an out of the money call spread? Do you want to do a butterfly? Like, what are you kind of thinking?
So I think on this one, I'm going to take a similar approach to Google. I think so far, I'm going to try and lean a little further out in time. I'm going to try, and I don't know if this is going to be the best thought process, but kind of try and roll some of those earnings trades into a potential longer term trade if the earnings doesn't work out in the way that I want it to work out. I think that's going to have a lot to do with what you're thinking about on order entry. Hence why I was really thinking about that expiration. So I'm maybe thinking about going further out in time because I don't mind sitting in Microsoft. This is an underlying, I don't mind being in a week from today. So that's why I'm thinking about that further dated options contract. And maybe even an at the money. I think that it's a little aggressive, but I think that since we're further out in time, we can justify, putting on an at the money call spread to go ahead and get short on Microsoft. So just speaking out loud right now, Dr. Jim, those are my current thoughts.
Well, so, I like the way this starts, the setup at least. Go back to the strikes real quick.
Right.
I would actually, so rather than sell the at the money, I would take advantage of, because you're collecting so much credit. Yeah, I would move it a little bit. Yeah, there you go. Like, it doesn't have to be crazy. Yeah, you could even come in and, there you go.
I need to see
like
that
maybe
too,
a 20,
210.
20, 25. I mean, look at that, man. You're collecting 210. The pop is 60.
210 isn't
like
255, Dr. Jim. I'm just kidding.
Well, no, it's not. It's not. But the probability is much better, and you have a little bit more room to be wrong.
100%.
So I mean,
no,
I don't know,
like
man. A lot about that trade makes a lot of sense to me.
It does make a lot of sense, and I mean, I typically collect at least $1.66.666666. So I'm still collecting more than a third of what I usually collect on a $5 wide. So I'm not going to be greedy here. 60% pop. Extrinsic value 212, P50 68, 70, buying power $290. Can't really beat that. We'll go through there. I think that's going to be the earnings trade we're going to go ahead and send through, Dr. Jim. Let me hold.
No, I like it a lot. I mean, Microsoft to the downside. I mean, that's how we were kind of queuing it up. So
yeah,
I mean, I like that a whole lot. Yeah.
We have a little bit of time left. We might have to take a look at Meta, Dr. Jim. I'm not opposed to Meta if I can go further out in time again, and if I can justify the premium that I'm going to collect. So I'm not opposed to it either. These markets look a little wide on Microsoft. Is SPY still there, Dr. Jim? I haven't looked at it in about 2 minutes.
SPY?
Is it still there?
I mean, it's barely there. ES down 28 now. NASDAQ down 50. And so
oh wow, you weren't joking.
Yeah, no, it's, I mean, I don't know what Powell said or didn't say, but some things are definitely moving. There's no question about that.
We got a little VIX pop, not a little VIX pop. Let me zoom out here. We've been due for a pop in volatility, Dr. Jim. We have been due for a little bit of a pop.
Yeah. VIX up $1. There you go.
Is now I'm not, again, I don't usually do this, but I'm just going to get my handy dandy. Let's just see what we get throughout the rest of the week. Other than that, let me jump into Meta, Dr. Jim. See what our premiums are looking like right now. September 19th. Just visually looking at the expected move, it looks pretty far out. We're expecting some movement on this thing. Go a little further in. I think I'm going to do the same thing here, Dr. Jim. I'm actually going to put the same exact position on in Meta. I don't mind putting the same short position on in Meta and Microsoft at the same time. Same expiration. 67, 720.
Yeah, bring it. Yeah, bring it in a little bit. Try to get. Yeah, try to get close to $2.
It's like the same thing we took on.
Yeah.
What do we get?
And you know, it's one of those things where you've got a $700 stock. You've only got $20 worth of buffer, but you never know, man. Like you don't. I mean, that could be valuable after tonight into the morning, whatever. It's not a ton of room, but that's the reason why your pop is 60% and it's not 50-50. So. You know, in the end, that could prove to be quite valuable, actually.
I mean, look, if I was a long-term investor, I wouldn't be buying at these levels, but to each their own. I'm talking long-term.
Of course, yeah.
I mean, that's just me.
But I mean, a short call spread, an out of the money short call spread is a classic earning strategy. You know, because of volatility skew, you normally get good prices on call spreads, and so that's why you're able to, get such a nice credit for being, you're not super far out of the money, but you've got a little distance and you've got a nice probability. So, what about Apple and Amazon tomorrow? Are you going to wait until tomorrow to do those, or what are you thinking?
I know we just put on 2 earnings positions today, Dr. Jim. Not only did I get on an earnings trade this week, I got 2 on today. And then I think we still have Google on, we still have United Airlines. I mean, it's really been an earnings season with us lately, Dr. Jim. Apple tomorrow. I'm going to check out some of these premiums, but I'll take a look at it. Depending on how Meta and Microsoft pans out today, I think we'll determine if I'm going to trade the Apple and Amazon earnings getting into tomorrow. Did you guys load a position into there ahead of time, or are you guys going to do that tomorrow?
Well, I traded Apple on accident, actually. I traded Apple because I thought it was today, and I messed up, and I was like, oh man. So I just left it on. It was just an out of the money short put.
Oh, okay.
And then I'll do Amazon tomorrow for the show.
Okay.
So I'll wait until tomorrow, though. We'll do that on From Theory to Practice so that we get the right strikes around wherever the stock might be. So that'll be for tomorrow. And then, of course, I mean, tomorrow you've got jobs on Friday morning. And so now I'm like so curious as to what Powell must have said. I mean, because the market was so quiet, and then all of a sudden, it just woke up.
Yeah.
So yeah.
No, we had a little rip to the downside. Amazon is looking very similar to Microsoft right now. I want to take a quick look at copper. I know we were talking about copper right before we had hopped on here. I don't know if anybody else is trading copper, but let us know how you're managing that position, because I mean, we had a pretty big hit to the downside. Doesn't look like it's doing too much after that sell-off either.
Yeah, wow. But that's a big drop.
That's a massive move, right?
19% in copper. Yeah, can you bring up a daily chart though? Bring up a daily chart because I know copper's been
let me do that.
It's been really in play for, however long it's been. I mean, yeah, so like going back just, since April basically, it's still up since April.
Yeah, it is.
And
It
so I
definitely
mean,
is.
even after, the big drop. Wait, did it drop and recover? That looks like it dropped and recovered.
I know that wick is crazy. Let me zoom in. Let's get a little more context. What's going on? Okay, no, I don't know why, we're getting that massive wick, but right now it's looking like we're trading 450. Before that sell-off was
Okay.
560.
Well, yeah. Okay. So it's still, since going back April, I mean, copper's been on an unbelievable run. And so this is, another great example of, it's just markets moving, things change, man.
Yeah,
Things
no
can
doubt.
change in a hurry. It happened to copper today. It happened to the markets on Powell. It's like, man, I mean, there's just a lot of things going on.
You know what's funny? So I was studying. Well, I came across a video. It was super interesting, but it was getting into like a lot of the weeds and details about like psychology, game theory, and as you know, like game theory can be applied in so many different facets. And one of the I forget who had said it, but who quoted this, but the best way or the best strategy against, and figuratively speaking, you can fill in the blank, the best strategy against a more sophisticated opponent in any endeavor is managing your downside. And guess what my brain thought about immediately when I heard that and learned that, Dr. Jim? Trading. You know what I'm saying? Yeah. So I thought that game theory piece of wisdom, piece of knowledge was just crucial for any industry. The best way or the best strategy against an opponent that is more sophisticated than you in any endeavor is managing your downside. This is not a trading video. This was not trading information, but I thought that was so interesting because whenever you're dealing with uncertainty, I don't want to call the market an opponent, but whenever you're dealing with something like that, I think protecting your downside is the only thing that you really can do to survive long term. So that's what I had thought about right away. I just wanted to share that with you, Dr. Jim.
Well, I think that's really good.
Yeah.
And I mean, I think that viewing the market as your opponent is actually appropriate when it comes to trading because the market is your opponent, essentially. And so, but thinking about, I mean, however you're going to manage your downside, whether it's with stops or not with stops, and we've talked about that so many different times, you have to have a clear vision of what is your exit strategy.
Mm-hmm.
Like, what are you going to do when whatever it is that you wanted to do doesn't work? Like, you have to have a very clear strategy and you need to have that figured out now.
Right.
Like, don't expect that you can figure it out when you're in the middle of it because you won't be able to do that. Like, nobody can do that. Like, that's too difficult to do. You're too emotionally charged up. Like, you're too excited. There's too much fear. Like, whatever side of the spectrum you might be on. It's like, it's just going to be too difficult to figure out objectively what you should do next. But if you have it clearly mapped out beforehand, then when the time comes, and it comes for us all, you've just got to execute on your plan, which of course is much easier said than done. But that's why we always say nothing will teach you, nothing will train you quite like being in the arena will teach you and train you. You just got to be
in the arena. Yeah,
that's right.
Absolutely.
That's right.
I think that's a great note to end that on, Dr. Jim. Thanks for sharing that.
I mean, you did Microsoft and Meta, man.
I know.
Two earnings trades
back to back.
Man, I can't believe it.
I still have Google on. Shout out to you, Dr. Jim, getting me in Google. We did sell an undefined risk position. Glad we're dipping our toes a little bit more in the undefined risk positions, especially on something like an earnings event. Other than that, Dr. Jim, anything else to add before we hop out of here today? Hopefully, the market is still marketing by the close.
I don't know, man. I'm very curious. Maybe Powell changed his tie. Like, did he change from purple to red? Like, maybe he did like a mid press conference tie change. Like, I don't know, man. Like, that's pretty.
If we go down a few more points, Dr. Jim, I'm gonna be guessing he didn't even wear a tie.
He went open collar? No, there's no way.
That's how you know things are not. No.
Oh man, that's so funny. That's too funny.
Anything to add before we hop out of here, Dr. Jim?
No, just cool. I mean, we got the earnings tonight. I mean, this could potentially be just getting started. Like, that's what's crazy.
That's what I'm saying, because all the binary events haven't even hit yet, right? So
I know this is the first one.
Yeah.
And now we've got tonight. We've got obviously tomorrow during the day. Is the market going to reverse the Powell thing? Is it going to continue? Then tomorrow night with Apple and Amazon, and then Friday with the jobs number. There's a lot that's going to happen in the next 48 hours.
No doubt. Thanks for taking the time to hang out with us today on today's assignment. Dr. Jim, as always, we appreciate you having you here in the teacher seat, getting your thoughts and insights. Be sure to stay tuned for more segments coming on next, and we'll see you guys next time. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
Hello, everybody. Well, I guess Jerome is still talking. As widely expected, there was no rate change today. For reasons no one can divine, the market was strong all morning. They did their announcement. It remained strong, and then it barfed all over the place. So we've gone from completely green to completely red. It's not calamitous. We're down, and actually I'll correct it just as of this moment. NQ is up 100th of a percent. In any case, the NQ, the ES and the RTOA are down some. We do have some red on the screen. Almost all I've got 28 different positions now. They're almost all going the right way, which is cool. It's always nice to get these Fed things out of the way. There's 8 per year. Would this be the 5th one? I guess. Maybe we're past most of them now. Of course, the next big event is going to be in about an hour. Microsoft and Meta report earnings, and then tomorrow Apple and Amazon. So 4 of the Mag 7, just over a 2-day period. So it's cool. We got a stock pickers market again, in my opinion. And shorting at lifetime highs is something almost no one's crazy enough to do, but I do it. And if I time it right, the prices are really good. So we'll see how that all works out. Let's jump in and look at the charts, shall we? That's what we do here. Here's the spider. For once, for the first time in 12 years, I can say that no lifetime highs today. We had the intraday lifetime high yesterday. I guess the highest close was actually 3 days ago, but we got a nice down day yesterday, a nice down day today. Go in the right direction, my favorite color, so huzzah. The diamonds are also down. Here too, we had a lifetime high recently. That was on the 23rd. That was not just a lifetime high intraday, but a lifetime high close. And it has given that up. Plus, that minor resistance I mentioned again and again, we have broken it. We have busted below this line. We're going to honor that event by changing this to blue. This is a failed bullish breakout. It's not a big one. It's just a little bitty gap right here. But again, I will take it. Beggars, choosers, you know how that goes. SMH, the semiconductor index, this one, another lifetime high intraday, maybe a lifetime high close. This is like going to be this is the ultimo hombre, the last man standing, the most hoofy of all the sectors, thanks to Jensen Huang, who is quite solicitous of our new administration, and rightly so. But if put it this way, if NVIDIA ever starts to go down, then it's all over. I mean, that's the one linchpin holding everything up. If NVIDIA starts to go down, forget about it. The bull market is utterly done. NVIDIA is the market now. And thus, it's still holding things up a skosh. The bonds, TLT, are down by way of TLT. Same old, same old. The pattern is far from complete. Maybe it will complete one day. If it does, I think it's quite the BFD. As it is now, it's still working its way. This is a huge pattern. It's taken a long time. It's been hammering out this pattern for nearing 2 years now. But were it to slip lower, that would be interesting because the bonds, unlike, say, equities, have been in a bear market for 5 years now. 5 years and 4 months. So that would be nice to say for equities, wouldn't it? The 5-year equity bear market, wouldn't that be cool? When will it stop? Zero is support, you know. These words, these are not uttered. What else is cooking? CoreWeave. This is a nice example of how things are kind of burning up below Mr. Huang's world. CoreWeave has slipped from 187 to is barely hanging on the triple digits now. We are a kitten's whisker away from the double digits on this. We are several dog whiskers away from a 50% drop in this bad boy over the course of just a month. Nice. Demolition derby, baby. Here's DeFi development. And I'm only showing these, not because these are like large important stocks, but just because it's showing how the rot underneath the surface is taking place in these formerly very hot issues. I mean, look at this. What are the colors we see? I'll read them for you. Red, 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 red. You don't see that in a young bull market. These white hot issues are getting just fricasseed. Oh, it's Trump. Here's DJT. This one's down just a little, about 1%. Its last verve kind of ended back in April. And I've got to say, you know, it's sort of like the old saying about the frog in the pot of water. You know, it's slowly warmed up, slowly warmed up, slowly warmed up. It doesn't realize it's being boiled. It's weird to have a president with a public company. I mean, none of us have, do we have, you know, Jimmy Carter's Homestyle Cooking Inc. or Gerald Ford Fashions or Millard Fillmore Industries? No, this is unprecedented. No pun intended. It's bizarre. And none of us really think it's bizarre because it's been just kind of slow. We're the frogs. This is kind of slowly crept on us. It is just weird to be talking about this. But there it is, and so be it. Gold, not having a good day. We're down about 1.5%. As I've mentioned, this resistance up here was kind of a triple top. The last top being so limp that it didn't even manage to match the former tops, and so down it goes. I don't have any precious metals positions at all, except in as much as I've been short XME for some days now and continue to be. Silver, down even harder, about 3%. In fact, this is cut below this gap, so let's just put that behind the shed and shoot it. That gap's gone, and so the next gap down is like so. And as I've been saying about these, I said it like a week to 10 days ago, love my precious metals, God bless them, hope they do well. I'm highly confident a year from now they'll be much higher than they are, but this went too far too fast, and some selling is probably healthy for this stuff. Still talking about commodities, oil is up rather strongly. Here's USO. It is up 1.28% at the moment. And in contrast to that, weirdly, oil-related ETFs, which typically are lockstep with oil, they're going the other way, which I'm pleased with because I'm short XLE now. But here's XLE off almost 2%. That is bizarre. You get a 300 basis point spread between these directions. But nice clean stop there. I am short this, right? Yeah, am I? I've really lost track. But there's the stop, and it was not violated. And kind of like gold, we had a peak here, and then almost a peak here, not quite so high as the former one. So it's just, when you see that sort of thing, the whole point, it isn't just meant for conversation. The whole point of a push toward an important resistance point that falls well short simply points out the lack of energy in the move. And because if it, if you got a line at 100, it hits 100, 100, 100, 100. That's a little scarier, because if it goes to 101, then all that pent-up energy will get released. If you get 100, 99, 97, 93, the blood's not going where it should. So that's what's happening. XOP down even harder, 2.19%. And same statement on this one. It's I'm distracted because the market just keeps kind of melting down, which I always enjoy. But XOP is down over 2%, 2.37% now. A little bit of a sloppy pattern. If we're going to be school marms and give it a grade, it's kind of a B instead of an A because of the intrusion into that pattern. But it could still fall hard. For example, like I've got some individual shorts like Schlumberger SLB, which is down nicely, 4.5%, turning away from that rather better formed pattern and sinking away from that. So honestly, I don't know what Powell said or was expected to say, which is causing this, because everybody knew there'd be no change in the rate. He's not going to get spooked by Trump lumbering over, telling him that he should drop rates. I mean, he's not that kind of guy. But it was unchanged, and the market's digesting this in a way that I don't know. I don't know the reason for it. I was listening to the press conference. He didn't say anything that I would have wanted him to say, like, it's not the Fed's job to keep the stock market propped up. We're not going to do this anymore. Amen. He didn't say that. He just, did the same boilerplate about how we recognize it. It's almost like watching, a pharmaceutical commercial. At the end, they have thousands of words fly up the screen with all their disclaimers. He does that every time when he goes to the podium. I mean, he probably knows it by heart now about how, this affects communities and blah, 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 blah. And yeah, thanks, JP. So where were we? Let's move on. A couple of other ETFs I'm short. XHB, the home builders. This is sinking about 2.5%, probably because rates are going up. The stop on this one's like so, and we've turned away from that. And XLB, the material selector, also down over 2%. This diamond pattern, as longer time viewers know, did not behave as cleanly as I would have preferred. Last I checked, the market doesn't care what I prefer, but it is at least turning away from these levels. So the patterns are kind of similar. What followed it, it's not true. Let's look at this. Here's the pattern, and here's how this behaved afterwards. So you get these jiggy-jaggy things going on outside of it, but it never was really your post-diamond sort of fall. So I don't know what the devil I'm talking about, because it's doing exactly what it did last time. So yeah, the analog actually still really works, except that it's not falling away like a diamond normally does. What this appears to be doing, XLB, is the price is behaving outside the bounds of that pattern, just like it did before. So there's that. Some shorts to talk about outside those I've already mentioned. Just a little Whitman sampler here. Apple, not a name I mentioned very much, but I shorted this yesterday. They have earnings tomorrow afternoon. That's not the reason I did this. The reason is because not only is the company kind of, its best days are behind it, I think. This is a high-tech company in the most overvalued tech equity market in human history that's fallen 20% in the past 7 months. That's lame, If you're a sailboat and have a strong breeze behind you and you're just like in the doldrums, something's wrong with you, or at least your sail. And that's what's happening with Apple. The company's in this extremely supportive environment, and they're losing. Added to which, there's only so many times you can upgrade this and like get people to buy a new one. I bought the iPhone 1 and I've upgraded it from time to time. I'm kind of done. This is like 6 generations ago. This is a 10 instead of a 16, but it's good enough. I don't need 34 lenses on the back. And more people, I think, will be embracing that rather sensible point of view. And added as a chartist, the thing is that this line right here, this very long-term midline, goes back for a quarter century, has been broken, and we seem to be persistently beneath it. So that, since you asked, is why I'm short Apple. Peabody Energy, BTU, down again, almost 5%. FMC, down about 2%. And these simple markups I've done on the chart should make it clear why I'm bearish on these. JBHT, that is JB Hunt Transport, down about 2.33% under that very pretty, we'll give this one A, very pretty reversal pattern. And then ConocoPhillips, another energy one, down 2%. And historically, a good performance following each of those rounded tops. I have 2 minutes left. That's unusual. Well, I'm not out of symbols, but we usually have to like cram them at the end. So let's talk about a few other things. If my earnings data is correct, which I always say that because sometimes it's not, Carvana, I think, reports after today's, after the close today. I think. Let's see what this says. Because, yeah, after market hours. I've been in the financial data business since 1991. And now it's 2025. The data is not much cleaner than it was back then. So that's why I always have these sort of disclaimers. So, but I think they report afterwards. I've got a small short position on this. We'll see how that goes. The two biggies, though, I have no position in, but are much more important to watch. Meta is one. Meta has had an amazing run since late 2022. It has gone up hundreds and hundreds and hundreds of percent. 600, if you're, not to put too fine a point on it. I think that it's vulnerable to a sell-off at these levels. So we'll see. And the other one is Microsoft MSFT, a steadier performer. It's also had an extremely strong run. And obviously I'd love to see them both down. Were I to choose, my dumb guess, and my dumb guesses have been right for a while, but my dumb guess is Meta will probably be weaker than Microsoft. We'll know in about an hour. But again, no positions, no really strong feelings about either of those. But they will certainly affect what the cubes do. The cubes were at their lifetime high on an intraday basis yesterday, at a lifetime high close 2 days ago. At the moment, we're just kind of trading where we were trading on Friday, so not a big deal. But this will be informed strongly by those 4 Mag 7 stocks today and tomorrow. And in the midst of all this, as I said yesterday, the VIX be real cheap. So insurance, taking an opportunity, a bearish side of things is a lot more reasonable now than it was on, let's say April 7. So anyway, we are pure red right now, which is great. Just slam bam, and we'll see what happens next. But I hope you're doing all right. And the market's fun again. So I'll see you tomorrow. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live at the closing bell, my friend. 2 days in a row, I could say this to you. Even the S&Ps are red by 32, Sadnov. They're about 10 handles, a little bit less off of their lows here, trading 63.74. NASDAQ down 45, small relative move in the NASDAQ compared to an average type move for even the S&Ps, maybe even a little outside the expected move. Russell down 22. That's your biggest mover of the day on a percentage basis. Dow down 330. Volatility up by 15 cents. Trade up to 1830, 1810 right now. Bonds down 17, 114 even. I know you've been scalping them nicely. You've nibbled on the long side a little bit more.
Yeah, when the number came out, I sold them at 09.
08 or 09, I couldn't remember. Yeah.
Yeah, 1409. I sold. The best trade was selling the note. I sold the 10-year notes at 1109, and they just traded under 11.
They did.
I bought some back at 11. I don't know. I've just been scalping them. So I'm going home long bonds and notes tonight, but we had a pretty good day in there scalping them. So, I mean, it's not a bad thing.
Bitcoin down 1,000 or more, 117.1 after flirting with 120 last night. It's flirting with 117. It was under 117 earlier. It's sitting right there right now. Ethereum down around 1.25%, also $46. Oil up $1, continues its rally. Gold, what happened to all the gold bugs down 50?
Well, the big move today was I think copper took down all the precious.
I'm getting there. /HG did exactly what it did to the upside last time, to the downside.
You can't. By the way, you can't trade it. The options are untradeable.
The options are untradeable. I mean,
literally untradeable. It's not like we're just saying it. It's not just, we're not trying to exaggerate. If you look at the SEP volume, it was zero. And if you
all volume is anemic, no bid at a full buck. I mean,
it's untradeable. The markets are $1,000 wide.
Yeah,
it's literally untradeable in there.
Right.
And if you wanted to trade like FCX, I don't know if you looked at that bat, but the miners, oof.
Yeah, they look like they caught a little bit of a bid here for a second. I mean, I know they're down $4.84. You're talking about Freeport? Is that what you're talking about?
Yeah, FCX. Yeah, crappy markets though.
Trying to get an indication of what's going on. Well, now it's back near its lows, 38.33. So I bite my hat.
Yeah, it was all. I think the news was that Trump put tariffs on copper importers or something like that.
Mm-hmm.
But because that's the only thing that'll get the market to move like that. So yeah. So, but what's so funny is that's what happens a lot of times when you're at like these ridiculous record highs. Like you don't know what's going to cause
the turnaround, and then all of a sudden, like then you're like, oh man, with the tariffs. But the reality is, it doesn't matter. It's just like that's what happens at record highs. That makes me a little nervous for the market.
Well, I mean, that's what's made us nervous for the market for quite some time. I mean, we could have said that in June or July also.
So I sold some calls in Meta this morning. I haven't covered them yet. Do you cover them and just take and not deal with earnings?
I mean, the Ivy rank in there in Meta is still relatively low at 22.
Same with Microsoft. I do the same thing in Microsoft. It's down. It was up this morning. It was unchanged. Now it's down. I didn't sell a lot. My biggest position is probably Robinhood.
HOD, what are you doing in there? I know what you're doing there, but please tell us.
Just sold premium. It's unchanged. I'm unchanged on it.
Both sides, basically the 94-120, right?
94-120 for about $1.80-ish, $1.70.
You're doing that in the 1 day or 2 days, 2 days to go, obviously. Yeah.
Yeah, I'm going binary. Let's see. Yeah, I'm all over the place. I don't know, $1.70, $1.80, somewhere in there. And
trading at 158 right now.
Yeah, I'm about unchanged because I didn't do a great job. And then what else?
You legged it because you're gifted.
No, yeah, I didn't. Yeah. And then RBLX is the other one we traded today.
Hood and RBLX do not have downticks. You know that, right?
RBLX does not have a downtick. Absolutely. Yeah. Yeah, I'm short RBLX. No question about it.
Ivy rank of 58 is pretty good in there. There's an expected move of $16 on a $124 stock. That's about as big as expected move for earnings on a percentage basis that we've seen in any stock. But how are the markets?
On a scale of 1 to 4, 3.
On a scale of 1 to 4, a 3.
They're 3 stars.
So if it was 1 to 10, it would be a 7?
6.5, 7. Yep. Hey,
so if you did like a normal person, like on a scale of 1 to 10, you would have said 6.5, 7. If you were doing it as like a normal person.
You asked a question.
If it's doing it as a higher level.
I didn't hedge my bets. I didn't hem and haw. I gave you a specific answer.
On a scale of 1 to 4.
Well, our liquidity meter
is not a movie, you monkey.
Our liquidity meter is 4 stars. So I'm just being pointed out to people. So our liquidity meter is 4 stars. So this is a 3-star out of 4. I mean, you could argue it's a little under 3, maybe 2 3/4, but I don't want to say that.
Okay.
And Hood is 3 stars out of 4.
Okay.
I would say that Meta is 3 1/4 stars out of 4, and Microsoft is 3 1/4 stars out of 4. None of those are 4-star liquidity.
Gotcha, my friend.
Yeah, those are not my.
But still, the best on a percentage basis, Roblox has the best bang for your buck on the expected move. If you're trying to play something 2 times the expected move, you could actually do it in Roblox. I mean, you can do it in any stock, obviously, but a $16 expected move, if you go to the 2-day options, we're trading 124. You go down, you're collecting dollars.
Yeah, I mean, Roblox and Hood both have decent. Hood's at almost a 10% expected move, and Roblox is even higher than that. So, and we've been trading stuff, like.
And that is why the bat said Roblox is the highest on the board.
Yes, if it'll make you and your mom feel better about yourself. Okay, there you go. Yes. So.
I don't know if I ever, I always wish for an older brother. I don't know if he would have made it. I don't know if he would have lasted.
Oh, he would have beat the crap out of you because you had a mouth on you. I mean, you would have been like, they literally, they would have just, yeah. You'd have been. He might not have hurt you, but his friends would have killed you.
His older friends might have done that. Yeah, I give you that.
Yeah. Anyway, well, you know what? I think the move is a little surprising because right after the Fed announcement, which was kind of what we thought all along, which was nothing would happen this time around.
After the number came out, Tom, we had a $3 range. I mean, even the S&Ps.
No, I'm about to say that we went up actually a few ticks, and the bonds went up a couple ticks off the lows. The S&Ps went up a couple ticks off the lows, and then when they started to give it up, it was like, they like gave it a little. They gave it a little.
They gave it a little. They gave it a little nudge. Volatility
nudge.
started upticking. It's still up now. I mean, up 18.15, up 20 cents. It was up big yesterday. Even the S&Ps are up 30. They're off of their lows, still by about 10 handles where we were before.
Yeah.
So,
I mean, the strongest index today is the Nasdaq's still strong, no matter how you want to slice it.
The Nasdaq is hardly down. $37 is nothing.
Hardly down. And when you look around the board, I mean, the Nasdaq is hardly down. Stocks. The one thing I will say is that stocks that have been weak have stayed weak. Like RCL after the earnings came out, down another $4 today. Costco, which can't buy an uptick, down another $8 today. UAL, which has been down recently, down another $1 today. And so kind of across the board, stocks that have been weak. IBM's been really weak since earnings, is $2.59, down another $3 today. Nike's been weak. I mean, the stocks that have been weak have stayed weak, and stocks that have been strong, mostly like AVGO, AMD, these stocks have just stayed. Hood, Roblox, I mean, they've stayed strong.
And they both have earnings too, Hood and Roblox.
Yeah, NVIDIA, Palantir, Google, Netflix, stocks have stayed strong. But listen, it's way better for me down 37 than up 37, so we'll take it.
Yeah, if the bonds could get a little bit of a rally, it'd be an even better day for you, sure.
Yeah, I don't think the bonds are going to rally at all today. I mean, if you're going to get a rally in the bonds, it may be, tomorrow, the next day, but you're not getting anything not with 15 minutes left in the day. Those bonds aren't going nowhere today. I don't think they're crapping out or anything, but this is not the reaction that the street wanted to the Fed move. At least I don't think it is.
Do you care about Qualcomm before we go any further?
I do not.
LRCX,
no.
Carvana, CVNA?
No, but I know a bunch of customers do, but I do not care about CVNA.
Okay. That's what
I'm scarred for life in Qualcomm. There's nothing I can do with it. Qualcomm.
That's a deep scar. That's a scar you've been carrying around for a long time.
I've been carrying it around since 1999. Qualcomm might have done me in as a floor trader. Qualcomm might have been my last venture out of the S&P 100 into a specific equity to test the waters. And, I had to bring protection with me. Like back in the day, I had to bring Zeppi out with me.
Wow. He was your muscle back in the day. He was never a fan of the bat. I don't know why, but he was never a fan of the bat.
No, not a fan of
I liked him.
But
I mean, anybody whose name isn't like Zeppowitz or something like that, but goes by the name Zeppi because he likes Led Zeppelin, he should be a friend of mine.
So I brought him with me out to the Qualcomm pit because I needed some Southside muscle. And, and so he was my protection, but it didn't help my trading. That's for sure.
No, it didn't help you bank a book either.
No, it didn't help me. No bueno, as they say. That was one ugly day.
So what do you think, Sadnov? I mean, I know we got the overtime crew coming in here a little bit, but you've got some more numbers. You got jobless claims coming out, volatility staying bid for tomorrow. You got unemployment rate on Friday.
Yeah, I mean, I think
you still got news out there, right? I mean,
the news won't matter. I think the earnings plays are binary, so those are going to be, those don't think of the Fed when you're looking at earnings plays for whatever. Don't think of those as Fed plays because they're really not. I think that again, I'll say it again. The best shot on the board, risk reward wise, is the bonds. The worst shot on the board, I feel like, is the S&Ps, just because they're just 6,400. It's like, all right, what are you hoping for?
I mean, this is the world according to Sosnoff, but sure.
Yeah. Well, what else? What other world do you want?
There's no other. I will show you one thing. We talked about volatility staying bid for the week. And do you remember what the expected move was earlier in the week?
In volatility.
For the week, we said even the S&P is an expected move. Remember what it was? I
70,
do.
74.
You're exactly right. What do you think it is now with 2 days to go?
64.
You looked.
I swear to God, I'm not looking. I'm looking at Meta right now.
I don't believe you. And
I'm just good.
Baby cheeses, please don't take away his eyesight, please. Okay? No, all right? Yes, you're exactly right.
I'm just good.
64, 63 and change. Yes, you are correct. For the 2 days, August 1st, which would be Friday.
I'm selling a little more juice in Meta. I can't
You should
resist.
be doing it in Roblox is what you should be doing.
I already sold juice in Roblox.
Okay. All right.
I can't sell any more Roblox.
Can't or you won't?
Oh no. I'm not a very good Roblox trader.
Markets aren't the best in there either. I mean, they're
I'm just not good.
Hmm.
That's my problem in Roblox. The other stock, I'm debating on Microsoft. I mean, the premium in Microsoft is so freaking stupid rich. I don't know.
Microsoft Ivy rank of 18.
I know it's an Ivy rank of 18. I feel like it's a little rich in there for me, for my blood. I mean, I feel like these
$18 expected move.
I'm gonna sell a little bit more. I'm just selling calls, no puts. Because that's how I roll, Mr. Batista. Usually I just sell puts.
You do. Puts or schmutz for earnings, you always say.
I'm a complete earnings put seller. That's what I do. But this time, kind of sold more calls.
Meta, $40 expected move for the next 2 days. Microsoft 18. Roblox. I want to write these down because you're going to definitely ask me tomorrow numerous times. Roblox about $16. And Hood is
10.
Down to 9, but sure, I'll give it to you. You don't care about eBay, Qualcomm, MasterCard, Shack. I'm just making sure. CVS, ABBV, because at some time tomorrow you'll say, oh, that had earnings? You didn't tell me.
No, but sometimes I love to play the MasterCard song, John.
Leave John alone. He had a rough morning.
Oh, he did? Okay.
Yeah, we didn't start until 7:10 or whatever.
7-11. Well, who's counting? Let's see, what else do we got here? Just looking at the screen. How am I doing time-wise? Oh, plenty of time. All right, Spoo's down 25. What do you think for tomorrow?
Oof.
Reversal? What do you want?
Great question. Great question.
I don't know.
Wow. I think tomorrow's really going to be the earnings. I think you'll have more movement on Meta and Microsoft than you will on Hood and Roblox and all the other earnings than you will on any news. I got a quandary right now for the market. I think, like I said to you on Monday, Sunday might have been that top move. Might have been it. Now we made a little bit more of a high the day after that, but I think the high's in for the short term. I don't think we're going anywhere, but I think the high's in for the short term. But this is not a sell-off, Sadnov, with even the S&P's down 21.
And the NASDAQ unchanged.
NASDAQ's about to turn green. I mean, Spotify's up 30 some odd points. Netflix is up 15.
Wasn't Spotify down 30 yesterday? What'd they do? They gave the wrong number?
Yeah, they gave the wrong number. Coin is up 6. Marvell is up almost 6. I mean, these stocks, AVGO, you mentioned up 3 and change.
They gave the wrong numbers yesterday? Yeah, NASDAQ's higher.
Yeah, Spot is basically taking back everything from yesterday. Yeah. Rare that a stock does that like that.
Well, I am kind of...
Fed's left the interest rates alone 5th straight time, Sosnoff. Mean anything to you?
No. I mean, we've been saying it the whole time. With the bonds at 114, I don't see how they can raise the rates. I mean, I don't see how they can lower rates. If bonds were to get to 116, I think they would have lowered rates. But with bonds at 114, I don't think they can.
Yeah.
I think it'll be, a continued tug of war. I mean, I think the copper move is really a little more interesting, only because it took down gold and silver as well. Gold's down 57. Silver was down silver's down 133.
Yeah. Big move.
That cost the good kids a little money this afternoon. I couldn't keep up with the down move in gold and silver. I couldn't do it. I tried. I couldn't do it.
Do you nibble a little bit on gold here?
You can.
I'm the world's worst commodity trader. What do you want me to hurt myself for?
Why do you limit it to just commodities?
Those are the ones I can document the easiest.
I like to say we should nibble on some stuff. That somebody wrote me an email today, and they go, "Should I nibble on this?" And I'm like, "Okay, you can't use that line. All right, that's our line. You can't use that line. You don't nibble. Okay, you pick.
Not in my presence, at least. Like you can do it if I'm not in the room.
Around your friends, you nibble, but around me, you pick.
Yes, for sure.
You can't use our lines with us."
And Beth loves when you use the word nibble.
She's mad at me right now. I'm not talking to me. All right, let's see what we got here. I'm just taking a look to see if there's anything else, but not really on my board. I'm all in. I'm taking my big shot in Roblox and Hood. I'm taking small shots in Microsoft and Meta. Very small shots.
Gotcha.
Everything with some downside bias. Everything
with downside bias. Yes, even with Hood. Yes, you are correct.
Everything. Come and get them, boys.
Oof. I don't know how I feel about that.
I don't know how I feel about it either. I don't really care. I'm just I don't care. I mean, I kind of today and actually we did trade today. I was going to say we didn't trade that much today, but I did. I made 72 trades.
You did good.
Yeah. Yeah.
Meta $700, just under 695. Up, down, or sideways for $40. Saznoff.
Sold.
Down. Microsoft sold.
Sold.
Roblox sold.
Sold.
Hood
sold.
All right, we got your.
But I'm not short Hood. I'm only short premium in Hood. Roblox, Meta, and Microsoft, I'm actually short a little delta. Hood, I have no delta.
Could Meta just be one of those inside the expected move $20 or less days?
It'd be nice. The good kids would like that.
Okie doke.
Yeah, we would like that. We would like that a lot. Can you make
which one has the biggest chance of going outside the expected move, Sadnov? Hood, Meta, Microsoft, Roblox?
Hood, Meta, Microsoft, or Roblox? I mean, statistically, it's going to be Roblox.
Sure. There's no odds in here, and it's just your opinion.
Yeah, I'm going to say Roblox. But again, I'm a little short Roblox. That has not paid off. I've been short that stock since 87. It's 120, 130. I don't even know where it is. It's 100 and something. It's 124, 125.
Are you stroking out over there?
I'm a little bit. Let's bring in the overtime boys. Otherwise,
let's bring them in. Come on in, gentlemen. The overtime crew: Chris, Ilya, my man Dylan.
Hello, boys. Ilya's back. Hello, Ilya.
Yes.
There you go. And Mr. Vecchio's back in the house. Is Dylan here? Dylan's here.
Sure is.
We hail the gang's all here. All right, boys, we're going to run out of time, so we'll just do really quickly, like kind of an around the horn thing. What do you like here more? Bonds to the upside, stocks to the upside, stocks to the downside? What do you like? Quick, you got 2 seconds. Chris, go. We'll start with you. A little. 18 handles in the S&P is not falling off, but I'm with you. I need bonds up.
US dollar.
Down.
US dollar.
US dollar what?
You said up. What's going up here? What has most upside? US dollar.
Oh, that is a horrible call, actually, because the US dollar's already had a huge run.
Okay, so keep going then.
Oh my God. When are you guys going?
Bonds sideways, market higher.
Okay, Tony.
Bonds sideways, markets higher.
Dylan, what do you say?
Stocks up, bonds down, dollar down.
Oh my God, this is such a mishmash of crap. I'll have to give everybody.
Well, that's the market we have right now.
I'll have to give everybody the correct answer. It's bonds up, stocks are probably lower, bonds are higher. Write that down, Vecchio. Dollar. I don't actually, the dollar, I've been bullish on it, but I'm going to start turning bearish again within the next day.
Next day?
It's come too far.
TAY. Okay. Got that all.
Thank you, sir.
Mhm.
And this is a totally mixed close. S&P's down 13, NASDAQ up 13. We don't even count this.
Market doesn't go down if NASDAQ can't go down, Thomas. End of story.
I agree with you there, but you do also appreciate that there's going to be some stocks this afternoon that could move the NASDAQ 100 points.
Yeah, sure. I mean, listen, the NASDAQ had a 200-point range from last night to now. Anyway, what difference does it make? That's the NASDAQ, dude. Don't mean nothing. Show some faith.
Who's Thomas?
Saint Thomas. When I need him not to be mean to me, I call him Thomas.
I thought there was another guy here.
No, just the usual suspects.
Does he ever call you Anthony?
Never.
No, he never calls me Anthony.
Sometimes I call him Tony with an I, but that's it.
No. He makes me Croatian. Tony with 2 eyes is what he does.
That's not Croatian.
Whatever it is.
That's Estonian.
Estonian, Croatian, Japanese, Chinese, same thing.
That's Estonian. Tony with 2 eyes is Estonian.
I was close.
I mean, Japan and China are mortal enemies. I don't think they're the same thing.
Thank you for the fact check, Dylan.
Hey, Dylan. Mexico, New Mexico, doesn't matter. He's there. He's on
Same thing. Portland, same thing.
He's on a roll. Just like Animal House. He's on a roll.
Like butter.
When the Germans bombed Pearl Harbor, he's on a roll. Let him go.
They should remake that movie. See if we can do it in this day and age.
Oh, I don't want that.
Oh, Tony, my fraternity was kicked off campus when I was in college. It's a whole story for another time, but we're rechartering it this fall.
Wow.
And I've been invited to help.
You should. Look, you turned out
terrible.
I actually think this is like an up close.
This is an up close. Even the S&P's down 7. Russell only down 12. Even the Russell's cashing a bit, Sadnov. They leaked the number here? They leaked something?
I don't like it.
I don't think you should.
I don't like it, sir.
Weak hands that couldn't hold their short, Sadnov. You'll be fine. Big, tough guy like you.
I don't like it.
Rolling some callies.
Yeah, I mean, I'm just trying to flatten out a little delta here. Like, do we whack them and how? I don't know what to do. But all right. Well, listen, this was actually a fun afternoon. I guess the Fed, it made things a little bit fun, a little bit of.
Well, bonds didn't do anything. They're 114.01. I mean, that's where they.
No, they didn't. The bonds didn't do anything, but it made the market a little more fun. It gave us 40 handle range or 50, actually 50 over 50 handle range.
Yeah, dollar ran, gold ran.
Yeah, no, it was good.
Gold went down.
Yeah.
All right, boys. Well, we're gonna let you guys clean up the mess here. Let's see if anything came out before right now.
Hood looks like nothing. Microsoft.
No, nothing.
Looks like nothing.
Watch those NASDAQ futures here to give you an idea of if there's anything.
RBLX looks nothing. Nothing yet, Thomas. All right, I'm going to take a quick 90-second break. Let the boys from overtime have a good time. We'll be back in 90 seconds. Peace.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The future of trading is here.
Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Do you have a sleeper pick for the second half of 2025? Is there any company you're watching that's not being talked about you think could have a good second half?
Well, the one stock I think that's cheap relative to a lot of other stocks right now is probably Apple. Now, not that I love Apple, but relative to its brothers and sisters, it's cheap.
I've been saying this for a while now, but I am not turning my eyes away from gold. I think there's always a lot of interesting opportunity in there, both on the long side and on the short side, particularly in the gold futures options.
I'll say CoreWeave, CRWV. That stock has been on the move. I feel like it kind of reminds me just of, from the standpoint of when it came IPO and the way that's trading, of Snowflake, SNOW. It reminds me similar to that, so I feel like that's one that could be moving higher in the months to come.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
It's a nice economy we have there. Be a damn shame if we had to hike rates. It's Wednesday, July 30th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the rest of this hour as the futures market closes at 5 Eastern, 4 Central. The band's back together. It's good to see both of you here at the same time once more. If you're on the platform, Tasty Trade. If you're on the website, tastylive.com, welcome to the show. Come over to YouTube. Tell us what you think of these Microsoft earnings, saving the NASDAQ here. Stock closes at 513.24. We can go right to the charts here, Paul. 513.24. We are now bid up to 541.62. They beat on their EPS, 365 versus 338 expected. That's an 8% beat. Revenues at 76.44 billion versus 73.83 billion. It's a beat of 4%. We look at EPS, that's up 24% year over year. Revenues are up 8% year over year. Revenues are up 9% quarter over quarter. So much for that Fed meeting, which no longer matters, which cheekily, I was going to say, Dylan, prior to these Microsoft earnings coming out, it's going to turn to you for your reaction. For a market that fell back to the lows at 11:40 a.m. Eastern time, it didn't really seem like the market was all that bothered with what the Fed had to say, but now it's just delighted that we have excellent tech earnings in front of us, which as we close out this day, this could be a session where we look at a NASDAQ now closing at a new all-time high on this Fed Wednesday, Mr. Radigan.
I mean, I'm the one who said stocks up in the last discussion. Would like to say. And we've been talking about optimistic tech earnings for days here. I mean, this is what we've all been hoping for. I think that, I think that the fake out was not the tech earnings. Everybody's been looking for big AI numbers. Everybody knows that the AI adoption rate is at, light speed at this point. The only question is, what was with the Fed fake out was the issue. But, this is going to come down to the horsepower of the AI revolution, which is clearly bigger than any piece of technology ever in the history of the world. And sort of traditional macroeconomic analysis of inflation versus rates versus growth versus, sort of the overall sort of headwinds and tailwinds in the economy. But I do think that it's not an unreasonable point of view to say that conversation, while it has merit, is, and this chart shows it, is very easily overwhelmed by the magnitude of the AI revolution.
Ilya, it's good to have you back here. The last few days I've been talking about Icarus flying into the sun, how it feels like being long in this market. And there was part of me that was going to come in today and have this whole thing saying how it's very poetic that the market hit an all-time high while you were gone and it comes back and the wings finally melt off. But as any good trader would, I would have to change my mind when new information presents itself. So howdy, I don't feel so bad about holding on longs. Maybe these wings aren't melting yet. What do you make of this now that we're able to reconcile these earnings subsuming whatever weakness we had after the Fed?
I don't know that there's a whole lot to hang on here. What have we learned in these earnings that the market hasn't been riding for ages and ages now? What have we learned in these earnings? I mean, yes, everything that Dylan just said about AI adoption, which, depending on which forecaster you look at, is either faster or slower. The Economist, for example, was bemoaning how slow it's been relative to some of the headier forecasts just in last week's issue, for example. But that's neither here nor there. I mean, clearly these are excellent earnings, but which part of this story isn't discounted in the markets already? I mean, yes, we have explosive.
Meta earnings are out here too now, and I have to interrupt you.
Yes,
EPS
please.
estimate of 589, 714.
Blistering.
Blew it away. Revenues,
Blistering.
44.83 billion, 47.52 actual, up 8% here after hours.
Very strong. There's no. There's absolutely no question.
The piece that's not in the market, Ilya, is just the rate of change. It's that the money's flying in, that the adoption rate is higher, and the money's flying in faster, and the Microsoft and the Meta earnings are proof positive of that statement.
Well, right. So again, the question is which part of this don't we know? Because if you look at sort of the thrust of this narrative, let's go down kind of the things that we learned just today. We learned that investment was a diminishing influence on GDP in the second quarter. For all of this AI hype, investment actually took away from GDP. It didn't add to GDP. We learned that consumption rebounded only a little after being the weakest since the COVID quarter, the COVID recession quarter, in the first quarter, after revisions to those numbers. So yes, these individual companies and their very now bloated market cap, they continue to get flattered. But what's the economy doing? It isn't looking all that great. So, and at the same time, you have a Fed that's very clearly resistant to cutting in the near term. The markets have only 34 basis points now baked in for this year, even as they have 78 basis points for next year. So the markets have decided that we need lots of rate cuts and that we're not going to get them and that they're going to come late. And they didn't like it today. So yes, of course, we're popping in after hours in trade that is thinner than thin. Asia hasn't even opened yet.
Do you think Asia is going to have a problem with Meta's earnings?
I don't think Asia is going to necessarily even out what's going on here. It's not a lot of liquidity, but I do think that Asia is going to care a lot more about the Fed than they are about this.
Becky, I say it's game on, party on, game on, let's go.
Better be. I have these 23,700 strike expiring tomorrow, Dylan. You know, like it's
going to be fine, pal.
I just need 50 points. What's 50 points in the, come on, 50 points in the NASDAQ between friends. Like we
You're
just
gonna be
did that in
fine.
like 5 minutes. I need 5 more minutes here, folks.
It's month end in Asia today, so you might just get it. Whatever money doesn't want to jump off the month end wagon, maybe sticks around at least until tomorrow. It's already the 31st for Asia and Europe today, and maybe they don't run for the hills just here, just now. So maybe you get 24 hours, but I don't see anything in these earnings that says anything about anything other than these companies. And these companies are not going to save anyone or anything if the broader market tips for economic reasons. And we saw a lot of evidence from the Fed and from the GDP data today to suggest that's well underway.
I don't know, Dylan. Maybe that HVAC call the other day was the tip off. Ilya, I had the most unnerving call with an AI agent that had I not asked it how its day was, when it responded, "Don't worry about me, I'm a virtual chatbot," I would have had no idea. And it said, "Oh, if this little company, family founded and owned since 1989, is able to deploy this in the suburbs of New York City right now." And yet Tom wasn't so impressed because it was a secretary. But like, clearly this is starting to have penetration even into small businesses. And as we learned from the DeepSeek arrival and announcement back in January, as we broke down here on the show, after DeepSeek Monday, this would actually increase demand for inference long term as we move into applications, right? The training itself doesn't take a lot of GPUs. It's having them widely available for human use and application is what requires the GPU. So 24 more points still in.
I don't think we have a debate amongst us as to the revolutionary nature of this technology and as to the promise of it. I think the question isn't that at all. I think we agree on all those points. I think the question is which part of that story, besides these incidental earnings right now, which the markets are obviously very positively surprised by, and rightfully so, outside of this, which part of this isn't in the broader narrative? And therefore,
I think the answer is that this is much faster, that it's much bigger and much faster and much more money.
I think we'll see.
Much money.
I think this is the kind of thing.
Huge amounts of money.
I think this is what you see. Well, right, but huge amounts of money can also be spending $1 million on a pets.com ad for the Super Bowl. So the question is, where is the start of the hype cycle has ended? The build out part of it is in the price, and maybe it's not all the way in. I don't think anybody knows where that is, but I think we're all collectively looking for the moment where basically the .com bust analog happens. That doesn't, of course, mean that the great and powerful telecoms future doesn't follow thereafter. It absolutely does. The question is, where is maximum hype cycle? And maybe this is it, and maybe it's not. We'll see. But I'm not making any sort of determination that this is necessarily the beginning of the next big leg higher in stocks when the S&P has closed down for a third consecutive day, by the way, on net just today. And that's after we kick the can down the road on the cliffhanger with China. We reach a trade deal with the EU. We get a 3% growth quarter in the second quarter, which beats expectations, and stock markets still can't rally. I'm not gonna look at this and say, oh, well, you got a pop on very solid earnings, but still one quarter's earnings in a very well-worn narrative in no liquidity, and now all of those other things don't matter. I don't think that we can make that call.
Hey, Dylan, can you believe how much money Meta made in the quarter that Trump did all that tariff nonsense? Imagine what happens when they have a clear business environment ahead of them.
Well, I mean, if they make that much money, do they care? So does it change?
I'm saying this is like an old speculation. That's what I'm saying. I'm saying this is like a wall of economic. This is a massive wall of economic transformation that's bigger than anybody understands, including the stock market, and it renders all the other generally otherwise meaningful considerations secondary or irrelevant.
We were not bullish enough on Meta, which was up 30% from the lows in April. Like, the market was not aggressive enough on its expectations for how much money Meta made. It's astounding that these shares with this company of this size is able to move this much after hours. I'm blown back by, dare I say, fellow Westchester County public school system graduate, Mark Zuckerberg. Can I take credit for him, Dylan? Is that allowed?
You can have
you went to Briarcliff.
Sure.
So no, but Ilya, this is kind of, I'm even, we were looking for something to kick us up.
It's very impressive.
This is wild to me. I mean, maybe the chat has a different level of understanding or expectations here, but I'm just looking at these numbers, at the earnings, the revenues. NVIDIA's had the problem in the past where the numbers are going up, but the rate of growth is slowing. We're now starting to see reacceleration. And if they could do that in this quarter, when basically the bar was lowered and companies have been using the opportunity to basically guide lower, and the internals of most earnings weren't great, right? The blended growth rates were coming in. They were going to be the weakest they were in 2 years. This is just an absolute slam dunk, Dylan. So maybe we get one more day of window dressing here where we can push a little bit higher. I'm still very concerned about what April may wrought with its rise in volatility, but these 1 DTE NASDAQ call spread, that's on the tastylive follow account here. At least that's going to work out. And whatever I have in my PA, maybe there's a shot for that. I was feeling a lot worse before we came onto the show. I'll tell you that. That looked like wasted money. So you'll have to excuse my relief.
I think there's a very good chance that you get a good close to the month of July on Wall Street. I think we're going to have to really see how the month close looks in Asia and in Europe, because that's going to be telltale. It's been telltale all week, as a matter of fact, ever since we gapped open with the EU-US trade deal at the start of the week. There was every reason to think that the global growth picture has become better when you took away uncertainty about the trade relations of the 3 biggest contributors to GDP. Kicking the can on China, getting a deal with the EU. There's been no better news for the global economy in months and months and months, and stocks didn't care. This is very, very interesting now as we go into August. With a Fed that doesn't meet again until September. Yes, we'll get Jackson Hole. That'll be interesting guidance. But the Fed doesn't meet again in September. The GDP numbers are not encouraging despite the headline number, because once you look under the hood, the pain is in the parts of the economy where you don't want it. It's in consumption. And you look at all of this together and you say, okay, what do you have going? You have AI hype. And it's strong. It's very strong. But that's it. And all the valuations are already there.
Robinhood likewise came out with earnings here. Just to recap, because some people may have been joining us late, we had Microsoft, we have Meta, we have Robinhood out as well. They had an EPS of 42 cents, beating the estimate of 0.34 cents there. Revenues are up 1.01 billion, which beat the estimates of 98 million. Share prices not as enthusiastic as the Microsoft and Meta counterparts, which are dragging this market higher. Meta out, EPS of $7.14, which cleared the estimate of 587. Revenues are 47.5 billion, beating the consensus forecast of 44.8 billion. Microsoft itself, very similar strong numbers here. Share prices again up in this neighborhood of 6-7%. EPS of 365 against a forecast of 3.30. Revenues of 76.4 billion against forecast of 73.8 billion. Dylan, I think perhaps I'm taking away the lesson here is that the market cares more about the reality of what under the hood than some of the noise and narrative that we're hearing from our Federal Reserve officials, our elected officials in DC, President Trump himself.
It also makes you wonder about the estimates.
Why
on. It's so hard for them to. Why were the meta estimates so wrong?
Are we wrong about the space? Are you suggesting? I mean, you have suggested that.
I'm just asking the question whether the entire analytic, because you're talking about the analysts in the Fed or the commentary and the politicians. I would throw in there the entire sort of Wall Street forecasting analyst community. You're bringing up NVIDIA. It's a perfect example. I mean, there was a couple of years there, a year and a half there, where the NVIDIA estimating infrastructure was so absurdly useless. I mean, everybody remembers those early beats from NVIDIA where the gap was, just it made the estimates look comical. And I just feel like for a company the size of Meta, to your point, and as highly analyzed and studied and one of the most liquid names on earth, for the forecast to be that wrong, for me suggests that there's a lot of people that think they know something that they simply don't know.
Mm-hmm.
And I just wonder whether that's where we find ourselves once again as in an NVIDIA situation where the forecasting machine is just wrong. It's like the same as the presidential polls. I mean, that the system of analysis is non-functional.
Well, this is one of the most interesting kind of dichotomies that you get from these kinds of earnings and the second quarter GDP numbers. Because if you look in aggregate, right, not just this space, but if you look in aggregate, investment pulled away 3 percentage points from overall GDP. So while overall GDP grew 3%, that was a makeup because imports added close to a little bit over 5 percentage points, and consumption added about 1 percentage point. So we're looking at a situation where investment actually amounted to the biggest hurdle to economic growth in this quarter that these companies are now reporting on. And it's because of all of these shenanigans with inventories. So in the first quarter, inventories surged. In this quarter, they started to get drawn down. So we're getting very different visions here. These companies are obviously selling a lot of AI, and they're obviously building a lot of AI infrastructure that they want to then sell. Obviously, the capacity expansion in the space is much faster than certainly the markets anticipated, looking at the difference in forecasts and the realized results. But what is that doing for the overall economy? Apparently, it's a drop in the bucket once you get to the influence of inventory and import swings vis-a-vis the tariffs. And so this is where I think you really get to a place now where you have to look and see what the markets care about more. My sense is they've been running on this AI build out for a long time. And yes, we're getting confirming evidence. Sure, no question. But the overall economy is not seeing these things in aggregate. They're being subsumed by downside forces. And the Fed isn't coming to help, apparently, in any kind of a near-term sense. Maybe we'll get 2 cuts this year, but the markets are very suspect on that at this point. And so, as ever, and I think you and I have agreed on this, it becomes a question of valuation. And for now, the question of valuation has been resolved in a bullish direction. And on the back of these earnings, I mean, the markets are obviously cheering them on. There's no question. Also, liquidity is non-existent right now. So I'm going to be very interested to see where all of this settles within 24 hours.
That's why I started the show with the quip that, it's a nice economy that we have here. It'd be a shame if we didn't have to hike rates. Because I think the undercurrent of what Powell said, there was a remark where I don't think he really beat around it. I sent it to Nick over in the chat. What was the exact comment here? You could say the Fed is looking through inflation by not hiking. The Fed is looking through inflation by not hiking, as if they weren't looking through the recent bump up in inflation, because inflation is right now closer to 3% than 2%, they would be considering a rate hike. Which, quite frankly, where does that leave us in the bucket, Elia, if we do get a rate cut in September? I mean, that doesn't sound like the Fed is that concerned with downside risk to the economy right now. It would sound like it would be more of a maintenance rate cut than a recessionary one or an emergency one. At least that was my interpretation there. Did you have a different view on how Powell spoke about the path of rates? I know one more point there. I know someone's surprised that he didn't pre-commit to September. The Fed doesn't really do that. It has to be a unique set of circumstances for them to offer forward guidance that strong. They haven't really been doing that in recent years. So I don't think that was a knock on Trump or anything.
No. I don't think that really meant anything. The Fed is not in the business of overtly signaling what they're going to do next, unless it's some sort of an emergency or some sort of critical situation. Or, for example, at the end of last year, where they had forecasts for 100 basis points in rate cuts, they delivered half in September with 2 meetings left. And then everybody's like, well, so what are you going to do at the next 2 meetings? And like, well, there's only one way this math works out, so we'll see you next time. What are you asking? Like, unless it's completely obvious or there's an emergency and the Fed feels like it needs to calm the markets with very overt guidance, they don't commit ahead of time. And indeed, what you got in the statement today was they took away the part in the statement that said uncertainty had diminished. So actually, they see elevated uncertainty. It's not diminishing. And the remarks from Powell were, I thought, interesting in the sense that I don't think actually they were leaning in a maintenance cut direction, because one of the things that Powell very clearly said here is he acknowledged the arguments made by Waller and Bowman, both of whom dissented in favor of a rate cut this time, and said that although uncertainty is elevated and we're not close to clear outcomes on the trade stuff that is making for this uncertainty, the Fed very clearly said in the statement that economic activity moderated in the first half of the year, and even Powell acknowledged the emergence of clear risks to the jobs market in this Q&A. So there's a very different kind of a conversation on growth here. I mean, obviously, for the first time since 1998, 2 Fed governors dissented, and they dissented in a rate cut direction.
93 for what it's worth. Even further back.
Even further back.
So it's more, as Josh would say, even more unique.
Michael McDonough's chart that he published earlier today. But nevertheless, I mean, we're talking about the 90s here. It's been a really long time. And so you have 2 Fed governors dissenting on growth grounds, wanting to go dovish. You have Powell singing the praises of those governors in the Q&A and saying it was a really great discussion, one of the best discussions we've had at a Fed meeting in my tenure. Everybody made excellent arguments, and there's been real risks to the jobs market that have emerged. So it doesn't look like this is a maintenance cut Fed. It looks like it's a growth risks rate cuts Fed, but that they are not going to jump lest they let inflation expectations out of the bag. At least not the majority of them. Dissents notwithstanding.
Dylan, did you hear or read anything about Fed Chair Powell's remarks today that piqued your interest? Were you surprised by how the market reacted?
I think that, I think that ultimately the economy is sort of muddling along, and so there's room for every idea. At this point, I do think, just listening to Ilya, I do think that it will be interesting to see what the July CPI number looks like.
Mm-hmm. Yeah.
Especially coming after June. I think that's more, I think I'm more interested in that than I am in whatever the Fed's doing. Because I think the big risk right now is too much inflation, right? Like that's the problem.
Like that's what ruins the party. If inflation keeps edging up, because then that means the Fed's further away from cutting rates. That means more pressure on the Fed from Trump, which just creates more perception problems, right? So like inflation going down solves everything. How did the markets read it today?
Well, let's take a step back. Before these explosive earnings, how did stock markets read a hawkish Fed? Badly.
Terrible. It was terrible.
The markets want cuts. Do they want cuts for maintenance reasons? Is that what they want? Not if you look at how rapidly they are pricing them in for next year. So the markets want these cuts, and they want them, it seems to me, for growth reasons. So if the markets were in fact extrapolating the great and powerful AI narrative being the tide that lifts all boats, why would they want these rate cuts so bad? Surely they would not be
money?
but why so hungry if everything is fine? If you're so well fed on growth, if AI is keeping your plate just brimming with tasty growth prospects, why so hungry?
Dylan, one thing that came out on the other side of all this Fed action is our beautiful metals market got beaten down here. So for the bright and shiny spot that is now the NASDAQ here after hours, the metals, which have been so fun for us this year, they are starting to shed some weight. Can't help but notice that silver likewise dropped below 37.70. Ooh, that's no good. Let's go to that 12-hour chart, in fact, so you can actually see it play out. But silver prices here falling back into the previous trading range. This opens up the door towards 36. Elliot, we covered this on Futures Power Hour today.
Yeah.
Is this not the surest sign that the market has renewed confidence in wherever American policy is headed right now? The dollar here surging up versus the euro, the yen, the pound, gold, silver melting down. Isn't that you want to see on the other side of a Fed and a GDP report like today?
I mean, I think the question is what you think you're seeing, and sort of what all of the elements of it actually are. Because until these earnings that we just saw after hours, the readout from today was higher dollar, lower metals, higher yields, weaker stocks. All of that smells of essentially a market disappointed with a Fed that won't cut. So is it confidence in the US dollar not getting self-immolated? I mean, maybe to some extent, but if that were the case, we'd probably be looking at a different story in the bonds. I don't think the market has really cared about the dollar self-immolating since basically mid-April or so. And that's, of course, been the recovery in stocks. This idea that the worry that the U.S. was going to self-impose on itself some kind of finance-ending destruction isn't going to happen. But that part of it was bark and not bite. And I think at the start of this week that you get stocks basically yawning at an EU-US accord on tariffs tells you the markets have stopped caring about this stuff. That this is much more straightforward.
Straightforward to what end?
Straightforward to the end that higher interest rates in the U.S., higher than any other developed economy, make the dollar a more attractive currency on yield differential grounds, that the dollar is oversold on those grounds. The Fed gave you more reasons to think that today, so you get a very straightforward dollar rally with yields, which is what you'd see in this kind of an environment. Gold weakens in the same kind of environment. It's all very, very textbook. This is not about the future of the dollar as the global reserve currency or the viability of U.S. debt as the risk-free asset base for the world. This is just about higher rates and the returns to be had from owning dollars in that environment.
Well, but Ilya, here's something that I want to just underscore. Even with that first quarter GDP report, with what's going on in the second quarter here now, the U.S. economy still grew faster than the European economy.
Sure.
In the first half of the year. So we're here shooting ourselves in the foot. The entire world is saying, oh, the U.S. is extricating itself from the global trade system. We don't need as many dollars in hands. The future returns of American companies are going to be lower than rest of world counterparts. So let's invest in European defense stocks and German concrete makers and blah, blah, blah for the big fiscal blowout.
Yeah.
And here, as we get to the halfway mark of the year, we can quibble, and I have my own issues with S&P 500 returns, particularly when you account for the dollar decline. But
sure.
Now you look at the turn of the year, we now have a U.S. economy that's muddling through, even with the self-imposed albatross around our neck. We're still growing faster than Europe.
Sure.
And maybe the European rebound trade was overplayed because guess what? This deal that we just carved out with them, roundly perceived to be bad for Europe, going to be more beneficial for the United States. So I don't know how it helps them resuscitate or revive an economy that continues to stagnate.
I don't know that's the reading that I have of it. It's obviously not good news for Europe because a 15% tariff will diminish demand for products in Europe to some extent. But they aren't the ones that are going to pay the tariff. U.S. businesses are, and U.S. consumers. And so to what extent this is actually, to what extent the quality of this deal is going to hinge on whether the president got what he wanted, which he did, as opposed to what the actual economic impact of that will be. I mean, I'm much more focused on the economic impact than I am on whether the president got what he was bargaining for. Because what the president was bargaining for, we've already seen, of course, the huge numbers of tariff revenue that the administration has been singing about. But tariff revenue from whom? U.S. importers and consumers. Who is paying these things? It's not the countries being tariffed. They're seeing a loss of demand. But Europe has been anemic for what, 2 years, they had a mild recession at the end of 2024. And they've been at basic standstill ever since. Who is actually paying these things, and what difference does it make to them versus us? We've been the leg of the stool that cannot afford to fail at least since the middle of last year, when there was an aborted attempt at a rebound in Europe and in China. And it fizzled in both cases by mid-year. And those economies have gone nowhere since. So incrementally, what change does this amount to for those economies? Barely anything. If you look at what Europe appears to have gotten out of this thing, it's a much more assertive U.S. position on Ukraine. And looking at European history, the trading of economic imperfection for geopolitical goals and objectives has been the story of the EU since the formation of the initial three communities: European coal and steel, EU atom, and or Euroatom, and the initial European customs union in the 1950s. This whole thing has always been about geopolitics. It's always been about preventing another sequence of world wars on a continent that has been soaked in nothing but blood for thousands and thousands of years.
You're being dramatic. There's wine. There's fish.
I mean, it's a continent of countries that fought a 1,000-year war between England and France.
I would say that AI versus the muddled mess of the world, AI wins.
Eventually, I agree.
I mean, look at the battle was fought in this very chart before us today. The world tried to.
I don't think we know that yet.
Tried to spill blood upon us, and Microsoft and Meta said, "Not here, sir."
All we've done on the
Not
NASDAQ
today, sir.
All we've done on the NASDAQ is return to where we were at the highs yesterday.
Yeah,
we've poked our head above them. We've poked our head above them by a gopher's whisker.
Whoever, any whisker, it's the highest that whisker has ever gone. Okay.
For now.
Yeah, ever in history, not just
and liquidity is non-existent when these things came out. Well, so, and I fully expect, by the way, that NASDAQ is going to be relatively well supported tomorrow as Wall Street.
You think Bethio gets paid?
Probably. Yeah.
You get paid right now. All right, you get out right now and just run away.
Nobody asked you.
No.
I think he probably does, because I think we still have month's end tomorrow. The Wall Street cash market needs to absorb all this stuff. That's why I'm going to be watching Europe very closely.
Can we talk about the US dollar and why it's awesome?
It is awesome. I'm super long now. I'm loving it. I've been scaling into longs all month.
Bro, I've been living on crackers and tuna over here, okay? I've been needing this to flip around.
Very nice crackers and very artisanal tuna.
Yeah, Dylan, I'm pretty sure it was literally the 24th when you were saying how miserable it was taking like a pay cut this year because being paid in dollars, partially,
20%.
but you know, it's been a nice little 3% swing.
Got a raise today, baby.
Another raise. Good for you.
Moving into the chicken breasts out of the crackers and tuna. So this keeps going. I'll be back in the steaks, but we're not there yet.
Yeah, I mean, I've seen it. I saw it at the liquor store actually, because I don't buy scotch during the summer. I drink that during the winter, and I just happen to peer over at like if they had any Lefroy in stock to see what price was. $69.99 a bottle now. Those 10 years are. Those are going for. They were going for $52.90. They were going for $52.99 a year ago, or last winter. So creeping on up. They're gonna get you. I'm gonna have to drink some Long Island
what about
swill.
the Sosnofian hypothesis that this is it? There you go. You don't buy it, Ilya?
No, I think it has more to go. I think the dollar is gonna continue going higher here. I don't think there's any indication that it's slowing down at all.
Okay, but Dylan, more importantly, right, the dollar decline is predicated on the idea that the world thinks the U.S. is going to trade less with it.
Yes.
And if we're looking at these deals, there's going to be a lot of deadweight loss created by the tariffs, but it's not, the goal isn't necessarily, or the outcome won't necessarily be less trading, if I'm going to get there. And then directionally, in terms of the vibes, I know we all like to dunk on Trump for being a chicken, but I think from day one, we've been intellectually honest in saying, no, we want him to back off from these things. We're not going to chide him for it. This is bad policy. We don't want bad policy in place. So don't bait the guy into doing bad policy.
You're right.
The fact that there's a lot of flexibility here, tariffs are coming, maybe not August 1st. It's not a firm deadline. Are they going to be 25%? 15% or so. I mean, like this directionally, even though the language isn't great and what I want, it's directionally softer and better than it's been.
And so, to your point, the market is, if we believe the market is the market knows things, that dollar move was the biggest reaction to the tariffs of the last, however many months now, for 3-4 months. And so this dollar move, I think, has to be taken serious. My bigger thing is an additional thing, I would say, in addition to everything we're talking about now, is the U.S. currency is not supposed to move around like Bitcoin.
Right. No.
Like what the F is going on? Like this is supposed to be a store of value / global reserve currency / ultimate shock absorber stabilizer. And it's trading like a meme coin at this point.
It's up 2.34% this week, which is an astounding move for the world's most liquid currency. I think this is just a function of the positioning in the market, where we have these very large euro and yen short positions, long positions, short dollar positions vis-a-vis the euro and the yen. We know that the rolling 20-year basis, the Z-score for the yen was over 3 at one point in April, going into May, and then it's still over 2 right now. And then the euro long position short dollar was, I think, at the 3rd highest reading ever. So this is an unwind right now of people who are placing bets that the dollar was this system as we knew it was done. And we have firmer inflation and higher growth, and our companies make big, beautiful things. Like what does Meta make these days, Don? Just AI, llama?
They just make
ads,
satanic data harvesting to destroy the world.
Oh, well, it makes a lot of money.
Yeah, for sure.
Yeah.
No, there's nothing more. It's more like satanic data harvesting and exploitation. But it's
exploitation.
Profitable. Look at that.
We did this, Ilya, we covered this yesterday, and I'm curious actually about your thought on this. We're rounding out the idea. Maybe people in the chat have had time to think about it. What if the economy just muddles through like it did in 21 or 22? Like, where was the recession that was supposed to come once the COVID spending spigot turned off, the big fiscal cliff? It takes 12 to 18 months for the economy to digest rate hikes. Well, we're more than 12 to 18 months out from the last.
We know exactly what happened.
What happened?
We know 100%, as a matter of fact, what happened. But we have had a bunch of tightening cycles, including this one. This is, and you and I have been talking about this for a good year. This is the only rate hike cycle in the advent of modern finance, when the dollar was decoupled from gold in 1973, finally, that companies' interest expenses, servicing debt, has gone down in a rate hike cycle, not up. In every other cycle, rates go up, companies pay more for credit, which is exactly what's supposed to happen. But in this cycle, they've paid less. Why? Because COVID. Because during COVID, they borrowed oodles and oodles of money for essentially no cost at all, and then didn't spend any of it because there was nothing to spend on it. Everything was on lockdown. And so they went into this tightening cycle with a war chest unheard of in 40, 50 years.
How
But of
many
course,
zeros in a
you got to
noodle?
refi that money this year and next year at much higher rates.
Now, Ilya, you've been telling me for at least 2 years.
Yep.
That the big refinancing face jammer, higher cost of capital, you got problems.
Yes.
Over.
Potential problems. Yes.
And we have yet to see it.
That's right. We have yet to see it because the refi cliff is basically beginning now. Because the war chest, as it turns out, was huge. It turns out that, again, this is the only tightening cycle in modern financial history where companies didn't have to pay more for credit despite higher rates. This has not happened ever since the 1970s when the current version of the financial system is born. So we're waiting. It remains a potential risk. It may not materialize. That's why it's a potential risk. There's no evidence of it yet. But the overhang very much remains, and the longer the Fed keeps rates elevated, the more of a risk it is, although considering the money was basically borrowed at zero, any kind of a refi cliff is going to be an issue. We saw it a little bit with the SVB shenanigans, but that was a little bit of a different animal. That was a pain from higher rates that was different than refi costs. And that bit of it is probably going to be more like the savings and loan thing. It'll bleed out the weak hands over time, and it won't be a crisis or a crash. But again, look at what we just saw in the second quarter. There is no investment in the economy, zero in the second quarter. But for shenanigans around tariff inventories moving back and forth. No company invested anything in the second quarter on net. Obviously, the AI story is huge, but when you put corporate investment as a contribution to economic growth in the second quarter all together, it was zero. These are not companies that are happy or looking to splash out money clearly. Could it be because they have to refi money at higher rates? Maybe.
Dylan, I also think of the idea that a company like Meta is not splashing out money, and so it's just able to do more with less, and it doesn't need to invest anything else, and it still can blow earnings out of the water. I'm kind of I'm in a little bit of a shell shock by how good that earnings report was, admittedly, just for the fact that the bar was already set so high.
And that brings me back to the forecasting mechanism.
Yeah.
This is not like you're wrong about some little company that no one covers. This is probably one of the 10 most studied companies on earth. Pipeline, user rate, data value, ad spend, user engagement levels, blah, 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 blah. And after all the analysis, the street has no idea. Their forecast was meaningless.
To what extent does this echo the ratings agencies in 07 and 08?
Or the NVIDIA forecast from a couple of years ago, or the presidential polls.
Yeah.
So so like just like a few years ago, the market was consistently underestimating the picks and shovels phase of the AI build out.
But by orders of magnitude, not by like, not 15% off. Like way off.
Yeah.
And now
like
the biggest companies are starting to flex their muscles in a similar manner, which shows that adoption applications phase, actually mining for the gold, it's coming along much faster. The trains are on the tracks, Ilya, you know?
Well, I mean, do we know that though from these
do.
earnings, or do we see just the build out reaching fever pitch? Because I don't know that we see adoption accelerating in these numbers, although I think anecdotally, you very much see that adoption is proceeding at a very, let's say, healthy clip. If only because if you look at the last GDP report, companies are not exactly running out there hiring labor for the great and powerful economy growing.
Well, I mean, how many people do you know that still use Google compared to a year ago?
I think overwhelmingly most people still do, because that's the default.
I don't know
on
anybody
their,
that uses
that's the default on their phone, and that's what they do. And anybody that does anything search-wise does it on their phone.
I think that the number of people using Google search compared to AI search, I think that it is at least a 50% fall off in Google search.
I mean, maybe. I haven't seen the numbers, but
neither have I. But I don't know anybody that uses. Everybody I know uses an AI search function.
Can we just talk about this real quick here for Meta? Meta's Reality Labs, which does all their virtual world nonsense, lost $4.53 billion this most recent quarter, and they still blew away expectations with that kind of overhang. This was just a few years ago something that was only losing a few $1 billion per quarter. Now it's what, $16-20 billion a year. So it's not like it's their Ray-Ban glasses, right? That's not what's powering this thing to the upside. It's all folks who are using it for AI. We can spin the treadmill.
For the record, my kids had an absolute ball with an Oculus headset on vacation.
Oh yeah, they're very cool. They're a lot of fun, but like I think people don't want to be encumbered into stuff, right? They want it to seamlessly be part of their lives. That's why the Ray-Ban glasses are actually meaningful, because they don't look weird. Remember the Google, right. What were the Google ones? Google Glasses?
Google Glass.
Those were like, how you looked like a real nerd wearing them. And like, as a young man, that doesn't help odds for certain activities in the world. But the Ray-Ban ones, like I have Ray-Bans right here. Like I've had them for 20 years.
You don't have to brag about it.
Yeah, well, I'm an OG. So, okay. But the point is like, this is, if I were to switch over to the Meta ones, they're the same exact style as these that I have here on my desk. So you're not asking me to socially isolate myself from incorporating them into my aesthetic and, whatever accessories I'm wearing. And you're seeing this with more of the wearable AI tech. It's less bulky and it's more about integration, like an earpiece, what have you, rather than a chain with a, camera that you wear around your shirt. So, but the point is the demand is here. Microsoft Azure, 39% constant currency growth rate when they were forecasting 34 to 35% in terms of internal guidance. That's all AI. So maybe it leads to nothing, Ilya, but it seems like we're in another build out phase, at least with these mega cap tech companies. It's hard to
still in one and
or still in one.
And it's proceeding at a clip that certainly Wall Street analysts underestimated by a wide margin.
To that end, as we close out the show here, NVIDIA 179.27 at the close, up near 181 after hours. So spilling downstream. If these companies are able to make this much money, then why shouldn't everyone else just go get some GPUs? With that, overtime's out of time for today. We'll be back tomorrow, same time, same place, back here on the network, 4 p.m. Eastern, 3 Central, right after last call. So for Dylan Radigan and Ilya Spivak, welcome back, gentlemen. I'm Chris Vecchio. See everyone tomorrow. After this, though, you have Ilya live again. He's here with Macro Money. See you there.
See you there, everybody.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do. Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
What a day to come back from vacation. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. We've been off for about a week here, and what a day to return. We, of course, had the FOMC monetary policy announcement with us today, as well as some very interesting U.S. GDP data and all manner of market volatility around all of these moves. We're going to break it all down here and try to figure out what just happened and what it all means as we go through these outcomes and see what the markets did, see how the response worked out, and see if we can't surmise what all of it might signal for what comes next. So here is your S&P 500 down for a third consecutive day, albeit very narrowly. Clearly, the Fed's signaling not something that the stock markets loved to see. And a kind of goose egg result from the NASDAQ by the close. But of course, after hours, some explosive earnings from Meta and Microsoft, and not a bad result from Qualcomm either. So on the whole, it looks like we're basically back to where we were on the NASDAQ going back about 2 days here. So back to around here. And if we look at the overall chart, it looks like we're somewhere near the highs of this, if not a little bit over. We'll see how it all works out once the dust settles. But certainly, even on this chart, we can see stock markets did not like what the Fed had going. We likewise get a decline in gold, although it comes off a little bit off its lows heading into the close. And the U.S. dollar surging once again. It's been on something of a tear in recent days, and after it got to the top of its recent range here on the DXY dollar index, we can see it powered through those levels with gusto today on these announcements. The euro on pace to lose 1.25%, the pound off almost 0.9%, the yen off 0.7%, the Aussie down 1.2%, the Canadian dollar down 0.4%. So a very potent U.S. dollar rally here. And of course, stock markets after hours rebounding, but the Fed itself, something that the markets take as a negative catalyst. So let's see if we can unpick what that was all about, and then, of course, put that in the context of this after-hours price action, what it might mean going forward. Here was the Fed's statement. It didn't offer a tremendous amount of difference from the June write-up, but there were some notable points here. We had this bit here about how swings in net exports continue to affect the data, and we'll take a look at that in just a moment as we break down the second quarter GDP report, which also came out today. But a number of interesting points here. So the language on growth has gotten more negative. So the part about how economic activity has continued to expand at a solid pace, that part of it gone. And the Fed now saying that economic activity moderated in the first half of the year. Moreover, this bit from June about how uncertainty in the economic outlook has diminished, that's been taken out. So the Fed now just sees economic activity as elevated, and that's that. Now, this was baseline for the Fed to leave rates unchanged as very broadly expected for this meeting. The markets had no expectation that the Fed was going to do anything this time around. But there's a number of things that have changed, and it is the number of people on the Fed's own governing board that have dissented. This is a chart from Michael McDonough over at Bloomberg, and he points out here in this chart that for the first time since the 90s, this is 1993 on inspection here, that we have had a situation where fully two members of the Fed's Washington, D.C. based governing board. This is not the regional Fed presidents. This is sort of the central board of governors that the Fed chair, Jay Powell, sits atop. And fully two of them wanted a rate cut at this meeting. And we haven't had this level of dissent on the board, as we can clearly see here, in a very long time. Now, the meat of this, interestingly, came, as one might expect, in the press conference. The markets, of course, had a very high level of conviction in the Fed not doing anything at this meeting, in the upper 90% chance that the Fed wouldn't do anything, and so it was. So the surprise really wasn't very much in the statement or in the action. The real fireworks came in the statements from Chair Powell. And he came out and said that uncertainty continues to be linked, of course, to the ongoing trade talks, saying we're not close to clear outcomes. But what's interesting is that at the same time, he acknowledged the emergence of clear risks to the jobs market and actually sang the praises of the two governors that dissented, saying the debate and the discussion at this meeting was one of the best that he's overseen in his tenure. So the arguments for rate cuts clearly remain compelling. In fact, Chair Powell included, the Fed has argued that we should be seeing rate cuts this year. And that's been the argument for quite a long time, going back over a year now. And for that, the Fed is very much consistent. But the key here seems to be that uncertainty on trade and the possibility that we still don't know how much of an inflationary spike there might be from these tariffs. And although Chair Powell very firmly said that this is expected to be a one-off, that the Fed wants to manage that one-off in a way that doesn't spill over into lasting inflation expectations. And so with that in mind, the Fed stayed its hand. The majority of the committee opted to hold pat. And the language that Powell then offered, speaking about this elevated uncertainty, seemed to suggest to the markets that even seeing a pair of rate cuts this year, which the Fed itself projected back in June, might be suspect. In fact, if we look at what the markets are pricing in now, we can see here that looking into the benchmark Fed funds futures, only 31 basis points are now on the menu for this year, whereas for next year, we are looking at 80. Now, this is a stark contrast with what the Fed itself is saying. They're envisioning only 75 basis points between this year and next, with 50 basis points this year, 25 basis points next year. Obviously, the market has other thoughts. They think the Fed is going to be more restrained this year, but have to do quite a bit of catch up because of that delay. And that next year, we will see at least 3, maybe more cuts, which, of course, the Fed has not endorsed yet, but neither have they updated their forecasting at this meeting. That won't come until September, and the markets clearly didn't like that. Again, taking away this very buoyant response to some of these tech earnings that came out in thin liquidity overnight, which we'll see how the dust settles on as that liquidity comes back in Asia and European hours, never mind what happens when Wall Street reopens for cash, for the cash session. The reaction to the Fed itself was clearly negative. So the markets want these cuts. They're signaling that these cuts are necessary, and they don't like that the Fed seems intent on a dragging out of when they will begin. Now, nevertheless, the Fed is still, for the most part, expected to cut rates in September. The likelihood of a cut is now about 55% in favor of no change, but that's still about half and half, looking at a situation where the cut looks likelier than not once kind of all of the dust settles. We are indeed still looking at 31 basis points and not less. But when we start to look at October, when we start looking at December, it starts to really clearly show up that the markets are suspect that any more than one cut is going to appear. And that's despite signs of economic weakness. Consider this GDP report today for the second quarter that, again, was riven with anomalies from the tariffs. We can see that the first quarter was revised down to a decline of 0.5%. That's a little bit worse than the initial negative reading that was reported. We can likewise see that this consumption number for the first quarter was aggressively clawed back. And now we see that in the first quarter, we had the weakest contribution to overall GDP from consumption since the quarter-long recession that was COVID. Ultimately, GDP was negative for only one quarter, and it was the reference point for these numbers. This is the weakest consumption we've seen since then. And of course, the reason we care so deeply about this, as opposed to what's happening here for imports and investment, which we'll unpick in just a moment, is, of course, consumption is by far the largest contributor to overall economic growth. We can see here 68% of GDP is consumption. Everything else is down here at a less than 20% contribution to the overall story. Now, when we look at then what is happening with these moves, in the first quarter, we clearly saw that a huge surge in imports was a major pull down on growth. The way that the external sector factors into GDPs, we take the difference between exports and imports. And if that's positive, then that, of course, adds to GDP. And if it's negative, it pulls away. Now, we can see exports were almost non-existent as a positive contribution, but imports surging easily dwarfed all of that, and dwarfed likewise where those imports went, which is into this investment component as companies tried to front run incoming tariffs and built up inventories. So in other words, this surge in investment in the first quarter was investment in inventory. Now you can see by the second quarter, imports swung hard the other way. That is to say, they were a pittance of their headwind in the first quarter, and in fact, were actually an addition to GDP, largely because they stopped surging. Whereas inventories actually went the other way. Inventories were actually a diminishing component on GDP because ostensibly the reason that we were able to see imports basically fall away and become a positive contributor largely by falling is that we started to draw down the inventories that we built here. So in other words, the front running of the tariffs, the accumulation of goods in anticipation of things becoming more expensive started to pay off in the sense that companies started to pull from those inventories to be able to sell things to consumers without fully passing on the costs of tariffs. And we've seen that, of course, already in the PPI numbers, in seeing that companies are eating tariff costs at the front end of the supply chain once it arrives in the U.S., because make no mistake, it is U.S. companies that pay these tariffs. And when they do, they have attempted not to destroy demand downwind on the supply chain by passing the full cost down to wholesalers at the end of that supply chain, and then ultimately to consumers. And the way they've been able to do that is draw down the inventories that they accumulated in the first quarter for goods that were bought at a pre-tariff surge kind of a rate. Now, encouragingly, consumption rebounded just a little bit, but nevertheless, the overall story for consumption is clearly that it is diminishing. This, never mind this quarter here, which was obviously particularly bad, this number was actually the weakest consumption contribution that we'd seen since the second quarter of 2023. So this was the worst since COVID. This was the weakest in 2 years, but for the prior number. And so consumption here remains exceedingly weak. And if we actually look at the year-on-year growth in each component, we can see here that the consumption component has been steadily slowing, and in fact continued to slow from the first quarter into the second. The reason you don't see the investment component here, the green bar, is because net investment didn't happen in the second quarter. Investment didn't make any positive contribution to growth. It was basically close to zero. Because once you got around to all of the tariff shenanigans getting factored out of the equation, the pull from inventories coupled with the pittance of investment that was there positive on net outside of that left essentially a goose egg. Government spending continued to inch down. We can see exports were slower than they've been, really going back to perhaps here. And really the major change was imports, having surged aggressively, as we've just discussed, slowed down to almost nothing. And so what we're left with is a GDP report that suggests that the front running of tariffs has run its course. Now we are starting to actually run down those inventories, and it's only a matter of time before they have to be restocked at much more expensive cost, because of course now we're going to have to rebuy into those inventories with anywhere between 10 to 15 to more percent of a tariff. If we look at the kinds of deals that have been agreed with the major trading partners. And what we find, likewise, is that consumption, the biggest contributor, as we just saw, is flagging. And that, of course, is exactly the kind of thing that the markets appeared to be worried about in the first half of the year, as we've talked about extensively here, once we strip away all of the noise. If we take a look at what happened in the first half of the year, stocks, of course, rose, but they rose much less than the US dollar fell. So, factoring out the very flattering impact on US stock performance from an absolutely sinking US dollar, because of course US markets are priced in dollar terms, we end up with stock markets that were essentially anemic at best, down on net in any other major currency but the dollar. That yields, for all of the concern about the future of the dollar in global commerce, around the change in tariff policy, that yields actually, even at the longer term, declined. That is to say, the market had absolutely no problems buying long-term US debt, and that front-end yields fell even more around this building expectation for rate cuts. That crude oil fell despite escalating tensions and indeed a shooting contest directly, first between Israel and Iran and then the US and Iran. And all of this, of course, coming together to suggest that what we're looking at is a situation where stocks barely cleared historic averages. In the orange bars here is the 6-month performance average over a 25-year period, 7 years in the case of Bitcoin, because it's not been around for that long to really make the averages make sense. But Bitcoin aside, we can see we saw record-setting swings in U.S. rates, in the dollar, in oil, and stock markets barely managed to eke out paper gains. Paper gains, of course, because once you factor out the impact of the dollar, stocks were actually down. And so when you look at all of this together, you immediately get a sense that it isn't a world-ending dissolution of the US dollar and US Treasury bond situation that the markets were concerned about. It isn't some sort of geopolitical crisis. It's an economic growth risk. And when we look at these GDP numbers, we start to see the makings of that risk. As the most important component of growth, consumption, looks the weakest it's looked in, at best, a 2-year period. And if we look at these 2 quarters together, these were some of the worst back-to-back quarters for consumption in, let's say, at least 5 years. And that perhaps explains why the markets so much expect that the Fed is going to have to cut rates more aggressively next year, and why they were so disappointed with the signaling that they got today. And so while tech earnings overnight certainly are a flattering thing for stock market tracking futures contracts for now, the overall story here appears to be growth negative and concerned that rates aren't catching up, with all of its follow-on implications in dollar strength and in a weak footing for risk assets more generally. And that is Macro Money for today. As ever, we are here Monday through Thursday, back now to live right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Back with Chris Mondays and Fridays for Futures Power Hour in a special session today with Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money is back in full force tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, of course, Dan Cecilia. Dan, how you doing?
Doing awesome. ETH 10 years.
Yeah.
Anniversaries today. If any of you don't know, ETH was launched this date in 2015. Went live in the public. So, yeah, we're enjoying that.
Were you part of the initial ICO?
No.
Were you that early?
No, I was not that early. I don't even consider myself that early in any of this, but hey, we're still here.
Real quick, what's crazy about this, and I think everybody can find this on either the Tasty Crypto YouTube channel or maybe it's on the Tasty Live channel, somewhere on the internet. But there is an early interview with Tom Sosnoff and Vitalik Buterin, and it maybe predates the ICO itself, where I think like even Vitalik is like trying to get Tom, not trying to get him to invest, but saying, hey, you could invest at the time or that early. That's crazy to me, but it's out there if anybody wants to watch that.
I had like a brief conversation with I think Tony about that, and I was like, so what did you guys think? He was just like, why would we need that? And I'm like, yeah, I guess.
Yeah.
I probably would have.
I mean, in hindsight, it's perfect vision, but like,
at the time, you're like, this is the craziest thing I've ever heard.
Exactly. Right. Yeah. Amazing. Dan, before we get started though, you're on the internet.
I am on the internet.
Where can people find you on the internet?
You can find me on Twitter. My handles, I'll drop it here. It's
put it in the chat.
Truth.
What up, chat?
Dan C.
There you go. Follow Dan on Twitter for some alpha. I think you usually drop some truth bombs, some good alpha. I like reading your thoughts on there.
I definitely will retweet a lot of things that I find interesting. I use Twitter to do all my research. That's where I find all my crypto research.
Yeah.
That's where I'm early. I'm not a conspiracy theorist, despite the name Truth. I'm not a conspiracy theorist. I couldn't get Dan C, so I put the word truth in front of it. So you can follow me there. You can DM me. I'll answer your questions. I'll interact with you. But yeah, that's where I'm on the internet.
Hell yeah. And anyone else that's on the internet, I suppose you have to be if you're watching this, get over to YouTube, pop out the chat, type some crazy shit in the chat. Tell us what's up. We got Emmett here, Katana, Andrew Cortado, what's going on, Lone Sophos. Dan's even in the chat. You can interact with him live right here while we do this thing. But Dan, let's jump right into it. You mentioned 10-year anniversary for ETH. ETH's been hot right now, up over 100% in the last 3 months, though, believe it or not, at least for now, underperforming Bitcoin still on a relative basis. Where do you want to go? You want to jump into price action? You want to talk about some of what's behind this recent move? You want to talk about something other than ETH? I don't know. Where are you at?
I think we should take a look at some of the performance real quick, and then we'll get into. I think we just get into all about ETH. Like I really do think we should cover the 10-year anniversary a little bit, some of what's driving ETH's run up, and then I put together a slide for you to go over the crypto treasury companies. I know everyone in the chat loves that.
Okay.
So I want to go over those and give them a chance to take a look at some of this stuff.
Beautiful. Well, really quickly, let's just take a look at a performance update. Maybe a little stale here. This is from 6:30 this morning. Put this in the Tasty Crypto email newsletter. Goes out twice a week. Wednesday morning market update most of the time. And Saturday morning all the time. So if you're not on that list, get over to tastycrypto.com, enter your email address, and you'll get the newsletter. Put a lot of our thoughts in there, trade ideas. Dan's got his lock of the week or pick of the week every week, so you can read that in there as well. But from this morning, came in, and I think we're around these levels right now, but about 118 on Bitcoin. It's just been trading sideways here. We're a little bit lower. ETH, pretty much the same price, 37.55. Solana has kind of pulled back to the low end of the range. And I think the general theme that you're seeing here as we flip through is while you're in a bullish market environment, you're getting that pullback you probably would expect after just the ripper we had at the beginning of July. Like 2 weeks, just everybody felt great, new all-time high in Bitcoin. Inevitably, you get a little bit overbought conditions and you get that pullback. I think it presents an opportunity. What do you think in terms of just double-digit price action to the downside here in some things, but everything taking a breather? How do you feel about it?
Yeah, I kind of echo that sentiment, right? We've had such a bullish July, kind of manic July here. ETH is up a ton as far relatively still down on the year, which is kind of crazy versus Bitcoin. But I think we've just exhausted this run a little bit and we'll see a pullback. I think historically, not that crypto moves in the same way, but historically, August is always kind of we take a breather.
Gonna be quiet.
Summer. I guess if you want me to give sort of a range of what I'm looking at for ETH, I'm looking for it to pull back around 3,400.
Okay.
3,500 is where I think this pullback comes. Some of the stuff we look at on the chart and some of the technicals we follow, I think is showing that we're kind of slowing on that run up. Some of the majors, Sol maybe pulling back to 150, 140, and then Bitcoin, could get back down around 110 if we're just looking at some of this. So I have, I'm not really necessarily buying a lot right here. I'm kind of waiting to see what happens over the next couple weeks. Fed announcement came out today.
Yeah, no change to rates.
No change,
which was expected.
Yeah. So I would just look for this run up that we had over the last month that kind of it's exhausted itself and we'll see a little bit of a pullback.
Yeah, that's the way that I'm trading it as well. I'm just quick check of the S&P futures right now, up 0.5%. So yeah, maybe a little bit of intraday kind of swings there, but not a lot of volatility. That remains the theme, whether that's when you look at the VIX here, which I think I've got, let me see. I've got the VIX at 15. Probably could go lower here if we get a quiet August, though there can be some surprises at times. Looking at volatility in crypto, Bitcoin implied vol at 37% is back near its yearly low, pretty much at an IV rank of 0, as low as it's been over the last year. ETH trending lower, though implied vol is almost double what we see when we look at Bitcoin. Still a premium in here, realized is lower than implied, so you get that premium. But when you look at those levels, based off of these implied volatility, I think kind of lining up with what you mentioned too, you could probabilistically see ETH down to 3,400, Bitcoin around 110 there. Here, the rest that we track, Solana hasn't moved more than $15, it seems, in some time, at least in terms of the expected move. But that's the way that I would trade it. You got to kind of be patient. Don't force things. It feels like, it's never going to get back down to that low end of the range, and then it does, and sometimes pretty quickly. I, again, think those are opportunities, at least in this market environment. I think the macro backdrop, too, still supports it. Liquidity perspective or profile picture, whatever you want to call it, supports it as well. So quick look at what's going on in the market, and that dip, which I think is short-term, is underway. I guess elsewhere, Dan, let's talk about ETH a little bit here. A theme that we've seen over the last few months, and it's really starting to catch fire, is companies going out, raising capital, some new companies even starting, going public via SPAC in some cases, but companies going out, raising capital for the purpose of buying crypto.
Yeah.
I think on the surface, people are like, what? That's got to be a bad sign, right? How do you think about that? Because it's really starting to pick up. And here you can see exactly what we're talking about. This is a graph depicting Ethereum crypto treasury companies and their aggregate holdings, which have completely exploded in really the last month and a half.
Yeah, so I think that this is kind of a bunch of people tailing what Saylor did with MicroStrategy and
with ETH this time.
With ETH this time, where they're able to kind of go out and, I don't know all the details, but they're able to go out and they're able to sort of buy into these publicly traded companies, issue more shares, use the money raised from the issuance of shares, go out and buy ETH, and hold it on the balance sheet of these companies. And basically it's a easily accessible vehicle for the public to buy and get exposure of for Ethereum. So, we started seeing this kind of come into the public view back in early June. And you can see.
Yeah, I've got actually, this is a headline from the Wall Street Journal about 5 days ago, but it's referencing the hottest business strategy this summer is buying crypto, of course. Since June 1st, 98 companies have announced plans to raise over $43 billion to buy Bitcoin and other cryptocurrencies. I've got to imagine a big chunk of that is strategy.
Yeah.
And we are looking at both Bitcoin and others. But just to put things in perspective, $43 billion has been raised for the purpose of buying crypto since June 1st.
Yeah, and if you go to the next slide, I have a comparison of some of the biggest ETH treasury companies compared to just ETH spot. And you can see here, one of the things that you want to take a look at is this MNAV, which is multiple of NAV, which is kind of how some of these traders are playing it, where is there a premium of, is it trading at a premium of tokens, right? So that's what that MNAV is showing. But yeah, I mean, amount raised, SBET, 279 million to go out and buy ETH, Game, 80 million, Bitminer, which is Tom Lee's company, 268 million. And then this BTBT, which is like Bit Technologies or something, 402 million.
Okay, and that's just comparing. So when you're looking at that, the multiple of the net asset value, or that premium there, you're looking at net asset value. Let's take BTBT at the bottom there. Net asset value of 457 million, market cap, double that, 916.
Yeah, exactly.
Got it. Okay.
Yeah. So yeah, I think that's kind of been this trend, and you've seen that.
Do you think it continues?
I mean, I think where we're going to get to is they're going to start with Bitcoin, MicroStrategy, you go to ETH, and now you're going to see these ones that raise for like altcoins, and you're already seeing it, right? Solana, UpXE, UPXY or UPXI is one going to buy Solana. I saw one for Sui.
BitTensor, there's a couple maybe now.
Yeah. So you're seeing like these like altcoin ones happen, and I don't know if that tracks as well, right? Like I don't know. So you go further out on the risk curve here, but I think it'll continue. The other thing is we got to take a look at the flows of Ethereum ETFs because.
Oh yeah, let's jump to that really quickly.
Because I think.
Remember when ETH was dead?
Yes, exactly. Like, remember for the first year when these ETH ETFs launched, they were just like, "There's just no appetite for this. It's dead. It's not dead. This is just how the cycle
goes." Like it's going to be a different cycle this time, or it would only be Bitcoin. Which, to that point, Bitcoin has certainly outperformed to date.
Right.
But I still think we're 1 year or so post halving in the cycle. It might be early, but the narrative was, different cycle this time. It'll just be Bitcoin sucking up all the flows and everything else is dead.
Right. Exactly. So that seems to have been proven wrong. I don't know. In past cycles, this always happens, right? Everyone piles into Bitcoin. Bitcoin kind of takes off. It outperforms, and then people rotate into ETH and other altcoins. That's how we get this rotation, right? People get rich on chain, people get rich in crypto, and they move to more crypto. They don't necessarily take it and move it back out to fiat. So that's this rotation you're seeing. And with the spot ETFs, you can kind of track that. Spot Ethereum ETFs, you can kind of track that. So we've had some of the largest record inflows for ETH ETFs over the last couple of weeks. So I think that's what that graph on the right is showing there.
Yeah, the last data point I saw earlier in the week was something like 11-ish billion, a little bit over 11 billion in ETF inflows into Bitcoin and ETH combined for the month of July.
Right.
It's like blows it out of the water.
Right.
Absolute record. And big, like you mentioned, big inflows here. And you can see trading volumes starting to pick up as well in ETH ETFs.
And how do you look at those inflows? Is that like demand for ETH? Is ETH being locked up? Like that's kind of where I get confused is, okay, we got all these inflows. Sure. Like maybe it's buying ETH, but is it being staked? Is it being taken, is the supply going down or?
So at this point, I don't think that any of at least the ETFs that are listed here on U.S. exchanges can stake their ETH. That could be a catalyst where you could see an impact on some of the supply. But I just think of it, as capital flows into the fund, right? You're going to have a net inflow or outflow, and it's going to kind of ebb and flow, I suppose. But if you get consistent inflows into these funds that go out and then buy ETH, that's demand for long-term investment or short-term speculation, whatever it might be. But that should have an impact on the price, right? We're not going to be able to look at that and say, oh, for the most part, if we see this inflow, we're going to get this ETH price. Not necessarily. But when you have a massive wave of demand against the supply, and ETH can be disinflationary in terms of its supply dynamic or inflationary at times, there is an infinite amount in a sense versus a finite amount with a supply cap like Bitcoin. But if demand overwhelms supply, you're going to naturally get higher prices. If we jump to this next slide, I want to talk through that a little bit more. So let me actually go back one. 98 companies, 40-some billion buying crypto. This is just ETH. But just look at the rise here in token holdings over the last month and a half, and we can see what the price has done as well. When we compare this to Ethereum supply, so you've got all these companies that have come out and they've said, look, we're going to buy 50 million, 100 million, $1 billion worth of ETH, whatever it might be. It starts to really stack up. You can compare that to the supply growth of Ethereum via validator rewards. And we know there's a burn mechanism, and we don't have to get into the technicals there. But if we just look at supply growth of less than 1% per year, and this is based on the past 30 days, and it's just annualizing it from that rate. And this is from ultrasound.money if anybody wants to check it out on their own at another point. But we've got issuance running right now at about 3 billion ETH per year.
US dollars.
In terms of US dollars, $3 billion worth of ETH, sorry. If we see 10 billion, 20 billion, and I'm just making up like massive arbitrary numbers here, but if that starts to come in from a flow perspective, all kind of within the same time frame, I mean, I would bet on the price going up.
Right.
Does that mean it goes to 4, 5, 6? Maybe. Doesn't mean it goes to 100,000. We're not calling for that. But this is just kind of the setup that we have right now. And a couple of months ago, you saw a headline here, a headline there of this company is raising 100 million to buy a little bit of crypto. They're mostly in Bitcoin. Then you started to see some other tokens. And you've consistently seen this now around ETH. And I would imagine that it slows down at some point. But there's significant demand in addition to everybody that's building on this. And, oh, by the way, JP Morgan Chase and Coinbase just inked a deal.
Right.
I mean, there's a lot happening that I think pushes this a lot higher, and it's right to focus on ETH at this point.
Yeah, I think so too. I mean, where are all the applications being built? DeFi applications, some of the rails, like it is ETH. Obviously, there's other use cases for other chains, and we oftentimes trade them too. But I think to your point about the setup, like the supply dynamics match what you're talking about, or kind of support what you're talking about. You have all these public treasury companies buying up ETH. We're getting that rotation, that cycle rotation from like Bitcoin into ETH and probably other altcoins. Coinbase and all these companies are, building out infrastructure on it. It just kind of makes sense, I think, that this is sort of where we're at.
Yeah, I think there's a high probability we go up here in the next 6 to 12 months. I mean, that's the way that I'm playing it. You want to sell at some point, clearly. Timing can be everything in these markets. I'm trying to find an opportunity to maybe buy it slightly lower. 35, you had mentioned 3,400 here. So if we get that dip, we'll be active on the follow page. But one thing I want to take a look at, and Nick Batista mentioned this on Options Trading Concepts Live on Monday. We do the crypto version of the show. But he talked about the vol, and I think you had pointed this out to me, maybe it was today or yesterday, but the volatility in these SBET options at a time where, and I'm sure you're going to see this for others that have options, and we do have an earnings announcement upcoming on the 13th for this one, but the implied vol here on the upside in those call options is pretty wild versus kind of the lower implies that we're seeing on the spot ETFs themselves. And I think that also reflects the MNAV that you pointed out, where these vehicles themselves are trading at a premium to the net asset value.
Right.
Because people are looking at this as, a short-term speculative vehicle.
Right.
At least I think that's what that's signaling. Presumably over a long period of time, we see that come down a little bit. And the value or the price reflects the actual net asset value.
Right. Yeah. I again, like I get this secondhand from some of the trading groups I'm in, but a lot of what they're looking at is this MNAV, this kind of like premium to net asset value metric. And I guess trading that, if we're looking at the implied vol on some of these options.
This is wild, man.
Yeah. Like you're looking, I guess, August 15th, if you want to pull up on SBET. Yeah. August 15th, the implied vol at the money, 145.
Yep.
145. And then if you go to the ETH ETF, because that's what you're comparing, right? August 15th, which you have positions on in this, huh?
Yeah, I do. I've got some calls that I had owned earlier, have recently sold some calls against them. Maybe even look to buy those back. Don't have too much time here, but yeah, I've been pretty active at times in some of the upside calls here. But vol is not as cheap as it was. I would argue it's still kind of cheap, but a little bit higher underlying price. I think we're looking at a $19 price versus $28 price. But to your point, 66% vol here. The other thing that stands out to me, if we go back to SBET, look at how you do have the earnings announcement. But does it double off of that? I mean, look at the $19 underlying, and you're still getting about, let's call it 50 cents to go out there to the 38 strike. Or if we just come in, I mean, you can see the 1 and 2 standard deviation moves here. You're still getting paid $1 to go another 10 points higher here to 29. That's a 200% implied vol on a per strike basis. You can buy the underlying for $19.56 and sell a call option against it at those levels.
Yeah.
And hedge a good chunk of your downside here too, if you wanted to buy downside puts, but I don't know why you would, right? When
that's actually a good trade.
When you should go out there and buy those. But yeah, you can do stuff like that in here. I mean, there's just these are kind of arguably pretty rich options on the upside here.
I think so, right? You just said it, like go out, buy the underlying, sell 2 standard deviations above. That's pretty good.
Yeah, that would be a huge upside move, which is what you clearly want if you're long the underlying. So there's a lot of trade opportunities out here now at this stage in the cycle, I suppose, or given what we're seeing in the market. You have the delta move in ETH, and that happened very rapidly at the beginning of the month. I think we go higher. But this is now becoming a bigger part of the narrative, and we're kind of on the other end of, ETH is dead.
Right. Yeah, I might actually take a look at this when the market opens tomorrow because I've been trying to figure out how to play some of these ETH treasury companies. I mean, I've been looking at them as just like, okay, is this bullish for ETH, spot ETH? Because that's what I do is I trade a lot.
Yeah. I think and I think the answer to that is yes, but, at least for now.
But for like actually, I guess you would say profitable or opportunities in the actual options on these companies. I think what you just said, very simple, buy the underlying, sell this massive premium to upside or even just, try and sell, sell the premium.
Yeah.
Right.
And I think on the other side of that, and what Nick had mentioned on the show too, if anybody wants to go back to that, you look at maybe opportunities to buy low vol in the spot ETFs versus selling vol in some of these vehicles that are trading at a premium when we look at it from the MNAV or MNAV.
Gotcha. Okay.
But I think just the fact that this is it's not often that you see, don't get me wrong, it could go down, but and again, the market environment we're in, at least for now, seems to be pretty bullish. It's not often that you just see something where it's like $19 stock price and the upside calls are trading at like a 200% implied vol with 2 weeks to go. There is an earnings announcement, but even if you went outside of that a little bit here, which you're going to have premium to an extent in there, but you're still close to that 200% vol.
September 19th, 1 standard deviation move, you're still looking at 168 implied vol.
Right. I mean, and we're looking at an at the money vol of 141 in this 51-day September expiration versus, if we go back to the ETH ETF and we look at the same expiration at the money vol, I mean, it's pretty much double that.
Right. And then what is spot ETH? You said it's implied vol 65%.
Yeah, and that's coming from, we look at the Volmex data. We've had those guys on the show. We look at the Deribit data, but the implied 30-day annualized is, right now I had it, or this morning I had it 65%. You do have to look at that against the realized, though, realized at 54. So you have a premium in there, right? That's the other kind of wild thing. We're looking at IV ranks in Bitcoin at the lows, implied at 37%, probably goes lower. We're over here talking about, get long call options. They're cheap. They can always get cheaper.
Right.
See if they go lower into August, or if we get some movement out of this range. But you got a low IV at 37%, but your realized is still 25. There's almost a 50% premium in there.
Right. That's kind of
so. You've been, even though this vol has been low, you've really been getting paid to just sell options in IBIT.
Right. That's what you've been doing that wheel strategy.
As realized continues to go lower. No, I stopped for a second just because we were at these really low levels of volatility. Figured, all right, it's going to pop at some point.
Right.
And there is a decent capital requirement there versus where I thought there might be some other opportunities. But if it pops again, I'll get back into that.
Yeah.
We've also had in a market environment where you haven't had much of a pullback to sell put options into that have gotten a little bit juicier on any kind of delta move. It's just been sideways.
Right.
But Dan, that's going to do it for our show. Thanks for coming on with me as always, and talking about ETH, maybe pumping our bags a little bit.
Yeah.
Full disclosure, we own some ETH.
We do own some ETH, yeah.
We hope it goes higher.
We hope you own some ETH too.
Yeah, I'm trying to buy a little bit here at 35 if we get it. And I think you could see 4. You could probably push higher than that. We've talked a little bit at times about the ETH BTC ratio. Can you get back to a 10th against Bitcoin? I think you can.
Yeah.
And I think we could see some crazy stuff happen. If you do see that, I'm also going to try to sell into it and take some money off the table if you get a $6,000, $7,000 or more ETH price. I don't think that's crazy. It might have sounded crazy at 1.5, but we've been at, I think the all-time high in ETH was like 5.
Yeah.
Right. And that was before there were all these publicly traded companies that were buying billions of dollars of it.
And one last point on that.
It's crazy to say that now, man.
And I didn't hit this in the chart or the table when we showed it, but just to put this in perspective, in 2015, when this launched, when ETH ICO'd, they raised $18 million from whatever. They sold 5,000 ETH and raised like $18 million for the ICO. And now we have we have 98 publicly traded companies buying up billions of dollars worth.
ETH's market cap is $450 billion.
Yeah.
That's great.
So just to put that in perspective, maybe it is worth it to just hold and lose your account login and come back in 10 years.
Yeah, buy and hold long term has certainly been the best crypto strategy, though. Man, this is a tough market to just stay calm.
Yeah, exactly.
Awesome. Well, Dan, thanks again. That's going to do it for this week on the Tasty Crypto Show. If you are not on the email list and you want more crypto, crypto content from us. If you want more crypto, you can get that at Tasty Trade. Yeah. If you want more crypto content, sign up for the Tasty Crypto newsletter, tastycrypto.com. You'll see the email sign up there. But that's going to do it for our show. We'll be back next week on Monday. Until then, I'm Ryan.
I'm Dan.
Peace.